Good to be back. It's coming back to a much warmer,
Yes.
much more humid
And
Mumbai.
what about the AQI?
Well, I don't know about the AQI reading here, but where I was, take a wild guess what it was.
I know where you were. You were in London.
And the AQI, by the way, was 1. It's something to aspire to. I felt that the air was a little too clean.
Too clean.
Not used to that. Anyway, let's talk about what this show is all about. And this, by the way, of course, is to get you answers to all of your stock-related questions. You can call us on the number at the bottom of the screen, or you can send us a message on the number at the top of the screen. We've both got our laptops open and we've got WhatsApp accessible to the both of us. To answer all of your questions, we've got Mr. G. Chokalingam, who's the founder and managing director of Economics Research, and we've got Kush Bora, the founder of kushbora.com, who I'm sure has got something to say about too clean air. I'm going to give him the opportunity in just a bit. But before we do, let me just very quickly take you through what the markets are doing right now. And about 1/3% for the benchmark Nifty 50. We've more or less held in that range. Not the biggest gains for the benchmark, but remember, we've gained for 9 out of the 10 last sessions for the benchmark Nifty 50, and we're trading above 25,400. The broader markets, let's pull those up and see where they are at right now, because in the recent past, they've not been outperforming. They've actually more or less kept pace or underperformed the benchmark Nifty 50, and today seems to be a case of just about keeping up with the benchmark. 0.25% gains for both the small cap as well as the mid cap index, and I would hazard a guess to say that the breadth continues to be supportive, but there may not be too much of a gap. All right, so there you go. It's a decent spread between the advances and declines. The Nifty IT is really the one that you should focus on today, but it's given up some of the gains from early on in the session. It's still trading with gains of about 1%, and the reason is fairly obvious. You had a cut by the US Federal Reserve yesterday overnight, and that means that it's positive for US markets as a whole, or US companies, and that might extend to the IT companies as well. By the way, we've got our first caller of the day. We've got Manav, who's calling us from Gurugram. Manav, very good morning to you. Thanks so much for calling us. How can we help you today?
Yeah, hello, hi, good morning everyone. Good morning to experts as well. Yeah, I have a query on Amara Raja.
Okay.
So I've been holding 25 odd shares since like almost for the past 9 to 10 months at the rate of 11.80 and an average price per share.
Right.
So the stock was trading about 950, less than 1,000 for quite some time. So I've been noticing like it has been moving above rupees 1,000 mark for the last 13, 14 odd sessions.
Right.
So I wanted to inquire. I can hold it for another year on period. So just wanted to inquire, like, will it be a good time to add more, or should I hold on to it?
Got it. I got your question. So let me toss it over to Kush. Kush, what's the opinion on Amara Raja batteries?
Good morning, Alex.
Good morning.
Welcome back. I'm sure your lungs aren't missing all the exercise anymore that they were about a week or so ago, right? Or a couple of days ago.
Yeah, I mean, I'm perfectly fine. I like Bombay. I like Mumbai.
I'm sure. And like I said, your lungs aren't missing the workout either, right? That they get here. AQI 1, they perhaps had a difficulty adjusting to that clean air. But welcome back. Good to have you back, Alex.
Good to be back.
Amara Raja, he's right. He's right when he says that the stock has been holding above the 1,000 mark for some time. My concern is the momentum that's not building on. The bump that you're seeing in the stock price from those 930, 940 odd levels is more in line with markets, nothing exceptional, nothing to write home about. In fact, if you dial the clock back about 7-8 months, the recent highs that the stock has made have been in the territory of 1,050 to 1,090. So as far as the question of adding further goes, I would suggest a no, not because I'm averse to averaging. It's just that, right now the momentum isn't enough to suggest a fresh buy. But yes, with the kind of build-up that the stock has seen, you could continue to hold. I would suggest a positional stop near the 990 mark. That's a good support zone. But as the stock moves higher, closer to his buy price, I think it's a good idea to exit. It's going through a long phase of consolidation. A breakout could take it to about 1100, 1150 levels, where his buy price would be achieved, and he could exit around those levels.
We've got our next question from Mr. K. Ghosh, who's writing us from Kolkata, asking about BSE Limited. He's accumulated 30 odd shares at an average price of 2504 over the last 3 months and wants to know from a longer term view, can he continue to hold for another 2 years or not? Mr. Chokalingam, hi. A very good morning to you. Your view about BSE?
Yeah, good morning. I would give a sell call. I am very firm that the stock can correct at least 15-20%, if not more, for a couple of reasons. One, the regulators are concerned about people losing money in the F&O. I am expecting a lot more restriction on F&O volume. And BSE has benefited in the last 2-3 years, largely in F&O business. I am expecting that to come under pressure. And second, the exchanges are slowly becoming universal in nature. We already seen NCDX proposing to get into equity F&O. Metropolitan Exchange also getting into this segment. I would not be surprised a few more players, pure play, even commodity exchange people can, firms can get into stock exchange. So therefore, I would maintain a strong sell. One can consider only the stock falls at least 15-20% from the current level.
Okay. All right. So that's the view on BSE. The next question we're taking is on IDBI Bank, and this is a long-term view that is being sought from Jay, who's writing in from Muscat. I'll come to you, Mr. Chokalingam, again on this one. He's already purchased 10,000 shares at a price of 101, and so he's incurring a loss purely on the back of the large quantum that he has bought, because the stock price is currently 93. What are the prospects for the long term?
Yeah, certainly. I have studied IDBI. Slightly valuation is stretched, but the parameters are very good in terms of the quality of assets, improvement over the years. So I would suggest hold, particularly this kind of banks backed by a great institution have excellent future, I believe. So it's a good to hold. In case stock falls 5-10%, one can add.
Okay, all right. We've got our next caller. Rakesh is calling us from New Delhi. Rakesh, hi, a very good morning to you. How can we help you today?
Yeah, good morning, ma'am. Want your prospect on ICICI Lombard, as I have 150 shares at the rate of 1,955.
Okay. And
so the average, I am looking for a long term.
Long-term view. Okay, Rakesh, I got your query. I'll take this up with Mr. Chokalingam. Mr. Chokalingam, your view on ICICI Lombard?
One can hold it. Long-term outlook looks really very promising. Over a longer period, the bank company also has been doing quite well. So I would give a hold recommendation. In case it corrects, one can certainly accumulate.
Okay. All right. So that's the view on Axis Bank. Let's take the next one, Venkatesh. Okay, ICICI Lombard. All right. So we've got our next question on CDSL, and Venkatesh has got this question. He's bought at levels of 1,390 rupees per share. 40 shares is what he's got. He's looking at a 1-month time horizon. Kush, what's the view on the chart?
Definitely a hold. The stocks actually had a good bump up, but what's interesting is that it's sustaining that bump up today. Also, if you see, for whatever time markets have been open, about a little more than an hour, the stock's actually up on the back of very decent volume. So my suggestion would be to continue holding on to ICICI Lombard. I think on the upside, immediate resistance is coming at about 1660. So you've got some room there as well. As and when that is taken out, you're looking at a 1735 as well. So I think this has got good traction going for it. And on the downside, strong support zones at 1550. So even for an entry at current levels, risk reward is favorable. But since he's already holding it, I would suggest a hold, continue to hold with a stop loss at 15.
You were speaking about CDSL, right?
Yes, CDSL.
Got it. Okay. All right. That's the view on CDSL on the charts. Kishore is calling us from Hyderabad next, and he's got a question on Axis Bank. Kishore, good morning. How can we help you today?
Yeah, hello. I got 150 shares of Axis Bank at 1104.
Okay.
I'm looking for a purely short-term view, and also I want their view on Aavas Financial.
No, one stock is what we'll take, and Axis Bank is what, therefore, we'll be discussing. When you say long-term, how do you define that, Kishore?
No, it's not long-term.
It's short-term. Okay. And how do you define that?
Maybe 2-3 months.
2 to 3 months. All right. So on the charts, bought at levels of 1,104. Kush, I'll come to you on the charts. The stock price is currently 1127, and banks seem to be making a bit of a comeback. Would you say hold for higher levels?
Yes, it's a hold. Let me start with the broad view first. It's a hold right now, and since the stock is above his buying price, as I normally do, I suggest a trailing stop loss at his buying price. So now 1104, 1105, that level should act as his buying price. Also, incidentally, that's the level where the rounding bottom formation breakout has come about 3 sessions ago. So anyway, it's a support zone from a near-term perspective. Now, just a quick word as to what is happening here. We've seen very sharp short covering by FIIs, and banks are a prime beneficiary of that, and hence an extended run. Today will be, I think, the 12th session of consecutive positive gains if that happens. Axis Bank also falls under that beneficiary list. So yes, the momentum could take it higher. Because he's got a position, I would suggest a hold with a stop loss at his buying price. However, as the stock moves higher, close to the 135 and then 1135 and 1150 zone, my suggestion would be to book profits and exit out of Axis.
Okay, book profits and exit out of Axis is the view where charts are concerned. We've got our next question from Atul, who's writing us from Mumbai and asking about HBL Engineering. He's got 550 shares in his portfolio, bought at the levels of 90 rupees, and wants to book profit is what he's saying. But he's asking whether he should wait till December 2025 to book profits, or should he book profits as of now? He needs the fund by December 2025. Kush, your view on the charts?
So first, many congratulations on a stupendous buy and holding it for such a long, not even the time frame, for such a long ride. The stock's actually now a 10-bagger for him. So kudos on that. It's not a bad idea to book it now. The reason being, the stocks had a recent spurt of 6 weeks where it's gone from 650 to almost about 900 levels. Negative divergences on the daily charts, and you're already seeing some sort of profit booking. Also on the weekly setup, it's gone into overheated territories. So yes, you could exit. However, because there is momentum, I would also suggest a strategy which is book partial profits right now and hold the rest with a stop loss around the 825 mark. So if that gets triggered, you're still exiting a decent quantity at the current price. And if the stock moves higher, continue to exit at higher levels. So book partial profit now, hold the rest with 825 trailing stop loss, and keep exiting as the stock moves higher.
Okay, all right. So comprehensive view there on HBL Engine, and congratulations for the acquisition, as Kush said. We've got a next question from Krishna Kumar on a stock that was on a tear yesterday. I wonder what it's doing today. Let's pull up State Bank of India and see what it's doing. I wouldn't be surprised if it's flat, and it indeed is absolutely flat. But the acquisition was made by Krishna Kumar at 850 rupees, which is very close to the current market price. It is a significant quantity, 700 shares, and so he's sitting on gains. He's looking for the long-term view. So, Mr. Choklingam, I'm coming to you on this one. What would you say he should do? Should he hold on, and what are the prospects for State Bank of India?
Definitely one should hold. I would even suggest buy. We have a buy recommendation on State Bank of India. In terms of valuation, it is very attractive. It is trading at around 1.1, 1.2 times price to adjusted book value. And second, which is very attractive compared to many other banks which are trading around at least 2 times large banks. Second, I still believe that there's a lot of unlocking potential. And third, in the recent time, the bank is going a little aggressive in mobilizing money through various debt instruments. And fourth, yes, marginally only it is positive, selling shares in S Bank. The overall profit, even after selling the second tranche of the shares, which is now retained, it can make more than 10,000 crore profit, and that too, there is no need to pay any long-term tax. So this is also a marginally positive development for SBI. So considering all these developments, I would maintain my buy recommendation on State Bank of India.
Okay, all right. We've got our next caller. Shankar is calling us from Chennai. Shankar, hi, a very good morning to you. How can we help you today?
Oh, very good morning. I want to know about VRL Logistics.
Okay.
Just I start buying with 100 shares yesterday only.
Okay.
I want more shares accumulate.
Okay. You want to
So
accumulate?
I want to know about the fundamental and long-term outlook.
Okay, all right. And you want to accumulate more. Is that correct, Shankar?
Yes. I want more. I want buy more. I want.
Okay, all right. I got your question, Shankar. I'll take this up with Mr. Choklingam. Mr. Choklingam, he's just bought it yesterday and wants to accumulate it from a longer term perspective. Do you think more addition makes sense?
Yeah, one can hold. If you look at the last 3-4 years, the growth has been quite impressive. Therefore, yes, one can buy for a long term via logistics.
Okay. Do you want to tell us a little bit about why you're saying that, maybe in a couple of lines, Mr. Choklingam?
No, I just looked at the trend in a fundamental basis. If you look at, from pre-COVID to now, The revenue has, grown from below 2,000 crore to now 2,700 crore closely. The margin also retained at 14 to 15% quite consistently, which is quite good for this kind of business. So, and if you see the profit also, it's nearly, tripled last year. But in March 23, onwards, little inconsistency in the quarterly profit, but then overall annual basis, it has been maintaining the decent profit growth as well. So therefore, one can buy for long term.
Got it. Okay. We've got our next question on BLS International, and this is a technical related question, and a long-term view is being sought. Kumar is writing in from Chennai, and he's asking what the entry price should be and where would you put the stop loss. Kush, what's the view?
I think from a long-term perspective, it's a good idea to buy at the current level also. The reason being that the stock, along with a lot of other small and mid-cap names, has actually been a multi-bagger. If you see early 2021, this was at 20 rupees, and now it's at about 370. So point being that it's had a good run for 4 years, about 3.5, 4 years. Now it's gone into a consolidation phase, and you want to accumulate a stock when it's in an accumulation phase. So, so it's primed for, the next leg of up move. That's exactly what is happening with BLS right now. Off the highs of 520, currently consolidating, you could start accumulating at current levels. I would suggest a positional stop at about 285, 290 zones. That's a strong medium-term support zone for the for BLS International Services. And on the way up, the stock does have a potential to reach to 440 and thereabout the recent swing highs. And by recent, I mean September of 2024, because this is a long-term query being sought, of 525 as well. So you could start accumulating now, keep a stop loss near the 280, 285 zone, and you could continue to hold. So risk reward ratio is fairly favorable.
Okay, all right. So that's with regards to where BLS International stands. We've got our next caller. Surya is calling us from Hyderabad. Surya, hi. A very good morning to you. How can we help you today?
Yeah, how are you?
Very well. How are you?
Yeah, fine. Thank you.
Go ahead and ask your query, Surya.
Yeah. I bought 500 MCX at 8,300.
Okay.
So what should I do? It is coming negative now. So what will be the future? Yesterday some hike is there, but should I hold or book the loss?
Okay, Surya, got your question, and in fact, I'd asked this to Mr. Chokalingam as well. He's sitting on a loss of around 1.4 lakh rupees right now, but the word coming in from SEBI was that they are considering allowing banks, pension funds and FPIs to trade in commodities as well, and this is being taken positive for something like an MCX, and we've seen the rally in the counter yesterday also. Today also we're seeing some up moves coming in the counter. Do you think from a fundamental point of view this will be constructive for something like an MCX, and should he continue to hold to recover some of his losses or maybe even turn them into profits?
Yeah, even post significant correction, it is trading at 62 PE on a trailing basis, slightly stretched, but still one can hold for long term. We all know, the kind of leadership it has in commodity exchange, which is set to grow only along with the investor population in the country. And last 3-year performance has been really phenomenal. And also, as I mentioned earlier, the exchanges are ultimately going to become universal exchange. This is my personal view. I may be wrong. So I believe even commodity exchange companies like MCX can diversify outside commodity exchange. They have got the ability which they already proven in the commodity exchange business. So considering all that, I think the investors will not lose money in the long term. That is a period of above 1 year. So therefore, I would give hold and even buy on any small decline if it happens.
Okay, all right. So that's a view on MCX, up close to 30% this year. We've got our next question on HDFC Bank, and this is coming in from Dubai, and Muhammad is writing in asking about this. He's bought at levels of 976, which is currently where the stock price is, and he's wondering whether to hold, sell or accumulate at this point. He hasn't specified his time frame, but he's speaking about a few brokerage notes. So I'm assuming that he's asking about the fundamentals and looking for a long-term view. Mr. Chokalingam, view on HDFC Bank?
Definitely, it's a hold. It depends upon the investor's risk profile. For a conservative investors, yes. Even for general investors, it's a good, stock to hold because the industry credit growth is now revised to 11 to 12% for current fiscal, which is a positive development for a large bank like HDFC Bank. And valuation also contracted a lot in the last 2 years. However, if somebody wants to make a wealth or significant alpha, I would prefer Bank of Maharashtra to HDFC Bank. We have recommendation coverage on both, but in relative terms, I believe, I may be wrong, that Bank of Maharashtra could probably create more substantial return in the medium to long term. Even that is followed by Central Bank of India, which is available at a discount. I believe Central Bank of India has phenomenally improved its margins, quality of assets, but it's a outlier in terms of commanding a discount to adjusted book value. So these are the two stocks I believe 1 to 3 year time frame can create much more return than HDFC Bank. Otherwise, HDFC Bank is also hold in my research view.
Basically say that you should hold to what you have, and if you're looking for incremental investments, maybe you should consider investing in some of the bank names that you've suggested.
Certainly, yes.
Okay.
And if it is a little risk-taking, they can prefer Bank of Maharashtra to HDFC Bank.
Understood. Okay, all right. Neva from Chennai has got a question on TCS. She's bought at levels of 3,600 rupees and wants to add more at the current level. What are the levels that would be appropriate? And she can hold, she says, for a period of 2 to 3 years. Pretty long time frame, but still she's looking for an entry point. Kush, what do the charts suggest?
Alex, the current price, might itself be a good entry point. Maybe a few points here and there, but since she is looking for a 2-3 year kind of a view, I don't think 30 or 40 rupees here or there would make a great deal of difference. The reason being, the stock's taken a good support at the 3,000 mark, rebounding, holding ground, and gaining some momentum's missing. So doesn't really make sense for a near-term trader. But given her long-term view, it might make a good idea to take it now. And incidentally, it will also be a cost averaging for her since her initial buying price is significantly higher. But this would be a good time to enter into TCS. Positional stop a little under 3,000, maybe 29.75 is a level that you want to keep an eye on. If that's broken, I think this recovery could also fizzle out.
Okay, all right. We've got a next question then from Ashwin, who's writing us from Bengaluru and asking about Nucleus Software. He's bought at the levels of 1435 and got 200 odd shares and wants to know if this is a good time to hold, sell and book his losses. He's sitting on loss of around 75,000 odd rupees. Kush, your view on the charts?
I'm sorry, what's the buying price you mentioned?
1435.
1435. Oh, that's significantly higher. So
Yes.
I'm afraid that right now, despite the kind of recovery that the stock is seeing, the volume action is not as encouraging. There has been a mild recovery. At best, you could see some bump up to about 1100 odd levels from here, but that also is a bit of a stiff resistance. My suggestion, it's not a bad idea to maybe book partial loss right now. As the stock moves up, you could exit some more and switch to, if the view is medium to long term, then something like the TCS that we discussed or Maharashtra Bank, as Mr. Chokalingam was mentioning. These stocks have a far better potential of reaching or rather generating profits and also margin of safety. So Nucleus Software at the current juncture seems to be an exit, and even if you get some sort of a bump up, sell on rise.
Sell on rise, all right, is a view on Nucleus Software. We've got our next question on Mrs. Bector, and this is a question from Jaipur. Mahindra Raj is written in. He says that he's bought at levels of 1,424, incurring a little bit of a loss at this point. Stock is currently trading at 1,378. He's looking for a long-term perspective on the fundamentals, and so, Mr. Chokalingam, I'll come to you on this one. What do you think about Mrs. Bector?
Yeah, valuation is stretched, around 61 PE, but the profit growth is not proportionate to the PE ratio. So therefore, I would just give a hold recommendation because price also corrected a lot. One has to give importance to that. So I would give a hold for, medium to long term and hope to, recover the losses or even make a marginal return on the stock.
All right. With that, viewers, it's time to slip into a very short break, but we'll be right back answering all your queries on the other side. So do stay tuned.
आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड आईपीओ।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड ग्लास, क्लियर ग्लास, बार हो या नियर, सब कुछ दिखे क्लियर।
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड आईपीओ।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Welcome back. You're watching Ask Profit on NDTV Profit. Just a quick reminder, if you're tuning in for the first time, then the ways that you can get in touch with us on your screen. You can message us on the number on the top of the screen, or you can call us on the number at the bottom. And in fact, that's what Venkat has done. Venkat is calling us from Bengaluru. Venkat, very good morning to you. How can we help you today?
Yes, good morning, Alex.
Very good morning.
See, I have 50,000 of corpus. So I have selected 3 stocks. One is Motherson. Another one is Sriram Finance, and another one is Blue Jet.
Okay.
Among these 3, which should I invest for 1 year term period?
Okay, why only 1 year? Is this a trading strategy, or is this just tactical investment that you're making?
Yeah, tactical investment.
Okay. All right, Mr. Chokalingam, you want to weigh in on the names that he's mentioned? Blue Jet, right, Venkat?
Yes, yes.
So Blue Jet, Shriram Finance, and the third one was?
Motherson.
Motherson. All right. So three from very different sectors. What would you pick?
Considering the current market condition, still ongoing tariff war, among these three, I am very comfortable only in Shriram Finance. Its stock has corrected and it is trading at a very attractive price to book value. And that quality of management also excellent. And that is a stock I am very confident. Other two stocks I am not confident at this juncture.
Okay, pull up the year-to-date chart first. Yeah, okay, there you go. This is exactly what I wanted to know because it's actually recovered from the low point of the year, but it's not done particularly well this year. It's not had the best time. Of course, a lot has to be said about the expectations for automotive sales, and that could, in fact, benefit Shriram Finance going forward. So there you go. Venkat, hopefully that answers your question. Sunena's got a question. She's writing in from Bengaluru and asking about Hind Petro, and she's bought at levels of 430 rupees. She's wondering whether to hold on or exit at this point, maybe double down at this point. She says she does not have a time limit on this investment, or if she doesn't have a time limit, she should be calling it an investment. But Kush, what's the view on the charts? It's Hind Petro. It's not HPCL. Let me, so it's a different company from what I can tell.
It's HPCL.
It's HPCL. Okay, Hindustan Petro. Okay.
Yeah. So the stock's seen a bit of a recovery. These stocks never really form, or rather fall very high on my list of, trading bets. Right now, what you're seeing is a strong recovery that is underway, but volumes also are shrinking. But since she said, time limit is not really too much of a concern, I would suggest levels then. 390, that's the 20-day moving average. Keep your stop loss around that mark. On the way up, there are resistances at 421 and about 430 levels, which happens to be a buying price. So close to the buying price, you might want to exit, keep trailing the stop losses higher. So for now, it's a hold because of the recovery that is underway. But 390, that's your stop loss to maintain on this position.
Okay, all right. So that's with regards to where HPCL stands. We've got our next caller. Swapna is calling us from Andhra Pradesh. Swapna, hi. A very good morning to you. How can we help you today?
Hi, very good morning. I want to know about Niva Bupa. I have purchased 1,000 shares at 82.
Okay.
So I want to know whether I should hold for a short-term view.
Okay.
Or should I shift to any other good counter?
Okay. And when you say short-term, Swapna, what's the time period that you're looking at?
Around 1 to 2 months.
1 to 2 months. Okay. Kush, enough data on the charts for Niva Bupa, and if not Niva Bupa, what else is attractive on the charts for the next 2 months?
I would suggest an exit on Niva Bupa. Long consolidation every time it spikes. You see selling pressure coming in, hasn't really done much. However, it's close to the support zone of 79. That's the only saving grace part. With the momentum missing and stock not participating when the markets are rallying, it's not a healthy sign. So it's a very clear exit on Niva Bupa. As far as what to buy goes, I would suggest a couple of names. First is Jaiswal Nico. This is a stock that we've discussed on the channel just early this week. For a second target of 73, that's being hit. But if you see the momentum and the price action, that is very encouraging. So you should continue, or maybe you could actually look at, Jaiswal Nico as a 2 to 3 month play. And the other one is GMDC. This is also a stock that we discussed about a month ago, around 450 odd levels, has had a good run. The last 4 days are seeing some profit booking, some consolidation, but on the back of very thin volumes. So I think a trajectory, the upward trajectory on this one is still very much intact. I would suggest maybe she could split that capital into Jaiswal Nico and GMTC and hold for 1 to 3 months.
Okay, all right. So the next question is on Apollo Microsystems, and this is a question coming from Suman, who's writing in from Kolkata. Suman has bought at a price of 131 rupees per share and asking whether to book profits at this point. Stock is trading well above that. It's a significant upside that Suman has seen. The question to you, Mr. Chokalingam, based on the fundamentals and the current valuation, should money be taken off the table?
Certainly, yes, I believe. It's done phenomenally well in terms of growth in the last 5 years. No doubt about it. But this kind of valuation, I think, is well ahead of what it is likely to achieve next 2 to 3 years. So I would give a sell call on Apollo Micro.
Okay. All right, we've got our next caller from Andhra Pradesh. Swapna is calling us, I believe. Okay, no, we'll come back to Swapna in just a bit. Vijay is asking about Poonawalla FinCorp. And there was news about promoter buying, right, today, and which is why the stock is up and about 12.7% at this point, if I'm not mistaken, at the high point of the day. And we've got Vijay Varfade, who's writing in, and bought at levels of 434. So it's a pretty decent upside that Vijay has seen. He's got 1,600 shares. He's holding for a year or thereabouts. Kush, on the charts, what's the prospects on the upside?
Stock's very close to the life highs. Very, very close to those levels, at the high point of the day today, on the back of very, very big volumes. My suggestion, because he's bought at very low prices compared to the current price, and the stock has a tendency of going sideways and dipping, once it gives you those big moves. My suggestion would be to book partially. He's sitting on very neat profits right now. So take 50% off the table. The 519, 520 level is a resistance.
Right.
Hold the rest with a trailing stop loss at 480.
Okay. All right. We are hearing that Mr. Tuhin Kanta Pandey, the SEBI chairperson, is speaking right now. Let's listen into what he has to say.
The National Highways Infrastructure Trust is a great example. By transferring operational road assets into an InvIT, NHAI freed up capital for new highways, while investors gained access to a portfolio of income-generating assets. At present, SEBI registered 5 REITs and 23 InvITs have mobilized 1.5 trillion rupees over the last 5 years, with an asset under management of rupees 8.7 trillion rupees, that is 8.7 lakh crore, as at the end of FY25. These figures demonstrate the growing scale and acceptance of REITs and InvITs as mainstream investment vehicles. To further strengthen this growth trajectory and promote ease of doing business, SEBI has introduced a series of enabling reforms. Some of the recent measures include expanding the scope of strategic investor for REITs and InvITs to facilitate wider investor participation. 2. Reclassification of REITs as equity for investment by mutual funds. 3. Introduction of SM REITs to make smaller real estate assets more accessible to retail and institutional investors. 4. Mandating investment managers of InvIT and manager of REITs to provide an option to the unit holders to attend the meeting through video conferencing or other audiovisual means for all unit holder meetings. 5. Enabled e-voting option for unit holders to encourage their greater participation in decision-making process. Let me now come to alternative investment funds, AIFs. Beyond REITs and InvITs, another important contributor to infrastructure financing has been the AIFs, which have grown rapidly in recent years. These specialized funds can pool resources from sophisticated investors and direct them into infrastructure projects that need patient capital. Significant growth in AIF investments from 1.1 lakh crore as of March 2019 to 5.7 lakh crore as of June 2025. That's 5 times in 5 years. Along with commitment amount of rupees 14.2 lakh crore, reflects their growing relevance and potential to catalyze sustainable, inclusive economic growth in years to come.
Okay, so real estate investment trusts, that's what the SEBI chair is speaking about, and a lot has been done in the recent past. Incidentally, I intend to speak about it next week, so watch the space for a lot more and how you as an individual retail investor should approach investing in real estate investment trusts or REITs. For now, let's go to another NDTV Profit exclusive, and this on the sidelines of IFQM Symposium 2025, which is ongoing. My colleague Danish caught up with Tata Steel's Managing Director and Chief Executive Officer TV Narendran to speak about the GST revamp and China overhang on the metal space. Listen in.
A lot has happened from the government's end. We are seeing a clear cut in GST rates. How do you look at this development?
I think it's overall very positive for the economy. While it's not directly impacting the steel industry, but indirectly it will certainly help us if the economy picks up further, consumption picks up. It's also good that it's been cut for industry like cement, because that helps bring down construction costs, so which is overall good for the construction industry and good for steel, because steel is used in construction. So I think in many ways, directly or more importantly indirectly, it has a positive impact for us.
So the Indian government is also in talks with the US for a bilateral trade agreement, and also the Indian government is in touch with the EU for a FTA. So how do you look at these developments, and what sort of benefits do you see for the steel sector?
I think for steel, US again was not a direct impact, because India was not really exporting much steel to the US, but a lot of engineering goods go to the US. So I think it's important from that perspective to have a conclusion to the US-India trade talks. As far as Europe is concerned, yes, I think we need to develop alternate markets. I think our dependence on US as a market has been high across sectors. So I think Europe is a 500 million people kind of market. It's collectively, it's a $23 trillion dollar economy, geography as well. So I think it's important for us to close the EU FTA as well as soon as possible.
So the relationship between the Indian government and the Chinese government is also on the path of thaw right now. So with China reopening and maybe with the Chinese industries whenever they'll be allowed to enter the Indian market, do you see that development as a positive step for the steel sector, or our markets could be full of cheap steel from China?
I think steel, for the steel industry, China has always been a concern, because China exports a lot of steel, almost as much steel as India produces, and the reality is that the Chinese steel industry is not profitable at these steel prices. So I think that's a concern. The government has taken steps to give us some comfort with the safeguard duties. So I think the positive story more is about China has done a lot of work on innovation, technology, climate change related areas, AI. So I think it's useful for India and China to look at opportunities to work together in many of these areas. And I think China has moved very fast in some of these areas in the last few years. So I look at it more as a larger opportunity than specifically for the steel sector.
So very lastly, with the government giving a lot of relief in terms of GST, and although steel hasn't been given a direct relief, but with a lot of GST cuts, it is expected that the demand would be picking up in the construction sector and other allied industries. So how are you preparing at Tata Steel for the expected sudden demand?
I think we expect H2 to be better than H1, because seasonally also H2 tends to be better. During the monsoon period, construction activity is on the slower side, and the festival season is a good trigger for consumption growth. So we expect H2 to be better than H1. As far as Tata Steel is concerned, we've just added 5 million tons of capacity, which is ramping up, and I think it's ramping up at the right time.
All right, so that exclusive chat with the Tata Steel Managing Director and Chief Executive Officer should give you some perspective on how he sees the steel sector and also the metal space as a whole, which yesterday was under a tad bit of pressure. Let's pull up the metal index very quickly to see where it is at. Not moving too much, in fact, pretty much flat is what it is. There are a few stocks that are up and about though. Let's talk about the next question, and this is Tata Motors that we're talking about next. And Mitu from Mumbai is seeking a technical view. Bordered levels of 700 has Mitu, and 1,000 shares. Oh, actually she's asking whether it can cross the 1,000 level again, and she's looking for a technical view. Kush, what's the view on the charts?
To can, the answer is yes. When is, I think, $1 billion question, right? So I'll reserve my comments on that. My suggestion would be to hold Tata Motors, just because the risk-reward ratio from a medium to a long-term perspective, and by that I mean 12 to 18 months and out, is extremely attractive. 600, and as I've mentioned a couple of times, is a very strong long-term support zone. So that continues to hold up. The missing part in all of this is the momentum. So if you're playing for momentum, I think it'll be a better idea to switch to M&M and Maruti. But if you wish to continue to hold this for the long term, I think Tata Motors at the current juncture makes a good buy. Yes, continue to hold. Positional stop around the 600, 625 zone.
Technical analysts often crack that joke. Kush, this morning we were talking about it. Nifty 50 at 26,000. It will hit that mark eventually. The question is, will it hit this mark this month itself? Do you have an answer?
Not really. I really hope it touches 26,000 this month. I mean, what's wrong in being optimistic, right?
Yeah, let's be optimistic.
Yes, all right. We've got our next caller. Murthy is calling us from Bengaluru. Murthy, hi, a very good morning to you. How can we help you today?
Good morning, ma'am.
Good morning. Go ahead with your query.
I am holding 200 shares of Copper at 293, ma'am.
Okay.
Long term.
Okay. You want a long-term view on this one? Okay.
Yes, ma'am.
Okay, got your question, Murthy. I'll take this up with Mr. Choklingam. Mr. Choklingam, your view on Hindustan Copper?
See, this is a very peculiar metal stock in the country or perhaps in the world, trading at 56 trailing PE. Generally, metal stocks trade anywhere from 8 to 12. In my view, that's mainly because retail float is very low. So even the long-term outlook for next 2-3 years already in price. So fundamentally, I don't see, but then I may go wrong because retail float is very low and there is also some scope for expansion of the existing mines. So they are considering all that, I would give a hold for long term.
Fair point. I must say, Mr. Choklingam, I quite enjoy my conversations with you. STL Networks is the name of the counter that we're talking about next. It's not the largest, in fact, just about 1,415 crore market capitalization at this point, trading at 29 rupees per share. And we've got Santosh, who's writing in from Chennai, who's asking about this. He's looking for a technical view. Kush, I'm hoping that you do have a view. I think because of the nature of the stock and the fact that it doesn't have too much of a float, it can be volatile. And so therefore 17% upside right now as we speak is what you're seeing intraday. Any view on the charts?
Alex, I suppose it's a recent listing because I don't have data beyond September. I mean, prior to September. So I'm going to have to give them.
Choklingam, it was pointed out by my viewer, Santosh. He says that it is actually a small company, but he said that the recent presentation looked good to him. I wonder if you can just get a snapshot and give us some perspective, if you can at all. Any chance of that?
No, without any bias, mostly in my 3 decades of experience, company presentations are really look good. There is no doubt, but then one has to do their own research. I have not done much research on this, to be fair, but then when I look at FY25 full year number, it has made a 32 crore loss. So I am normally not comfortable with this kind of stocks when it makes a lot of losses and trading at this level.
Okay, that's a fair point. And to be fair, if you have control about the way that you're presenting your financials, you're going to try and present it the best way possible. Do you recall having to discuss any report cards with your parents?
Well, I do. And they've not been very pleasant as well. But here we are. All right. We've got our next question. In fact, we've got our next caller. In fact, Anil is calling us from Jodhpur. Anil, hi. A very good morning to you. How can we help you today?
Good morning to everybody. So I'm holding a GNFC shares of 3,200.
Okay.
And I bought it for 300 rupees each. I would like to know the advice whether I should book the profit now or continue to hold, because at one point it did touch on 600.
Yeah, okay. Anil, first of all, congratulations, because you've bought it at the right levels and sitting on profits of over 6.6 lakh rupees. So kudos to that. I'll take this up with Mr. Choklingam. Mr. Choklingam, GNFC is the counter. He's sitting already on profits of 6.6 lakhs. Do you think he should book some of his profits and maybe invest in some other counter, or should he continue to hold?
See, fundamentally, we have a buy recommendation and it is testing our passion, but I'm extremely bullish on the stock on fundamental basis. A, the free cash is more than 40% of the market cap, and B, the kind of chemicals it makes, most of them are import substitutes. Recently, the government also mentioned a couple of days back that their next focus is on promoting import substitutes to save forex reserves. So GNFC would be a beneficiary. And C, in terms of valuation also, it is very, very attractive. So it may take time, 6 months, 12 months, or even 18 months, but certainly within 2 years, the stock is likely to do phenomenally well from current level because there's a lot of expansion across so many verticals. So all this would play out within 18 months to 24 months, and the stock should do phenomenally well in the next 1 to 2 years. That's my strong faith. So therefore, I would continue to maintain a buy recommendation on GNFC.
GNFC saw a bit of a spurt earlier as well, if I remember correctly, last month. What you saw was a 1 month chart, but I think before that, when the results came through, it did see a pretty big spike. It has lost a little ground since that point though. All right, Karthik is calling us from Bengaluru, asking about Adani Power, I believe. Karthik, very good morning. How can we help you today?
Good morning, Alex.
Please go.
Actually, my question was with regards to a couple of companies out of which I would like the experts to choose which one do I hold for a long term.
Okay.
Can I be able to take that if it's okay with you?
I would prefer that you ask about a single company in the interest of time.
Okay. So actually it is that I need to take out some money. I'm in need of it. So I want to know, I hold Adani Power as well as Aventel, both on which I'm sitting at a profit. So I would just like to know as to which one do I book out my profit and which one would I have to stay invested for the long term.
Okay. Okay. So Mr. Chokalingam, any view on these two counters and which one would you book out of?
So since I am given option these two, I would suggest Aventel to look at to Encash.
Okay. And based on the fundamentals, since Aventel is the call, Kush, do you have a different view first? Second, at what level would you book out on Aventel?
No, a very similar view. Aventel actually at current juncture, not a bad idea to exit. Adani Power on dips continues to take support at 20-day moving average and move up. So medium-term trajectory upwards. So you should continue to hold Adani Power.
Okay. Standard disclaimer, Adani Power is also a part of the Adani group of companies, and so is NDTV Profit. All right, we've got our next question from Vishal, who's writing us from Bengaluru. He's got 210 shares of KEI bought at the levels of 4790. Wants to know as to what should be the course of action for him from here on. Kush, on the charts, by the way, he's sitting on losses of around 1.4 lakh rupees.
Yeah, but the recent moves on this one have been very encouraging. In fact, we had a buy call on KEI Industries targets. Right now it's just gone a little sideways, negative RSI divergences. So maybe some dip could come about to about 4,000, 4,050 odd levels. But on the whole, the structure looks very interesting. The jump up also has been rather sharp. Yes, he's got stuck on the wrong foot in terms of the buy price. But I think if his view is 6 to 12 months, he should continue to hold on to this one. Positional stop on this one comes in at 38.
Okay, it is now time, gentlemen, for the rapid fire round, and this is where we throw as many questions at you as possible over the course of 2 minutes. The first question coming your way, Mr. Chokalingam, Marine Electrical versus KRN Heat. Raj Lakshmi wants to know, she's writing from Chennai, which would you buy for the long term?
I'm sorry, I have not studied both of them.
Okay. Let's move to the next.
All right, Phenolix Pipes is the next one. Sanchit is holding 500 odd shares at an average price of 280. Should he hold or book losses? Kush, your view on the charts?
He could continue to hold, keep a stop loss at about 195.
HAL or BEL? For the long term, Sarjan wants to know, he's got surplus amount to invest in. Mr. Chokalingam, which would you pick?
HAL.
Okay, Joseph is asking the next one on PFC. He's saying he's bought 200 quantities at 485 apiece. Wants to know if he can continue to hold or not. Your view on this, Mr. Chokalingam?
Certainly yes, trading close to one-time book value.
Okay, Azad Engineering is the name of the counter, and Harjeet from Mahali wants to know whether to hold. He's bought levels of 1359. Kush, what's the view?
Yes, continue to hold, keep a stop loss at 1590.
Zydus Wellness is the next one. Nadella is asking this question. He's got about 100 odd shares at 600 levels. Should he continue to hold or book profit? Your view on the charts, Kush?
600 levels. Anyway, I mean, the structure looks stretched right now. Good idea to book profits.
Kush, do you have a view on Onward Technology? I'm not really sure about this one. Satpati wants to know about it. Bought at the price of 117. Would you hold on?
Alex, haven't really tracked it very closely, so I'll give it a miss.
Yeah.
Okay, the next one is Allied Digital. If at all you have a view on this on the charts, Kush, the person has bought it at the levels of 132 a year ago. From a medium-term perspective, what are the charts indicating?
Book 50%, hold the rest with a trailing stop loss at 180.
Mr. Chokalingam, Yes Bank, would you buy or would you stick to Maharashtra Bank and the others that you mentioned?
Certainly First Bank of Maharashtra Bank for very, very long term. Yes Bank also because of Japanese participation in the bank.
Okay, we've taken 36 questions, gentlemen. Thank you so much for joining in. Always a pleasure speaking with both of you. All right, and that brings us to the end of this edition of Ask Profit. We've tried to take as many questions as possible, and if your specific question was not answered, hopefully the ones that we've discussed have benefited you in any case. From Mahima and myself and the team that put the show together, thank you so much for watching. Up next is Know Your Company, and this is NDTV Profit.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Hello and welcome to NDTV Profit. A very good morning to all the viewers you're watching. Know Your Company, that is KYC. I'm Hiral Dadia. what is on our radar today. We have Orient Technologies. Yes, a small cap company, but lots to know about this one, taking into consideration the kind of recent moves the company has made. Now let's understand. Firstly, the impact of high receivables on cash flows, is that a concern right now for them? Moving on, the second aspect that we're going to consider over here is taking the order book into consideration, which stands at around 414 odd crores or little more. Does that mean the FY26 revenue will remain the same? And the potential revenue that the company is looking to see from the security ops center segment from a business side. Moving on, if you have to look at this, security operations center, how quickly can this business clock a 20% margin? Because that's the guidance that the street is working with. And from a 3-year view, what does the top line, margin and recurring revenue tell you from here on if you have to look at Orient Technologies from a growth perspective? What is the kind of export opportunity that Orient Technologies is actually sitting on as well? And if you have to look at the third quarter, what are the factors that will lead to the margin expansion that could come in Q3? These are a few of the questions that we are talking about with regards to where Know Your Company goes and on our Orient Technologies. But let's shift focus to tell you more about the company as well. Firstly, it's an Indian IT company who's into transformation and an infrastructure partner as well. It offers multiple facets like IT, cloud, artificial intelligence, security and digital services. And they mainly focus on recurring as well as annuity services. So it is not a one-time sale. So stickiness with regards to clients becomes absolutely important when you talk about Orient Technologies. They are headquartered in Mumbai. The employee count is around 1,600 employees, and they have a pan-India presence as well. If you talk about their product and solutions, you're talking about IT infrastructure, which comprises of data centers. That is one of the hot topics, and that's one of the reasons as well why we've called the company right now, because one of the brokerage reports did note that there is a 5 times growth that could be expected over there. Servers, end users, devices, as well as networks is what they deal with in terms of IT infrastructure. When you talk about device as a service, which is DaaS, they do give out devices on monthly rentals as well. In terms of cloud and DevOps, they look at management, optimization across AWS and Azure. So this is, Amazon AWS. Moving on, cybersecurity, they're talking about endpoint security, managed security operation centers and threat monitoring as well. In terms of managed services, you're talking about, remote facility management as well as infra managed services as well. And in terms of digital transformation, analytics, artificial intelligence, automation, custom apps comes at play. The new aspects they were looking at is GPU and AI hosting, which is partnered with AWS for India AI mission. So this is what they're looking at. But let's quickly look at the segmental revenue mix as well for the company. Around 60% of the revenues come in from IT infrastructure services versus 40% that comes in from app and IT infra as well. So that's in terms of your FY25 breakup. And your cloud and data, that is actually growing faster. If you look at the next one in terms of the segment, it's a 30% plus compounded growth that you're looking at. ITES, a very stable business that they have on that front. Order book, crucial for visibility for them because their total order book is at around 414 odd crores right now. And they've said that this will be billed over FY26. So that's the key question, that is this what is going to translate into revenues in terms of FY26 as well for the company. And multi-year service contracts is what they look at for public sector, enterprises, and BFSI, cloud and DaaS. So that's everything that you need to know about the company. But let's quickly look at all your rating parameters from here on. From your income statement check to balance sheet, cash flow, return ratios. You're talking also with regards to shareholding patterns, street credentials, street coverage, and the valuation picture and outlook. These are the ones that we will be considering with regards to where Orient Technologies is concerned. But let's dissect the first one. Income statement. Let's pull up that one on the screens and you'll see what's happening with the income statement from a revenue. A 22% compounded growth is what you've seen from a 3-year perspective. And the margins, in fact, have declined. So that is going to be crucial. The profit number has seen a compounded growth of around 15% and EBIT is around 12%. So your EBIT and profitability, the growth is slightly lower as compared to your top line, and hence we've given it a sideways, that is a neutral rating with regards to where income statement goes. Moving on, if you have to look at the same one in terms of the Q1 FY26 performance as well, if we can get that one, because that will give you the sequential and the year-on-year growth. Revenues have seen a decline sequentially, EBIT has gone down, margins have declined, and your profit number has also declined. But year-on-year, a marginal growth that has come in on that front. And if you have to talk about the margin trajectory for the company, from a 9.4% that they were in FY22, it's been declining, and it's come down to 6.2% in the first quarter of FY26, and that is something which is absolutely concerning. So yes, a sideways, that is a neutral rating. In terms of the balance sheet check, let's quickly look at the equity and the cash and bank. If you see in terms of the equity, a strong growth that is coming in from 18 crores to 42 crores over a period of 3 years. The cash has been increasing as well substantially from a 2-digit number of 20 odd crores in FY23. A similar number in terms of FY24, it's actually grown 5 to 6 times to 116 odd crores. So that is one of the key positives. The borrowings have gone down substantially as well. And if you talk about the other equity, that has nearly tripled in 3 years. So hence a thumbs up, because the balance sheet is looking absolutely strong when it comes to Orient Technologies as well. Talking about the cash flow matrix from here on. Now, what is happening over here is, if you see the cash flow, let's quickly look at the operating cash flow. It's actually gone into negative, on the back of which, if you see the profitability, when they've put it, added a 50 crores in FY25, the cash flow from operations to profit, that is a negative number. That's a negative 22%. The net cash flows have actually come in at 95 odd crores. And it's a very no trend line kind of a picture when it comes to cash flows. There is no stability, there is no sustainability, it seems. And that's the reason why a thumbs down coming in with regards to cash flows go. Because one, your operating cash flows is getting into a negative number, into a loss, which is a concerning area when you talk about this matrix, and hence a thumbs down. Let's quickly look at the return ratios as well. Now, return ratios become absolutely important from an investor perspective. And there you go. They actually started at a high of 55. You're looking at 27% now. So there is that stability which probably will start emerging from here on, is what the street is anticipating, and hence a thumbs up, because in terms of your return to capital employed, I mean, a 45 to 41% kind of a number, not very sustainable, but from here on, there could be some bit of sustenance that could be coming in as well. Let's quickly look at the shareholding pattern now. If you talk about promoters, they've remained absolutely stable in terms of their stake. FIs, in fact, have actually gone ahead and reduced stake in the company. DIs have been absolutely absent. The public free float has increased from 21% to 26%. So there is some bit of retail participation that has gone up with regards to where Orient Technologies go, and that's the reason why a thumbs up giving in there. But the promoters have remained absolutely stable. There is no institutional investor which is putting their bets on Orient Technologies. But because the retail participation is high, we've given it a thumbs up, not considering the FIs and DIIs currently on this one. Moving on. The next parameter that we're looking at is the shareholding. I mean, shareholding we already looked at. The street credentials from here on. Again, sideways, that's a neutral rating, because if you have to look at since listing, which is in August 24 to now, the returns have varied in that range of almost 7% to 27%. So since listing, no major gains coming in for someone who looked at the stock or entered the company at the IPO time. The returns actually started coming in only on a YTD basis, where it's actually grown 27%. So, a neutral rating there, not a loss to the investors, still making a profit in terms of their investments on the stock. So hence a neutral rating there. And when you talk about valuations, now the most expensive, or maybe the second most expensive, if you have to look at peers, from Orient Technologies, Dynacons and Allied Digital, these three are the competitors. The least expensive right now, the cheaper one is Dynacons, which is around 17.4 times. But the most expensive is Allied Digital, which is at 35.5 times. Orient Technologies fits in somewhere in between at 27.5 times the current PE. So in terms of the current price to earnings, we've given it a neutral rating because it's on number 2 out of the 3. And very lastly, the outlook seems to be also very neutral right now, because the aspiration of the company is to be in the top 5 system integrators from here on. Whether they will be able to make it to that list or not is the question we need to check. Their focus is mainly on recurring revenue and cybersecurity. So the stickiness with regards to clients becomes absolutely important. If they are not able to get that stickiness, then the business could go sideways as well. And the total order book currently is around 414 odd crores, and the Q1 order intake was under 105 odd crores. They've also mentioned that probably the margins could remain under pressure in the second quarter. And as we know, the margins over the last couple of years have been on a declining trend. So that has been a concerning area as well for Orient Technologies. And the reason why we are seeing that lag in terms of margins is because the investment that they're making in employees, they've built a base of almost 1,600 odd employees so far. And this is coming in at a time where you're seeing layoffs happening in the IT industry. Secondly, they're building out the security operations centers as well. So that is what is putting pressure on the margins. And the revenues from this business are yet to come in. So till the time the revenues don't come in, the pressure in terms of margins is expected to continue as well. And the anticipation is over 20% margin with regards to the security operations center business. And that is a tall ask right now. How achievable is that going to be? How sustainable that is going to be? And how fast that is going to come in is what we need to see. Very lastly, the device as a service is also a core, and that is an innovative offering that the company has. And in terms of their midterm roadmap, that actually includes expanding services beyond India. So they are looking to, look at other countries as well. So that export part of the business becomes important as well. And very lastly, that targeting APAC and Middle Eastern markets. And the timeline that they've given for these two markets is 3 years. So within 3 years, what will their export opportunity look like? How much will that contribute to their top line? How much will it aid margins? And profitability is the key from here on. Let's quickly look at all the ratings now. From the first 4, you have balance sheet and return ratios, which are a thumbs up. Income statement is neutral and cash flow is a negative. So that's a down one coming in there. If you look at the other set of ratings, again, 3 sideways, which is 3 neutral. Street cred, valuations and outlook is pretty neutral right now because they yet have to perform to get there. And your shareholding is a thumbs up only because your promoters have remained steady and the retail participation has increased. Overall, a 5 on 8 rating is what we've given Orient Technologies, which is still on the higher side. But what from here on? Joining us on the show to discuss more, we have Mr. Ajay Sawant, Chairman and Managing Director at Orient Technologies. Ajay, welcome to the show and a pleasure to speak to you at NDTV Profit. My first question coming to you is, since listing to now, a lot of metrics where we've seen ups and downs that have come in. My first question is in terms of FY26. Now, your revenue expectation to match the order book is around 414 odd crores. Is that what you're considering that will be the top line and what you're targeting, or is there a possibility that could overshoot?
So, first of all, thank you, Hiral, for having me on the show. Coming back to your question, I'm very much eager to tell you that, yes, we have been doing really well in terms of top line. Quarter on quarter, we are increasing our top line, and last year revenue has been grown more than 40%. Yes, definitely there is a pressure on the bottom line and the cash flow. Okay, these two parameters, yes, we are working on this. Bottom line parameters, because of our talent acquisition, which is we are doing it in the currently when the others are actually asking people to leave the organization, we are just saying that we are acquiring those talents. We are getting into the talents because we are getting into the new space of cybersecurity as well as in the space of managed services. So our focus is increasing our services revenue, which is a healthy bottom line driven margins. And currently, as you see that once the services keeps on growing, we will increase our bottom line as well. So that's the plan that we have.
Okay. So if you have to look at the revenue, it's heavily concentrated in terms of where the domestic markets go. You have an ambition to move into APAC and Middle East as well, but that outlook is over the next 3 years. From here on, taking the reliance that you have and the way the business model is that you need sticky clients because of the recurring revenue that is needed. What is the client profile that you're sitting on right now? What is that average contract size that you have with these clients and the tenure?
Okay, so here, currently, if you see, our entire customer base is concentrated mainly into the mid-market segment. And if you see, being in Mumbai, we have a huge BFSI segment as our customer base. Second is government and public sector units, which is where we are concentrating on our businesses. And we are into the basically a digital transformation and the services businesses. So we work with the customers on the digital transformation, where currently the AI becomes a huge momentum for all of us. And that's a great lever to work on in the infrastructure space as well as in the application development space. And we are trying to get into the services space from that.
So, but Ajay, you know, your concentration with regards to where I think the top 10 clients go, that reliance is absolutely heavy, and a significant portion of your revenue comes in from your top 10 customers. Loss of any of these key clients could actually have a substantial adverse effect on your financial performance. How are you hedging that aspect?
Okay, so these customers are basically having an annual recurring revenue, and we have signed a contract with them for 3 to 5 years. So because of that ARR revenue for next 3 to 5 years, the stickiness is there with the customer. And that is where we are not so much worried on those top 10 customers or top 30 customers, which are contributing to a good amount of our business. So what we are very commonly saying within the organization is that keep on increasing this ARR revenue and the base will keep on increasing.
Then Ajay, what about the risk with government contracts? Because they are typically awarded through a tender process where it comes from lowest bidder, and that's what is often chosen. So if that is the case, one, you already have a risk of whether you will get the tender or not. And secondly, once you get the tender, it's a low margin business as well when it comes to with the government. Obviously, you're not going to be able to scale to the margin profile that you want to. How do you play that aspect?
So not all the government and PSU nowadays work only on the L1 basis. Today, the customer is wise enough to understand T1 and L1 basis. So technology perspective, they give 70% rating, and commercially they give 30% rating. And that's how we pick up and choose only those deals where technologically we are superseding our competition, and commercially also we are making sure that we are having enough EBITDA on the paper. So we make sure that on the balance sheet, we are having good margins, okay, through the commercials, but technically is which is our strength. Our organization is more technically competent enough, and that is what we leverage in the market.
So let me ask you then, the high receivables that you have right now, are you seeing any impact that could have on the cash flows? Because cash flows are already depleting when you talk about the operational cash flow. So what is that target number you have for FY26? And by when do you see cash flows turning positive?
Fantastic. So yes, barring last year, if you would have observed our balance sheet for last 5 to 7 years, we are always cash positive. Only FY25, where we are showing that the cash flow is negative 11 crore. Otherwise, most of the year, we are always cash positive. And it's a matter of time. Okay, we are working on this. Within next couple of quarters, we should be coming back as a cash positive once again. Because there is a huge outstanding which is there because of certain projects which got prolonged from the customer side. And that is where we couldn't able to recover our investment. But it's a matter of time.
What is the revenue number that you're planning or you have in mind for FY26, 27 and 28? The reason I ask for 3 years is because your security ops centers will also come at play. So what is that looking like?
So generally we do not predict give the predictions on the future numbers. But what I can tell you that next 3 years, there is definitely a plan growth which is there on the card. Through various of our offerings, which is like DaaS, SOC or cloud, which will be in the tune of 30% upwards.
30% of upwards growth is what you're seeing in revenue. What's the potential revenue you're seeing from the security operations center business? That's one. And how quickly will this business clock upwards of 20% margin? Because that's the outlook that you've given as well.
Sure. So our stock getting operational in the mid of Q3, and in a full 1 year of operations, you will see a good number coming in from the stock operations, whereby we are expecting
What would that
a
number
margin
look
of,
like?
currently, as I said, that we do not predict the futuristic number.
I know, Ajay, but a ballpark in terms of the investments that you've already made to compromise on the margins to actually get the stock business up and running. I'm sure there will be some visibility with regards to what the anticipation could be of the revenue potential.
So first full year concentration, if I see, it will be a single percentage digit of our overall revenue.
Okay.
Okay. But second and third year, it will be a higher double digit percentage of our overall revenue. That's what I can tell you.
That helps. And how soon will you see the business clocking an upwards of 20% margin?
So by calendar year FY26, calendar year 26, I'm talking about, we should be able to get you that very sure.
Okay. And what's the kind of export opportunity that you're looking at? Because you've given an outlook that in the next 3 years, you will be looking at Middle East and APAC as well. Any regions that you've started targeting, and how much in the next 3 years would export as a percentage of your revenues contribute?
So we have not yet planned for our international business, because this is the revenue which we are targeting in the 2 to 3 years down the line. So probably the first and foremost region that we'll concentrate is into the UAE market, because that's a booming market, and Africa followed by that. So EMEA market overall looks really good. Okay, and we'll be getting into the MEA market, which is the Middle East and Africa, which we'll be targeting in next 2 to 3 years. But currently, we are just evaluating that market. We are studying that market, but there is no plan, which is concrete plan I can share with you right now.
When it comes to your order book as well, as you mentioned, the order book is good. Receivables are pretty strong because some of the projects got delayed as well. So what is the visibility that you have in terms of FY26 from an execution perspective? So if your order book is standing at around 400 or upwards of 400 odd crores currently, how much visibility you have in terms of execution on that? And in addition, any orders that could be coming in to get added to your order book in the next couple of months?
So 400 plus crore is already there, which is completely visible and will be billable. It's 100% billable. So this
will it be receivable?
No, this is billable order book. This total order book which you are showing on the screen at 440 crore, this is all billable, which will be in Q3 and Q4, it will get billed for sure. Okay. On the front that we are expecting another, couple of 100 orders, crore orders, which will come. So overall H2 of FY26 will be to the tune of around 600 crore.
Okay. And how much out of this billable order book you think will translate into receivables? Because receivables is the pressure point right now. What is that credit cycle period that you actually have versus what it has come down to right now?
So currently our DSO is in the tune of 100 plus days.
Okay.
Which we want to bring it down to around 75. Okay, as per industry standard, 75 is average credit days which is been offered to the customers in our industry.
Okay. In terms of the receivables, do you think anything that could actually become a bad debt?
So in our last 10 years record, which we have seen, 0.5% of our revenue will become a bad debt if at all we are not able to get into a right perspective. But now I don't see any red light coming from the finance on any of such outstanding, which I can talk about.
Okay. Very lastly, in terms of your ROCE, there were times when you were at a high of almost 55%, came down to your 40s. Now I think it's in your 20s. Where do you see it stabilizing, and what's that sustainable
I think we are
number?
already bottomed up. So now from here onwards, see the IPO money which is coming in, which has bring down my ROC drastically down. Okay, from 55 to 27. Okay, I don't think there is a scope for further going down. It will now come up only.
Okay, and my last question to you is, where do you see your margins settling in currently and stabilizing? Because again, that is also slightly on the downward trajectory.
Yeah, so currently we are into the 6 to 7% of EBITDA margin, which we want to grow back to around 9 to 10% in couple of years. Once we start getting into the SOC revenue, DAS revenue, which will start flowing in now. Okay. And I'm sure it's a matter of time. Within 3-4 quarters, we should come back to around 8%, and next 3-4 quarters will touch down between 9 to 10%.
Okay, so 9 to 10% is what you should be watching out for from here on. But thank you, Ajay, so much for joining us on the show at NDTV Profit. A pleasure to speak to you, as always. So that was the management of Orient Technologies. Here we are talking about something which has been unsustainable, probably receivables were a concern, and now you have some bit of an idea of what to expect going ahead from a top-line perspective, the stickiness that could come in from a recurring revenue space, and the SOC business, which will start to play up, and upwards of 20% kind of margins is what they are targeting as well on this aspect. But completely out of time. With that, it's a wrap on this edition of Know Your Company. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक है?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक है?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Terrific Thursday on Dalal Street as Nifty continues to remain above 25,400 while Sensex trades above 83,000. Infosys, HDFC, Reliance powering Nifty's upside. Meanwhile, IT stocks jump up to 3%, pushing the Nifty IT index higher for the third straight day after a rate cut by the US Federal Reserve overnight boosted investor sentiment. On to an NDTV Profit exclusive then. Sources tell your channel that major payments applications like PhonePe and Cred have stopped supporting rent payments using credit cards following regulators' recent master directions. Users seek more clarity. Meanwhile, India needs to develop alternate markets like Europe, says Tata Steel's TV Narendran in an exclusive chat with NDTV Profit. The business tycoon hails government's GST cut decision. Good afternoon. You're watching Markets at 12 with me, Shreyansi Singh. First things first, let's take a look at the markets, and quite a good day coming in as far as the markets are concerned, whether you look at Nifty or Sensex at this point in time. Nifty managing to hold up well above that 25,400 level at this point in time. Sensex also jumping about 300 points as we speak. In fact, let's take a look at the sectoral picture because that is looking tilted sharply in the favor of green. So it's IT that is powering this rally. Other than that, you have pharma, finance, bank, as well as FMCG, exactly in that order leading the gains. On the flip side, there's energy on the back foot, oil and gas, defense, as well as metal also slightly on the back foot. So that is largely the kind of picture that you have as far as sectors are concerned. But let's take a look at some of the gainers as well. It's Poonawalla FinCorp on the back of that promoter raising stake sale that is buzzing away in trade. 12% uptick coming in on this particular counter. Nugent Software, Zentech, Poly Medicure. Some of your other gainers as well. And from within the Nifty 50 pack, if you look at it, there's HDFC Life, Infosys, Eternal, Sun Pharma, HDFC Bank, as well as SBI Life and even Wipro holding up quite well at this point in time. On the flip side, from within the Nifty 50 pack, when you take a look at the losers, there's Coal India that makes it to that list. On the back foot, 0.8% decline coming in on that counter. Apollo Hospital, BEL, Bajaj Finance, ONGC, Hindalco, and even Tata Motors from within the auto pack as well. That's slightly on the back foot at this point in time, but that's largely the kind of picture that you have. Speaking of buzzers, then tell you what, let's also take a look at Poonawalla FinCorp, in fact, because that particular counter is buzzing away in trade. Like I mentioned, you do have that promoter that has upped the stake, promoter purchase, in fact, 3.3 crore shares at a price of about 450 rupees. I'm talking about Rising Sun Holdings. That's the promoter entity, and that's bought a stake worth 1,500 crores. We do have Vansh, in fact, who's standing by with all of those very important details. Vansh.
Yes, Shansi. So as you rightly mentioned, now the promoters has bought 3.3 crore shares in the company at a price of about 452 rupees. Now the Rising Sun Holdings, that is the promoter entity, has bought stake worth rupees 1,500 odd crores. Now the stake of the promoter at the end of June 2025 was 62.5%, and post this stake, now post this infusion, the stake will rise to 64 odd %. And if I talk about the capital adequacy and the AUM of the bank, if I talk about the AUM, there has been a consistent growth, and the loan growth has been shown a CAGR of about 55% in the next 2 years. Also, if I talk about the capital adequacy of the bank, there has been some decline in the capital adequacy that has fallen from 60% in Q1 FY24 to 55% in Q1 FY26. However, this is mainly on the back of the increase in the total assets, which largely remains not a concern. Also, if I talk about the Q1 FY26 management commentary, now this stake infusion was already expected as per the Q1 FY26 commentary, and the management expects the FY26 AUM growth to exceed the guided 35 to 40% mark, and there is a strong consumer confidence and robust demand for retail loans as well. And there is a strong growth against from the particular segment, that is a loan against property as well. And FY26 will the management estimates that FY26 will see a substantial more secured book, and the post FY26 they will build out the unsecured book portfolio recalibration, leading to the NIMs moderation as well. Lastly, if I talk about the credit cost guidance, they have guided for a credit cost guidance at 1.5 to 2%, and the long-term borrowings, which may rise from 75% versus 61% on a sequential basis. And lastly, if I talk about the ROA, they expect a steady return on assets of about 3 or 3.5% by FY28 as well. So this is how the overall picture is panning out for a Poonawalla FinCorp.
Well, absolutely. That's a Poonawalla FinCorp that is buzzing away in trade, about 12% gains coming in on this particular counter. But Vansh, stay with us and tell us about some other buzzers as well. Because there's in fact Biocon that is making it to your list, Cochin Shipyard, Cohance Life Sciences, and even Avenue Supermarts.
Well, yes, so let me firstly start off with the Biocon. Now, the US FDA has approved 2 biosimilars from Biocon Biologics. Now, first is the Bosaya is approved. First is the Bosaya that is approved for conditions like osteoporosis and it is similar to drug Prolia. And second is Oxela. Now, this is approved for cancer-related bone issues, and this is similar to drug called Xgeva. Now, the FDA has granted them provisional interchangeability, which is a key step that is coming in for this particular company. This means that these can be easily substituted for the original drugs as well. Now, according to the data, the original drugs had nearly $5 million in US sales in 2024, and the analysts estimate $16 million for FY26 and $50 million of revenue for FY27 for Biocon as well. Second on the list is Cochin Shipyard. Now, the company has signed an agreement worth rupees 200 crores with ONGC. Now, the order is for the dry dock major layup repairs for jackup and rigs, and the duration of this particular project is 12 months as well. Third on my list is third one on my list is Avenue Supermarts. Now, we have UBS that has maintained a buy, and they have in fact hiked the target price to 5,600 rupees from the 5,050 rupees. Now, they believe that this is a major compounding story in the Indian consumer base, and they expect the growth. To accelerate and strengthening its through strengthening of e-commerce by DMart as well. Last on my list is Cohance Life Sciences. Now, 34.2 million shares have changed hands. In fact, 8.9% of the equity has changed hands in particular counter. If I talk about the details, now initially, Jusmiral Holdings was to sell 1.9 crore shares. That is a 5.1% stake in the company at a value of about 1,756 rupees per share. However, the floor price for this deal was about 900 rupees per share. And if I talk about the seller's residual side, it is subject to a 210 days lockup period as well. And the sole broker for this is IIFL Capital. And if I talk about the stake of Jusmiral Holdings, it holds 33.34% stake in the company as of June 2025.
Well, absolutely. That's the stake as far as this particular company is concerned. Thank you so much, Vansh, for joining us with all of those buzzers. But speaking of buzzers, then let's also talk about Glenmark Pharma, because even that counter is in focus, up about 1.5%. As we speak, as you can see on your screens as well, you do have a big breakthrough coming in for this particular company. You do have the partner, that is Astria, that has reported positive trial data for the dermatitis drug. In fact, that was licensed from Glenmark. What is next when it comes to this pharma major? In fact, Varsha is joining in with that entire update and the answer to that question.
Well, thank you so much for that. So yes, a positive news when Glenmark is considered now, because Glenmark's partner, that is Astria, has received a positive data trial for a drug which treats skin inflammation. Now, this drug was licensed by Glenmark. Now, this shows a best-in-class profile, potentially allowing for dosing just once every 6 months. Now, this positive results validates Glenmark's future, or rather innovation pipeline as well. But currently, Glenmark will not receive any milestone payments, as there are further stages, or when it comes to this product will go to further phases, clinical phases as well. But the near-term catalyst when it comes to Glenmark is, one is they are considering, or rather there will be 3 partnered injectable launches in US, and also they are expecting a double-digit growth when it comes to their Europe business. This is on the back of respiratory launches that the company is expecting in Europe. So overall, yes, a positive news when it comes to Glenmark.
Well, absolutely, overall it's a positive, and you can see that reflected on the price as well when it comes to Glenmark Pharma. As you can see, 1.5% uptick coming in on this particular counter. But tell you what, let's move on. Let's get you an NDTV Profit exclusive then. On the sideline of the IFQM Symposium 2025, we did have Danish, who caught up with Tata Steel's MD and CEO TV Narendran to speak about government's GST revamp, as well as China overhang when it comes to the metal sector as a whole. Let's go across and listen in.
A lot has happened from the government's end. We are seeing a clear cut in GST rates. How do you look at this development?
I think it's overall very positive for the economy. While it's not directly impacting the steel industry, but indirectly it will certainly help us if the economy picks up further, consumption picks up. It's also good that it's been cut for industry like cement, because that helps bring down construction costs. So which is overall good for the construction industry and good for steel, because steel is used in construction. So I think in many ways, directly, or more importantly, indirectly, it has a positive impact for us.
So the Indian government is also in talks with US for a bilateral trade agreement, and also the Indian government is in touch with the EU for a FTA. So how do you look at these developments, and what sort of benefits do you see for the steel sector?
I think for steel, US again was not a direct impact because India was not really exporting much steel to the US, but a lot of engineering goods go to the US. So I think it's important from that perspective to have a conclusion to the US-India trade talks. As far as Europe is concerned, yes, I think we need to develop alternate markets. I think our dependence on US as a market has been high across sectors. So I think Europe is a 500 million people kind of market. It's collectively, it's a $23 trillion economy, geography as well. So I think it's important for us to close the EU FTA as well as soon as possible.
So the relationship between the Indian government and the Chinese government is also on the path of thaw right now. So with China reopening and maybe with the Chinese industries whenever they'll be allowed to enter the Indian market, do you see that development as a positive step for the steel sector, or our markets could be full of cheap steel from China?
I think steel, for the steel industry, China has always been a concern because China exports a lot of steel, almost as much steel as India produces. And the reality is that the Chinese steel industry is not profitable at these steel prices. So I think that's a concern. The government has taken steps to give us some comfort with the safeguard duties. So I think the positive story more is about China has done a lot of work on innovation, technology, climate change related areas, AI. So I think it's useful for India and China to look at opportunities to work together in many of these areas. And I think China has moved very fast in some of these areas in the last few years. So I look at it more as a larger opportunity than specifically for the steel sector.
So very lastly, with the government giving a lot of relief in terms of GST, and although steel hasn't been given a direct relief, but with a lot of GST cuts, it is expected that the demand would be picking up in the construction sector and other allied industries. So how are you preparing at Tata Steel for the expected sudden demand?
I think we expect H2 to be better than H1 because seasonally also H2 tends to be better. During the monsoon period, construction activity is on the slower side, and the festival season is a good trigger for consumption growth. So we expect H2 to be better than H1. As far as Tata Steel is concerned, we've just added 5 million tons of capacity, which is ramping up, and I think is ramping up at the right time.
All right, and that's the word coming in from the top boss when it comes to Tata Steel. But tell you what, let's move on. Let's keep getting you some very important commentary then. In fact, the last few months have been tough when it comes to Boeing and Air India. But recovery is underway. There's a silver lining here. Numbers are picking up. And that is also the word coming in from Boeing India President Salil Gupte, who's spoken exclusively to NDTV Profit. In fact, he also says that Indo-US aerospace partnership, in fact, remains strong. Let's go across and listen in.
First of all, what is your outlook for the Indian aviation industry right now? A lot has happened over the past few months, and the problems at Boeing are now getting solved with the union and everything. So do you look at production being picked up?
Well, so I'll say first and foremost, of course, the last few months after the tragedy of Air India 171 have been heartbreaking and difficult for the Boeing family, for the Air India family, and of course all of the victims. And so they remain in our thoughts and prayers. As we continue, our recovery as Boeing over the last few years, I think you've seen production numbers in the U.S. Get to where our customers expect them to be. And as that occurs, you'll see the supply chain continue to heal as well. India is an important part of that global supply chain for aerospace. And we believe that India will participate in that going forward, and that'll create lots of opportunities here as part of that.
Are you expecting more Indian Airlines to place more orders, considering that Akasa, one of your biggest customers, they already have over 200 aircraft that is still pending to be delivered? Similarly, the Air India group also has placed a major order. Besides these airlines, are you expecting a surprise order from some of the other airlines in India?
Well, I think if you look at it, the numbers, you have about 500 plus orders for us, Boeing, that have been placed over the last few years. And you see the overall Indian market will have almost 3,000 airplanes coming in to India over the next 20 years. Obviously, we have a competitor here that is collecting orders as well. But even if you account for their orders, there's still call it 1,500 plus more orders worth of business to be won over the next decade or so. And so we definitely expect there will be more orders over that period of time. Exactly when those orders will be placed will be up to the customers, of course, and what their needs are. And also, it will depend on when the nation and the ecosystem is ready to absorb those airplanes. Even the airplanes that have been ordered already, there's a lot of work that's going to be into developing the pilot training ecosystem, the maintenance ecosystem, to ensure that India is ready to operate all these airplanes efficiently and safely.
So earlier this year, you had mentioned that this year Boeing will be delivering somewhere over 24 aircraft to Indian Airlines. Can we expect these numbers to improve in the next year?
Oh, well, the actual delivery slots and timing is, of course, up to the customers to talk about. But yes, we expect that there'll be a continued ramp up in the years to come of the number of airplanes that we're delivering here. Absolutely.
So the Indian government and the US government right now, they're in the middle of a bilateral trade agreement. What sort of benefits do you see for Boeing and for the aviation industry as a whole if there is a bilateral?
Well, we know that countries around the world are in discussions with the U.S. administration about getting to a bilateral trade deal. What we have always advocated, along with the rest of the aerospace industry, is that regardless of what's negotiated in terms of tariffs across the board, aerospace and defense should be what's known as zero for zero, and that a zero tariff environment that has been there since 1979 around the world has been very important because aerospace is a critical part of infrastructure for countries and national security. And so that's how you get to our perspective that a zero for zero environment is best for our industry.
Rather than tell you what, let's also move on to another NDTV Profit exclusive. In fact, major payments applications, the likes of PhonePe and Cred, have stopped supporting rent payments using credit cards. In fact, sources tell NDTV Profit that credit card payments have been switched off for now following the regulator's recent master directions. In fact, we do have Vishy joining in with all of those exclusive details. Vishwanath, over to you.
So payment applications like your Cred, PhonePe or even Paytm will no longer support credit card payments for rent. This is happening because earlier this week on Monday, the Reserve Bank of India came out with the master directions for payment aggregators, which requires these payment aggregators to conduct a thorough KYC or a know your customer process for these landlords who were earlier receiving rent payments using credit cards. Remember that this was a highly lucrative business for the card companies, for the payment application providers, as well as the customers, both the landlord as well as the tenant. It ensured that there was an easy free lookup period in the credit card transaction. It also allowed these payment applications to levy certain charges on these transactions. Banks themselves, who were the card issuers, were also levying higher cost for such transactions to go through. Essentially, what these payment aggregators believe is that if the regulations are being deployed in a very strict manner, then that would mean that their payment aggregator license will be at stake, and that is why they are switching off the business for now. What's also telling NDTV Profit is that in a few days, there is likely a meeting that the Reserve Bank of India is going to conduct with these payment applications to seek feedback on these master directions. Depending on what comes out of that meeting, they will decide the future course of this specific type of transaction where credit cards are used to pay rent. This has been something that the RBI has actually been against. It doesn't like the fact that credit cards are used for specific small value transactions, but also for retail transactions which are not necessarily commerce related. Rent payments, they've actually been coming up against it with the Reserve Bank of India seeking further details from payment aggregators and multiple meetings having happened in this space. What the payment applications believe, however, is that the landlord's bank account is already verified by the bank, has been through a KYC process by the bank, so a re-KYC may not be necessary. As such, the process of re-KYC itself is a cumbersome as well as expensive process, and that is why these payment applications have decided to stop credit card payments for rent. They will take a call later on.
All right, then they'll take a call later on. Thank you so much for getting us all of those exclusive details. But let's move on then. In fact, in wide-ranging exclusive conversation with NDTV, you do have the World Economic Forum President Borje Brende laying out a bold vision for India's global trade trajectory, from optimism on India-US ties to the strategic importance of the India-EU deal as well. You do have Brende backing India's expanding role in shaping the future of global commerce. Let's go across and listen in.
The potential of a trade deal between India and the United States is quite real now. There is also a sense that the India and US relationship, which had seen the diplomatic ties at some level perhaps become a bit stretched, is being sought to be rectified. We've seen communication in the manner of social media tweets or messages from President Trump to Prime Minister Modi. They're both acknowledging each other, which in the context of the relationship is important. We've got a wonderful guest with us to look at the overall possibility of a trade deal between India and the US and where it stands from a global standpoint. Borje Brende is the President and CEO of the World Economic Forum, and he's a friend of NDTV's. Thank you very much, Mr. Brende, for being with us. Firstly, are you optimistic of a deal between America and India happening? Why do you believe this is important?
Yes, I am optimistic, and thank you for having me again on your show. US and India are natural partners, and India is important when it comes to services, but also increasingly in manufacturing. And the US want to diversify also in Asia. So I think the situation we've had in the last few weeks is not something that's going to continue. I spent last week in Washington, D.C. I'm now in New Delhi.
Give us the inside scoop of what you heard. Is it happening?
So I think it's there is a clear will to now find a way. And I think it's also was unfortunate how it developed. But that is now, in my view, water under the bridge. The relationship between the United States, with 27% of the global economy, and China as the fastest growing of the large economies, is incredibly important. And I think they will find ways. And exchange.
And India is the fastest growing of the large economies, right? As India.
Yeah.
But you mentioned China, which is interesting because when it comes to China, America is also talking about sanctions. There haven't been sanctions quite at the moment. They continue to import oil, for example. But in terms of a trade deal between America and China, do you see this as being also fundamental if we are to see, sustained growth and a resolution of trade issues?
It seems like there is a good momentum also in the negotiations between U.S. and China. But I think they're more challenging because they're also big competitors on the new technologies. And we saw there was a deal now on TikTok where it will become American, but based on a Chinese algorithm. That's at least what has been reported in the media. But then there is news today that China will also then continue or introduce restrictions on NVIDIA and their semiconductors for import, because China wants to build their own chips and semiconductor industry. So I think the China-US relationship is a much more complex, and there's going to be fierce competition between these two nations. I think in the past we saw more a situation where US and India were closer in its collaboration. But what India also realized during this more intense period is that the export to US is important, but overall it's like 2% of China's, now of India's GDP. So it's also manageable, but of course it's a big market, and there are a win-win situation, and many Indian companies have also invested big FDIs in the US.
Sure. Mr. Brende, China is interesting because there is an attempt at resetting the problems between India and China. We've seen the Prime Minister travel to Tianjin for the SCO summit. And one of the points which did emerge, not just in Tianjin, but a few days prior to that, was when the Chinese Foreign Minister came to Delhi. where there appears to be an agreement that China may provide India rare earths. Now, that's obviously critical when it comes to semiconductors and an important part of our economy. How do you see the prospects of an improved economic relationship between China and India?
For the world, I think it's a good thing that China and India are speaking to each other, trading with each other. There's not a good thing if there is problems on the border. When it comes to rare earth, it is a real issue. Rare earth is not rare, though. There's a lot of rare earth around the world, but it is not ripe yet, and you have to then start mining. So it will take some time. I think Foreign Minister Wang Yi's visit to India was also important. Also, Prime Minister Modi's visit to China.
All right, and that right there is the word coming in from the World Economic Forum president as well. India and US are natural partners. That's some key commentary there, but that's all the time that we have on the show. Thank you so much for tuning in.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app. The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी
Hello and welcome to NDTV Profit. You're joining us on this special conversation around the IPO of Anand Rathi Stock and Brokers Limited. Of course, this issue is set to open on the 23rd of September and will close on the 25th. The price band has been set about 394 to 414. Apologies. I have with me the management of the company, of course, Pradeep Gupta, the co-founder and vice chairman of the company, as well as Mr. Roop Bhutra, the CEO of Investments. Gentlemen, welcome to this conversation. I wanted to start with the conversation on the IPO itself. What is it that you're bringing to the market? This company is known amongst investors as a broking firm. You also have a margin trading facility that you run, both of which contribute a majority of your revenue. But for an average investor, what are you bringing to the company?
See, this is the second company which is coming in public from our group. Basically, earlier, about 3.5 years back, we came with a wealth company which is listed in a market site. So this is a purely broking and distribution company. This is one of the oldest company. We started our capital market journey 30 years back, way back in 1994, and since then we kept on adding various different businesses, various different verticals. In this company, what we are doing, we are catering to almost all category of customer, from retail to M&I, HNI, NRI, corporate, and institutional. So all kind of a category of customers, we are satisfying the need of investments of any individual investors who are dealing with this company. And primary idea is how investments need of a specific customer should be satisfied. And having said that, it's not only through equity, but various other asset class and product. From a distribution point of view, which is mutual fund, AIF, PMS, and corporate bonds, and so on and so forth. And we are trying to see how a customer really, from a long-term perspective, create wealth, generate wealth, and constantly get a return on investments on a positive side. So that's the overall theme of this particular company. Since these days now, in this company, you need it's more capital intensive, you need capital to grow. Margin trading facility is one of the major requirement by most of these customers because of a simple reason. How a person can increase his return on investments by investing less and taking certain amount of funding on the book they have got. So that's what we are trying to do. So for satisfying the need of our company of working capital, we have come in the public and asking for our help. So this issue size is about 745 crore. Out of that, large portion, complete portion is for working capital, and major portion is going to be attributed towards margin trading fund.
Okay, understood. I'm trying to understand the current lay of the land in terms of the industry that you operate in. You've got a few other players who are listed, who currently operate in the public markets. Compared to them, where does Anand Rathi Stock and Brokers, your valuation and your position lie? If you can tell us a little bit.
So in this space, every single person is following certain amount of business rules and business guidance, and they are following that. In my opinion, there are two kind of businesses or business rules which are being followed. One kind of a company who are purely dedicated looking at market share, looking at volumes, and the second set of companies who are looking at and addressing and trying to address the investment needs of a customer. We fall in a second category. And by and large, if you really see, our company is more dedicated towards look after the investment side of any single investor. Whatever investment need by way of looking at various different product of investments, we are trying to provide, we are trying to help customers to understand the nitty-gritty of that particular product, trying to give all the input on that particular investment product, and try to bring the best basket of product before the customer.
All right. So, if you want to understand margin trading facility, and that you've said that a large part of your fundraise is actually going towards that. I wanted to understand, as a business, where do you see that heading?
Yeah, so if you really look at it, I mean, the total overall market is around 1 lakh crore kind of a margin trading book from an exchange perspective. Now, within that, I mean, if you really look at our data as on March 25, it's 685 crore, right? And we have grown over a period of time. It was in 2017 when we started this margin trading facility and margin trading book from about 30 to 40 crore to this level. So we have traveled. And people are constantly asking, and requirement is obviously there on an ecosystem also, as well as with our customers.
Coming to taking that regulatory question ahead, there is some amount of talk that the regulator will look at maybe longer dated settlement for derivative contracts at this point in time. Currently, we have a weekly system. If this goes over the last year or so, it has gone through one change already. If there is another change, how does that impact businesses like yourself? I'm not asking about specifically your business, but businesses like yourself.
I think it's an operational issue. I would request Roop to answer. I can,
sure.
But yeah.
You have very rightly mentioned that current market scenario where regulator is having worry in terms of the derivative related volumes, because there are many customers who are losing the money out of that, and the regulator is doing continuously change. One positive part which is there at our end, comparatively dependency on derivative is very, very limited, because we always focus on the investment related activity, and we try to see that how customer by way of investing can earn money out of this particular market. So first important part which is there on the cash market side, out of our total broking revenue, it's contributing almost 50% part. So derivative side dependency is less.
Right.
Second side, even on the derivative side also, we generally encourage hedging related business more, and we discourage as clients to do more and more trading side, because ultimately they are losing the money. So by that way, impact on overall business will be comparatively less from that point of view on the broking side. Second one very important aspect, we have diversified our business in such a way that it's not dependent on the broking itself. Currently, our broking revenue out of the total revenue is 60% and 40% is non-broking and other revenue.
Correct.
So by that way also we have reduced that particular dependency. So considering all those aspects, comparatively the overall impact on this particular way will be lesser on our business.
Understood. Looking at the way the market is, panned out at this point in time, discount broking is, of course, a significantly large competition for traditional broking houses like yourselves. How do you see yourself being competitive in that space?
So as I said, there are two different kind of a business model, where one is volume-driven businesses and one is investment-driven businesses. So when discount broking houses, so-called we say, or new as category of broking houses, we look at it, obviously they are looking at a turnover-based businesses. And as a result, their deliveries, their focus is towards trading businesses. Their focus is to bring newer customer to the platform or to the investment scenario. And that's where they are trying to create an experiment. As a result, their CAC is high. As a result, they constantly work on constant acquisition side and look newer customer who are coming new to this particular business. Whereas what we are following, we are trying to address the investment need of a customer. We are trying to see how a person constantly stuck with us and constantly invest in various different investments and constantly work with us. As a result, if you really see the customer stickiness with us, 5 year plus is 50% out of our active customer base, 3 year plus about 60% amongst our active customer base. And that ratio is constantly maintaining. Why they are sticking? Because of a simple reason, we are constantly providing investment product. We are constantly guiding them to look at investments and try to see and create a long-term valuation, long-term value of their wealth over a period of time. Trying to provide them a basket of various different products, and those products which are suitable, which are useful for them from a long-term perspective. And that's what we are trying to do.
Okay. Yes, sir, please.
Just to add to that, earlier in terms of these volume-based broking houses or discount broking houses were getting some advantage in terms of the turnover tax transaction charges which exchange was taking, that particular benefit was available to them, which has been removed by the regulator from 1st October. So post that, naturally, all the brokers have come in terms of those transaction tax at an equal place. So that is the advantage which was there earlier to the high turnover, that has gone away.
Okay, I'll ask you 3 more questions. One question is regarding the environment in which we are operating at this point in time, right? Like some analyst reports are pointing out that most of the underperformance that is there in the current indices over the last 1 year or so has been because there's been a very slow earnings growth by India's corporate sector. Actually, the domestic institutional investors are propping up the market with a lot more money coming into the system versus retail, which is the popular narrative that because we have so many retail investors, the market is moving the way it is. I wanted to get your sense, as somebody who watches the markets closely, what is your sense? Where is the current Indian equity market? How much of it is based on fundamentals and how much of that is hype?
See, basically, if I dissect and I keep on talking to various different platforms, this market works on 3 different factors. One is fundamental, another is sentimental, and third is liquidity, right? And most of the time, I think past market, if you really see, constantly market was working on all these 3 factors, and as a result, we have seen a good buoyant market in past 2 to 3 years, 4 years time. Now, probably somewhere down the line, whenever there is a disparity of any of a one factor, people start asking questions. And in my opinion, I mean, you have a international the scenario of economies and domestic scenario of your economies. In my opinion, you still have a good, strong domestic scenario. If you really compare India versus any of a world country, I think India is one of the fastest growing country which is going to be emerge and is going to happen and is happening. And based on that, I personally believe this market is going to go and again take a route and look at fundamentals rather than these technical.
That's going to be an interesting IPO to watch out for, and commentary that is coming in that the dependence is not much on the derivative data, but there is a lot of speculation as to what SEBI will come out and do as well in terms of where expiry goes. But let's quickly take a look at what markets are doing at this hour. If you see in terms of Nifty 50 as well, clearly, it's interesting where you're now receding. You're giving up those gains. We're up around 0.2%, but near the day's lowest levels. Let's pull up Bank Nifty as well, because the divergence yesterday that we were seeing between the PSU Bank Index and the Private Bank Index was spectacular. PSU Bank Index was the one which was actually aiding the Bank Nifty up move. But right now as well, you're seeing that profit booking that has started to come in bank. The PSU Bank Index, Alex, itself has, from the day's highs gone into the negative right now. So that rally yesterday is probably sold into now. Private banks also are the ones which are actually cheering today. Let's look at the heat map in terms of Nifty 50, I beg your pardon. It's more of red versus green. HDFC Life, the top gainer today, no major news flow coming in there. Eternal, Infosys, Sun Pharma, a few of the other names. In fact, IT as a pack is on an uptrend, and this is only a sentimental up move on the back of the Fed rate cut that we've seen. But what's losing out? You have a Coal India, which is under pressure in today's session. Trent is under pressure as well. So that's what the heat map is looking like. But the sectoral picture and what the broader markets are doing is key.
Absolutely. You said it. You mentioned IT. And by the way, as we speak right now, you have the benchmark Nifty 50 that's come off the high point of the day. It's been trading with gains of about 0.33% for most of the session. But take a look at that graph. Towards the last 10 minutes or so, you've seen a little bit of the profit taking that Hiral was just pointing out. And it's really par for the course, because if you look at the benchmark performance over the last 10 sessions, there have been 9 sessions of gains and 1 session of losses. We've moved quite considerably on the upside. We've given up that 25,400 mark on the top as well. But the broader markets, again, interesting. You see a profit taking in IT as well, right? And you've seen a move into the red for both the mid cap as well as the small cap index. So pull up the Nifty IT, because that will give you some sense of what we're talking about. You saw that sentimental up move in the best performing sector of the day, but now gains of only about 0.8% as compared with over 1% earlier. Most of the constituents of the IT index continue to be trading in the green. But a couple of names from the broader markets. Cohance is something that we'll speak about in more detail. There is a large trade, and you have selling by a promoter entity, and it's down about 5.5% or so. And you have DCM Shriram, for example, that is also trading with gains, with cuts rather. Poonawalla FinCorp on the other end of the spectrum is trading with gains, though, 12% higher. And in fact, that is exactly what I'd like to speak about right at the start. In fact, you have the promoter that has purchased as many as 3.3 crore shares at a price of 452.5 rupees per share. Vansh joining in to talk about more details of that trade and what's going on with the stock. Vansh?
Well, yes, Alex, as you rightly mentioned, now the promoter has bought 3.3 crore shares at a price of about 452 rupees per share. Now, the promoter Rising Sun Holdings have bought stake worth rupees 1,500 odd crores in the company, and the stake of the promoter as of June 2025 was 62.5%, and post this infusion, the promoter stake will rise to 64%. Also, if I talk about the loan growth and the capital adequacy of the bank, if I start with the AUM, now the AUM of the bank has been grown, has witnessed a 55% CAGR for the last 2 years, and in fact, it has grown from 17,000 odd crores to 41,000 odd crores from FY23 to FY25 as well. Also, if I talk about the capital adequacy for the bank, now the capital adequacy for the bank has declined from 60% in FY24 to 55% in FY26. However, now this is on the back of the increase in the total assets, so largely not a negative in terms of the capital adequacy as well. Also, if you look at the management commentary for the Q1 FY26, this promoter infusion was planned, and the management expects the FY26 AUM growth to exceed the guidance of about 35 to 40%, and they also expect a strong consumer confidence and robust demand coming in from the retail loans as well. The post FY26, they build out the unsecured book portfolio as well, and the NIMs, net interest margins, they are expecting the NIMs to revert back in the 3 to 4 quarters, and they are guiding for the credit cost at 1.5 to 2%. And lastly, if I talk about the return on assets, they have a steady state of return on assets of 3 to 3.5% by FY28, which is also considered healthy as well. So this is what the overall picture is panning out for Poonawalla FinCorp as well.
Got it. Vansh, thanks so much for laying that out for us. So a lot more details beyond the fact that the promoter has bought stake in the company at a significant discount to the current market price. Of course, bear in mind that we're up about 12% from yesterday's close. But Mahesh Ojha is joining us now to talk about this and more. Mahesh, thanks so much for taking the time as always, and good afternoon to you. I'll start with a question on Poonawalla FinCorp. Would you be a buyer at these levels? We just looked at the return metrics, you've looked at the return on assets that my colleague was just highlighting. Is it still a buy at these prices?
Good afternoon, Alex. So I think we have already we have seen already buying opportunity in Poonawalla FinCorp earlier, nearby 360, 370 range. So this is a short time panel. We have seen 500, and so quietly some profit booking can be done on these level as promoter putting more money. So I think some kind of upside potential is there. But partial profit booking, we are advising on the upper hand. So I think, but 560, 575 could be keep in mind if your horizon is 3 to 6 months from these level. So it's still looking good, very good. I think partial profit booking on a higher level could be a good idea. But yes, I think promoter buying. So still, if anyone looking for a 12-month horizon, they can still buy.
Okay, so you can still be a buyer in terms of Poonawalla FinCorp after the kind of uptick that you've seen right now. Moving on, India is actually taking a bold leap into digital insurance. In fact, IRDA Chairman Ajay Seth launches the Bima Sugam portal, which is a one-stop platform set to transform policy access, claims and transparency for millions. Let's get at my colleague Pallavi for more details. Pallavi, over to you.
Right, not just all of the same information. Over time, it promises to have a lot more. In fact, the Bima Sugam is largely being hailed by several in the insurance industry to do what UPI, for instance, has done for digital payments in the country. So as you pointed out, the Bima Sugam India Federation on Wednesday did announce the launch of the portal by Ajay Seth, the chairman of the IRDAI. The launch was in Hyderabad, where the IRDAI is headquartered, and SET did say that the step is extremely critical and an important first step towards India's digital public infrastructure for the insurance space. It's expected to empower policyholders, deepen penetration, ensure transparency, ensure fairness across the chain. Now, what does the portal eventually plan to have? It's being developed in a phased manner. It's expected to have a digital infrastructure that will serve as a unified marketplace, a digital policy repository, an eKYC and consent utility, as well as real-time claim servicing gateway. So, while all of this will take time, if it does go on to provide all of these services to us policy holders, it actually will have a lot more than any other existing platform currently does house. But, for a start, I don't think at this point it might be a tad too early to worry about the impact on platforms like a PB Fintech, because honestly I've been struggling to just find the site that was launched on a simple Google search since today morning. So clearly some time to go, but big things coming up on the Bima portal front.
Absolutely. In fact, a few of your insurance companies also are buzzing in trade. If you have to look at HDFC Life, that's one stock which is seeing some smart moves in today's session, the top gainer in terms of Nifty 50 as well. PB Fintech is another one which is seeing some good moves in today's session as well. In fact, now that stock is at the day's lowest levels. Let me ask Mahesh. Mahesh, what do you make of this move and the impact you could see in terms of insurance players, and what would you advise investors to do?
See, the overall, we are positive on the insurance sector. From PB Fintech perspective, I think shorter-term negative impact could be seen on these levels. I think some profit booking can become on these levels. But yes, if you're looking from a 2 to 3 year horizon, we are optimistic for upside in insurance sector. These things are much more positive in longer term than very short-term. So I think it's still, if you're looking from an HDFC Life perspective, I think we can see 940, 950 range in 1 year horizon. So if you're anyone looking for a life insurance sector, HDFC Life could be in portfolio pick. And if you're looking for a PB Fintech, wait for some kind of profit booking. After that, what we can look on the same. But yes, in PB Fintech, your horizon could be more than 2 years. I think that could be a right investment horizon.
All right, we spoke about the PSU banking pack and the fact that yesterday's gains were pretty stellar. But let's talk about the comparison with private sector and particularly over the course of the last 3 months. What is a divergence, if any, that could emerge from this point? It's something that we have to look at. And what really is worrying the private players, and is there scope for a stronger second half? Somit has all of that in this special report. Take a look.
Well, it's a clear divergence that we are seeing between the PSU and private banks. If you look at it in the last 3 months, the Nifty Bank Index was largely flat. The Nifty PSU Bank Index was up 6%, while the Nifty Private Bank Index was down 2%. And if you look at the last 6 months' performance, the Nifty Bank Index was up 15%, Nifty PSU Bank Index was up 26%, while the Nifty Private Bank Index was up just 13%, even underperforming the bank index, that is the Nifty Bank Index. Now, what's driving this outperformance when it comes to the PSU Bank? Firstly, on the NIM front, the contraction for PSU banks was relatively contained at around 6 to 18 basis points, while the margin contraction for private banks was relatively sharper. When it comes to asset quality stress, there was no unusual stress that was reflected in any of the PSU banks in the first quarter of FY 26. But when it comes to private banks, they were impacted by seasonality. In fact, the credit cards and microfinance credit cost was also quite elevated for private banks as against PSU banks, where the credit cost was largely moderate in the first quarter. Now, when it comes to credit growth, except for Union Bank and PNB, all other banks had outpaced the industry growth rate, while for private banks, if you look at, the credit growth was even below the non-food credit growth in the first quarter. Now, when it comes to profitability, if you look at PSU banks, Treasury gains, operating leverage and contained credit cost supported the company's profitability and return on asset, while when it comes to private banks, margin contraction was seen. Credit cost was also higher, because of which PAT growth was hit in the first quarter. Now, how's the outlook when it comes to both PSU and private banks? Firstly, when it comes to private banks, the top picks as per analyst consensus is Axis Bank, which an analyst expecting a return potential of around 90% here, followed by ICICI Bank, similar return potential. HDFC Bank, Kotak Mahindra Bank and Federal Bank are expected to give a return of anywhere between 13 to 15%. But when it comes to PSU banks, not many analysts cover this stock, but among the top ones, Bank of Maharashtra is expected to give a return potential of nearly 25% over the next 1 year. Union Bank, Bank of Baroda and SBI anywhere between 10 to 14% over the next 1 year.
Got it. So Amit, thanks so much for that. And let's talk about Bandhan Bank while we're on the subject of banks, because the pair of Bandhan Bank and Yes Bank in focus on account of a sale of stake or shares in Yes Bank by Bandhan Bank. In fact, Bandhan Bank has sold 15.4 crore shares at a price of 21.5 rupees per share. And that stake amounts to about 0.5% or so of the overall pie for a total consideration of 331 crore rupees. The stake of Bandhan Bank now falls after that transaction to 0.21% compared with 0.7% earlier. In fact, it had bought 30 crore shares, Bandhan Bank, in March of 2020. And you've seen a host of these banks selling stake in the recent past. You have, of course, a large global company that has been acquiring stake in Yes Bank. But let's get you a holistic view on the banking pack. Mahesh, what do you think about this, right? So we've talked about the difference between PSUs and private sector banks. If you were to buy, say, 3 or 4 stocks for your portfolio, how would you construct it?
See, first of all, we are very comfortable in PSU space because PSU valuation are comfortable for us. So I think if you're looking from a current, still SBI looking very good, Bank of Maharashtra is still looking very good. And if you're looking from a private sector bank, ICICI is looking very good. So these are few picks from we are suggesting to our client for a longer term horizon, because books of these banks are sound. So I think they are improving day by day, and we are not seeing any uncertainty of books. So these kind of banking are preferred in first space. Let me tell about Bandhan Bank. Bandhan Bank's valuation are quite good and reasonable. So I think still they are encashing their old investments, and that is a positive for longer term perspective. I think their books can be improved, their financing capability will improve. So I think this is the right level. If anyone looking from a longer term perspective, I think 3 to 9 month horizon they are looking, that Bandhan also be preferred. I think 200 plus level could be easily come from this level.
Okay. All right. Mahesh, thanks so much for that. We have to slip in a very quick break, but don't go anywhere. We've got lots more stocks to discuss after. So stay tuned.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app. The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Nifty continues to remain near the 25,400 mark while the Sensex trades above 82,800. Infosys, HDFC, RIL powering Nifty's upside. And IT stocks jump, pushing the Nifty IT index higher for the third consecutive session after a rate cut by the US Federal Reserve overnight boosted investor sentiment. And on to an exclusive. Sources tell NDTV Profit that major payment applications like PhonePe and Cred have stopped supporting rent payments using credit cards. This is following regulators' recent master directions. Users seek more clarity. Meanwhile, India needs to develop alternate markets like Europe, says Tata Steel's TV Narendran. In an exclusive chat with NDTV Profit, the business tycoon hails government's GST cut decision. Welcome back to NDTV Profit. You're watching Profit Buzzers. An interesting stock that we're looking at right now is Cohance Life Sciences. If you pull up that counter on the screens, there is pressure, 6% downtick coming in there. Varsha joins us to tell us what's happening. Cohance, I think there was a block deal that did happen. What are you picking up?
Yes, absolutely. So the stock is under pressure on the back of block deal, wherein 8.9% of equity change hands, where promoter Jasmirar Holdings was to sell, this 5.1% stake, but now this has been increased to 8% stake. If you see, the floor price was set as 900 per share, while IIFL Capital Service is the lead banker when it comes to this block deal. Jasmirar Holdings stake, if I were to talk about as of June 2025, stand at around 33%. So overall, Hiral, this is the Cohance is actually under pressure on the back of block deal that we are seeing as of today.
Interesting. Let's just pull up 1 month chart as well with regards to where Cohance Life Science goes and see what the counter is doing in trade, because pharma as a sector itself has not really moved too much, right? In the last 1 month as well, a marginal 1.5% up move that has come in, but pretty flattish. In fact, another stock that is in focus as well is Sun Pharma. Let's see what a Sun Pharma is doing in trade. There is a Citi note which has come in on a Sun Pharma. What is Citi indicating and why are they bullish?
Well, I would say that this is Citi's top preferred pick when it comes to Sun Pharma, and they are betting on their innovation business. They are expecting this innovation business to triple by FY30 from almost $1.2 billion of market in FY25. Now, they expect strong sales when it comes to their few of their products like Lexel-V, and also they are forecasting almost $600 million when it comes to this product. And overall, if you see, Citi notes that the stock valuation is actually very attractive considering the correction that the Sun Pharma has gone through, and according to Citi, this is a good entry point when it comes to investors. So overall, being a top preferred pick and considering the attractive valuations, Citi is bullish when it comes to Sun Pharma.
Okay, so that's Citi which is bullish on Sun Pharma as well as we speak. In fact, let me get in Osho Krishnan. Osho, welcome to the show. Sun Pharma nearly at the day's highest levels, strong moves, fundamental view is bullish from a Citi, and you have a Cohance which is trading under pressure on the back of the block. What would you advise investors to do with both these names?
Very good afternoon, Hiral. Firstly, thank you for inviting me at the show. Well, now coming to the technical perspective of Sun Pharma, then this counter have seen a very strong support zone near the area of 1600 and 1580 kind of a range. So historically also seen in the month of March, the zone of 1600 was well tested, and from there onwards we have seen a kind of a strong resurgence. And again, the same thing is happening right now also. The counter have seen a kind of a retestment of a very strong support zone, and there is a kind of resurgence that is being seen in Sun Pharma. So I expect that in the short-term period, there is high potential or high possibility for the counter to test the zone of 1720 in a very short-term point of view. And once it breaches the zone of 1720, then we can see even further upside movement from medium-term point of view. Now coming to the technical perspective of Cohance, then this counter was kind of gaining some strength in the last 2 trading weeks, but with today's development because of the block deal, the counter is again back below the short-term moving average. So I expect that there is a possibility of some further consolidation in the counter. So one should remain sidelines from the counter until it breaches the zone of 1050 on a decisive manner on the higher end. Then only one can look for buying opportunity in Cohance.
Okay, so that's with regards to Cohance and Sun Pharma. But 2 stocks which are in focus. One is Biocon. The US FDA has given them approval for 2 biosimilars from Biocon Biologics. And apart from that, the other one is a big breakthrough coming in for Glenmark Pharma, because the company has partnered with Astria, and the Astria reports have been positive with regards to where trials go. Varsha is with us to tell us more about both these names.
Well, starting with Biocon, so their subsidiary company, that is Biocon Biologics, has received 2 US FDA approvals when it comes to their biosimilar portfolio. Well, they've received provisional interchangeability, which is a important one here, because now these 2 products can be interchangeably prescribed compared to the original drugs. Now, according to IQVIA, the estimated sales for these 2 products in FY24 was around $5 billion. Now, the point here is there are a lot of competitors who are actually present in this in these two products. You have, Sandoz, you have Samsung. So there's a lot of competition, and already 6 more companies are expected to enter into these two products, considering you have likes of Dr. Reddy's, So the point here is a lot of competition is present, and because of this, analysts are expecting 85% of price erosion due to this higher competition, and they're expecting $16 million for these two products when it comes to FY26 and $50 million for FY27. So overall a positive one, but yeah, a lot of competition already into these two products. Next on the list is Glenmark Pharmaceuticals, wherein their partner Astria has received positive trial data for the drug which is used to treat skin inflammation. Now they have showed best in class profile, potentially allowing the dosage once in every 6 months, and this positive data validates Glenmark's innovative pipeline. But Glenmark won't be receiving any milestone because this product, or rather this drug, will go to further clinical phases. But overall, onto the near-term catalyst, when it comes to Glenmark, they are expecting partner injectable launches when it comes to US, and they are expecting double-digit growth when it comes to Europe. This is on the back of respiratory launches which they are expecting in coming quarters.
Okay, so that's with regards to Glenmark and Biocon. Thank you, Varsha, for that. In fact, Mahesh, coming to you with regards to pharma as a sector, I think it's more of US FDA approvals for novel drugs is what is causing rallies in stocks, but otherwise the sector is absolutely flat. No major breakthroughs that we've seen in terms of stock performance. What would you advise investors to do currently?
See, in the pharma space, I think Sun Pharma already discussed. Sun Pharma valuation is quite attractive. I think Sun Pharma could be a best pick. Apart from that, Sun Pharma, Biocon, Lupin are preferred, and fourth number is Dr. Reddy, if any downside in the Dr. Reddy. So these 4 are counter specific. We are focusing for a longer term horizon. From Glenmark Pharma perspective, I think things are going positive for stocks, but I think in valuation comfort, valuation is quite high. So we have to wait and watch and review further for Glenmark Pharma. But yes, in pharma specific, Glenmark Pharma, Biocon, Lupin are quite attractive on these levels.
So that's with regards to where the pharma pack goes. Now moving on, Apollo Tyres has actually replaced Dream 11 as the official sponsor for the men in blue. In fact, let's listen into what Neeraj Kanwar, Vice Chairman and MD at Apollo Tyres, had to say. The stock is absolutely flat.
Well, I think, today, as far as cricket in India is concerned, it's not just a game. It's really the heartbeat of our nation. And it sits at the core of the nation's pride. I think being an Indian company, it gives us great honor to be on the jersey of the Indian cricket team. It brings in a lot of consumer trust as far as Apollo is concerned. Apollo is also known for being an Indian institution since 1976. We are clearly the leaders in the Indian market. Yes, it does create visibility across not only India, but the globe. But we are very happy because this is our national pride, the Indian cricket jersey. And for us, Apollo is also our national pride. So there's a clear synergy between the Apollo brand and the Indian cricket jersey brand. So that was really the motive behind tying up with BCCI for this really landmark deal that we have done.
Okay, so that's with Apollo Tyres. But moving on, IT as a sector is the top gaining sector today. Let's quickly pull up what IT Intex is doing in trade. If we can just look at what has happened there. Up nearly 1%. In fact, the gains are coming in from L&T Tech, Infosys, Coforge, Wipro. Only Oracle Financial and TCS are the ones which are under pressure. And this is mainly the sentiment that has got a boost on the back of the Fed rate cut, which is by around 25 basis points. The rate now ranges in that 4 to 4.25 mark. The policy makers are actually expecting another 2 rate cuts this year and one in 2026 as well. Why this is positive for Indian IT? Because it does boost, it actually lowers the capital costs, boost global tech spending and the outsourcing demand as well. But there is an overhang with regards to taxes on outsourcing of IT work from the US. There could be an improvement in terms of the discretionary spend score, because that is what is lagging. In fact, in the first quarter itself, a lot of your IT companies deferred from giving any guidance, taking the uncertainty into consideration. Overall, strong moves there because the sector itself is down 16% on a YTD basis. Last 3 sessions have been strong, and today is the 4th session where the up move has continued. Mahesh, your view with regards to IT, taking the valuations into consideration, the overhangs, do you think there could be an improvement in terms of the sentiment from here on, and you could start bottom fishing with IT majors?
I think sector specific, we are looking, the sentiment is improving for IT sector. So if we buy back also, so these are the things where we are seeing some improvement in sector specific, but headwind, still we are cautious on IT sector. But yes, small buying we are suggesting on the Infosys, Tech, Mahindra and Wipro. These kind of stocks we are facing some looking some valuation comfort. So these are the some stocks we are suggesting for if any dip we are suggesting for buying.
Okay, and what would your top pick be?
I think Wipro and Infosys, if any downside, we can see for a top pick from a longer term perspective, and some portion in Tech Mahindra, which we have seen quite impressive continued result improving for Tech Mahindra. So Tech, if any dip, we are suggesting Tech Mahindra for buy.
Tech Mahindra and Wipro. Osho, how are you looking at the IT majors after the 2 to 3 days of run-up that has already come in? Would you ask investors to take a breather right now, book profits over the 3-day gains, or start nibbling in?
See, overall, there has been a strong short covering in the whole space. So majority of the counter are witnessing some kind of decent rally because of the relief that we are witnessing in the global uncertainties that is calming down. So I expect that there is still possibility of short covering in the whole space, but mid-cap IT stocks are looking more lucrative than the large cap companies, because large cap are at a very strong consolidation zone. So from here onwards, we will be waiting for a decisive or stability at a higher levels. But from the mid-cap IT space, I expect KPIT, L&T, Infotech, and Emphasis are looking very positive to me, and there is a possibility for further upside rally in these counters. But looking from a larger term or investment point of view, then Tech Mahindra and Infosys will be the picks that one can look for cash buying in a staggered manner from a longer term duration.
Okay, so that's with regards to IT majors. But moving on, let's quickly look at which are the stocks that are buzzing in trade today. Jasmine joins us with all that's buzzing, and why?
Well, right, yes, thank you for that. I have 2 stocks in my radar for today. The first one is Cochin Shipyard. While the company receives an order over 200 crore and the order is from ONGC, while the order is for repair of the rigs, basically, and this project is to be completed in next 12 months. While the next one on my list is MOIL, while the company has started exporting of magnesium as a state trading enterprise. They get this title from the government where they can export it up until 46% While as per the trading policy, the company already had this with them in FY24 and FY25. Now, given that any exports made from India will be routed through this company, which is a positive. So these are the stocks in my radar.
Okay, so though the MOIL has cooled down some bit right now, you have the other one, Cochin Shipyard, also, which is cooling off from the day's highest levels. Osho, any quick view with regards to MOIL as well as Cochin Shipyard?
See, firstly, for MOIL, I expect that there is a kind of decent movement, or there is a kind of a movement after a kind of consolidation on the daily time frame chart. So there is still a possibility on the higher end for the counter to surge towards the zone of 370. So the view is bullish with sideways to positive momentum in the counter. Dips near the zone of 348 to 350 can be seen as a buying opportunity for MOIL, and on the higher end 370 will be the target that one can expect in the short term period.
Okay, so that's with regards to where MOIL goes, which is nearly at the day's lowest levels. But moving on to our brokerage call for the day, UBS has maintained a buy rating for Avenue Supermarts and hiked the target price, and that's the reason why you did see gains of around 0.9% right now. Mahima joins it with more details. Mahima, over to you.
Right, so Hiral, interesting note coming in. Of course, they've maintained buy, but have hiked the target price quite significantly to a 5,600 versus earlier of 5,050. What they're saying is that Avenue Supermarts has got a major compounding story in India consumer business. According to them, and their pricing checks, it corroborates that DMart's lending edge, DMart's leading edge is the value retailing that they offer. They've stuck to the brick and mortar model and the kind of discounts that they provide, and that is something that gives them a leading edge. The growth is set to accelerate from here on, is what they're saying. Plus, they're also strengthening their own e-commerce platform. Recently, also, as per Jeffrey's note, that had come out studying discount trends for these e-commerce and quick commerce platform. DMart Ready is still offering the highest discount amongst all at around 23%. In terms of the other aspects that UBS has mentioned, they're saying that it is a winning business model, large structural growth opportunities what they're seeing, and lastly, risk to reward for this particular counter still looks attractive to them. So this is the overall view as to what makes them constructive on Avenue Supermarts, and that is the reason as to why they've hiked the target price as well.
Thank you, Mahima, for that. Mahesh, how are you looking at a DMart? With valuations, do you think it's still a compelling buy?
I think valuation-wise, if you're looking, DMart is still now looking from wait and watch type opportunity. I think after GST cut, FMCG and retailing chain is becoming positive space. But if you're looking from a DMart prospect, they have run in a very shorter term few percentage. So I think any cool down nearby 4,400, that could be attractive opportunity, because space for upside is very little. So I think any downside could be a buying opportunity.
Okay, any downside could be a buying opportunity as well. So that's the word coming in on Avenue Supermart. Very quickly, in fact, Osho, let me come to you. From all your retailers, if you have to look at an Avenue Supermart or an Electronics E-Mart or Trent, good moves that we've seen, anything that looks compelling?
See, at current levels, two counters are looking very positive to me. First one is DMart. So obviously the counter has seen some kind of outperformance, and in the whole quarter, the counter have seen a near about 10% of rally. So I expect that, as my view is still on the similar way, that if there will be any kind of dip towards the zone of 4,500 or 4,400 odd levels, then that will be a very strong levels to start accumulating DMart. And on the higher end, I expect a target of nearly 5,100 on a very short-term point of view. Now, coming to other counter, that is Trent. Trent is also looking quite positive to me, but at current levels, there is some possibility of further correction, or we should wait for the stability in the counter. If the counter is stabilized near the zone of 5,200 or 5,300 kind of a zone, then this will be a very strong opportunity to start accumulating Trent also. So I expect that in the short-term period, there is possibility for a resurgence in Trent, and on the higher end, I expect a target of nearly 6,000 to 6,200 from short to medium-term point of view.
Okay. So that's with regards to Trent as well. But moving on, we spoke to Vivek Chand Sehgal, chairman and co-founder of Motherson Group, on the sidelines of IFQM Symposium 2025, and asked him on how he looks at the GST rate cut step taken by the government. Let's listen in.
The GST Council gave a major relief to the entire country by cutting GST rates. As far as the auto industry is concerned, how do you look at the expected demand that is going to come up?
That's phenomenal for the industry, for the customers, and I'm very happy that the government did it.
And sir, with the festive season just around the corner, from a consumption perspective, what are your views on that? Do you feel that we can going to see something new this time in the festive season?
I think the people of India are getting it to their benefit. They've got tax cuts also, the GST is also getting cut, and exciting products are coming out. So I wish them all the well.
So very lastly, your group is one of the prominent groups in India when it comes to automotive business, and you have been helping other global companies like BMW and Mercedes. So a little bit touching on your business, how do you plan to cater to such international brands?
So I think we are a global company. We are in 44 countries all over the world, and we are supporting our customers. And we are open to everything that they wish. So we are there for them always.
Okay, so that's with regards to where Motherson Sumi goes. Mahesh, any view in terms of where the auto ank pack goes? Because you're talking about GST rate cuts that are coming in. You're talking about tariffs where potential discussions are going on as well. So there is a possibility, there could be something on that front. Though it still does not fit into that 50% bracket. It's still on the 25% bracket. What are the modalities that you would consider, and would you buy anything at this stage?
See, our topic on auto component is Minda Corp like counter. So these are the counters some we are giving some buying advices. But from Motherson Sumi, yes, a small percentage of your corp can be put in that counter also. But yes, from a specific purpose, Minda Corp and Minda is still the buying opportunity.
So that's with regards to where the auto ank pack goes. In fact, interesting commentary that was coming in from SEBI chairperson Tuhin Kanta Pandey with regards to where REITs go, where he's indicated that over the last decade, infrastructure investments have actually delivered annualized returns of 12 to 14%, providing their ability to create a steady value. In fact, he is saying that REITs should be treated as or classified as equity itself. On the back of that commentary, you see the kind of surge that has come in names like Embassy REITs. You have, Power Grid Infrastructure, National Highway Infrastructure, IRB InvITs. If you can just show all those names on the screens in terms of the stock price. Cube Highway Trust, Bharat Highway InvITs. These are a few of the names which are seeing some smart moves in today's session. What would you have to say, Mahesh? Would you be a buyer of any of the InvITs or REITs?
See, from REIT perspective, we are suggesting on listing day or applying from a primary market. From Embassy, if you're looking from Embassy perspective, I think Embassy could be a buying opportunity. IRB InvIT, if you're looking from in any lower, that could be a suggestible. But yes, from a REIT perspective, we are suggesting on primary market on issue subscribing.
Okay. So that's with regards to where your InvITs and REITs go, but completely out of time. Thank you so much, Osho. Thank you, Mahesh, for joining us on the show. That's all that we have on this edition of Profit Buzzers. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app. best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Hello and welcome. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar. Well, if you look at the markets, both Nifty and Nifty Bank Index are off from the day's highest point, but we're still managing to hold on to the green. Nifty is up around 45 points in the trade, while Nifty Bank Index is up close to 100 odd points. But let's go across to Hiral to understand what's been buzzing when it comes to the small cap segment.
Right, thank you so much, Somit, for that. You know, it's interesting to see the markets are actually coming off, and that's the trend that you're seeing in terms of the broader markets as well. If you see the mid-cap index and then the small-cap index, you'll see the kind of downtick that has come in. So if you see the mid-cap 150, now it's already gone into the red, trying to make its mark back into the positive. Similarly, if you see small-cap 250 as well, down to the tune of 0.2%, so completely the uptick that has been sold into now. Let's look at individual names which are actually buzzing in trade. Poonawalla FinCorp. Now that stock is up almost 12 to 13% on the back of the promoter stake increase. Apart from that, if you have names like Cohance Life Sciences, a block deal that happened on this one, 5.5% downtick coming in on a Cohance. Newgen Software and the other IT companies are buzzing in trade as well, and there's just a sentimental move on the back of the Fed rate cut that has come in. Zen Technologies is another one which is seeing gains of almost 4 to 5%. Defense has been in focus. Tata Investments seeing a strong surge in between, and it's actually from the day's lows receded to almost 6.5% in the last in the last hour, I think, one and a half hour of trade. Let's look at other names. Poly Medicure, 4% up move coming in. Again, no major news on this one. Volume's pretty okay as well. You have HFCL, 4.5%. In fact, HFCL last couple of trading sessions has been seeing a good volume build up as well, and the strength has been pretty okay with regards to HFCL. Prism John, 14% up move coming in on this cement maker. Let's look at the other names. Shalimar Paint, 12.5%. So again, you know, your ancillary real estate companies are the ones which are probably seeing some bit of a buzz right now. High-tech gear, I think it was high-tech drilling that we were looking at. So high-tech gear again, I mean, it's a very low volume stock, so not the one that we want to consider. Let's look at a few of the other names which are buzzing in trade. Bajaj Consumer, 9 to 10% kind of an up move coming in on this consumption major as well. Nelco is another one, some news flow on this, and that's the reason why 7.5% up move, where they would probably make a potential entry in the telecom space in terms of providing services. DCM Shriram is seeing profit booking today. Yesterday also was under pressure. In terms of other names, if you have to look at Sarda Energy, that stock is also at the day's lowest levels. So Somit, clearly, you know, a lot of newsmakers, Yatra, which I've just missed right now, is another one as well. And some moving on volumes, no major news flow coming in there. But I think individual stocks which are seeing a lot of action in the broader markets versus what the indices are doing.
Well, thank you, Hiral, for that extensive market share when it comes to the small cap segment. With that, let's move across to our first management on the show today, Nikhil Bhutta, the whole-time director of EFC Limited. So, sir, firstly, to start off with your main segment, that is the leasing segment. Now, that contributes around 63 to 64% to your top line. But what is the kind of growth that you're expecting from this segment going forward, and what are the factors that will lead the growth here?
Thank you, Somit. Yes, the leasing business, which is one of our main vertical, which has been contributing about 60%. Now, if you see, we are expecting it to grow this year by about, adding around 20,000 seats or more than about 1 million square feet. And the growth that what we are seeing is, obviously in the small and mid-sized market, the GCC growth, and the kind of leasing requirement in the market, which has really been gearing up. It is really supporting the the growth potential in here. So I think this year we'll certainly be able to add more than about 1 million square feet with about 20,000 seats plus in this vertical. And that's the kind of number that we are really looking at in terms of taking it forward at least for the next 2 years.
So this 20,000 plus seats or 1 million square feet of area that you're planning to add in FY26, what is the kind of capital expenditure that will be required for this? And even after this capacity addition, what will be occupancy levels?
So, 2 questions on the occupancy level. We are very, our model is very clear that we want to operate at an average occupancy of about 90%. And that's what we've been maintaining all across because, in our business model, we are very, kind of mindful of the fact that the model has to become profitable and the margin has to be at the best. And you can only achieve it if your, the occupancy levels are high, number one. On the capex side, if you see our model is in that sense is quite low capex from a fit out cost is involved because we generally ensure that we take a furnished property from the landlord. Hence, the fit out is normally carried out by the landlord. So whatever the fit out related expenses, the capex which goes in, this goes on to the books of the landlord, and then the landlord charges us in form of a rented property rent. So in that sense, for us, it gets converted into an OPEX. But, out of the total seats that we add, about 10% of the seats that we may need to do a capex on our own. The rest, 90% of the seats that we kind of add up in a particular financial year, that the capex are always done on the books of the landlord. And hence, it rather comes in as an OPEX on the rent payment side to us and not as a capex investment for us.
Right. I believe your occupancy level is around 90% currently. So will that number be maintained even after the capital expenditure addition?
Yes, that's what I'm saying. The capital expenditure will always remain in this manner only. That, like I said, about only 10% of the total seat addition would require. So, not more than about 12-15 crore of capex on account of the fit out related expenses, which will go in on an annualized basis. Obviously, there are capex relating to providing advances, deposits, in booking the right property in the right micro market. But with regards to the fit out related expenses, like I said, about 12 to 15 crore is the max that we really spend on. Otherwise, all those capex for adding the rest of the seats, about 90% of the seats are always done at the cost in the books of the landlord. So we don't need to incur those expenses. At the end of the financial year, probably we are aiming at touching anything around 75%. Yeah.
Right. So the design and build model, which contributes around 33% odd to the top line. Can you explain what exactly is the business model here and what are the kind of margins that we see here?
So design and build model is here. What we do is we do a turnkey contracting for any commercial space development is concerned. Once the post-construction activity has been carried out by us, which includes everything from designing, from doing an MEP work, from plumbing, electrification, and to do the complete furniture fit-out related work. So complete end-to-end solution is provided post-construction of any commercial property. And that entire division, this design and build vertical today, is carried out various type of contracts, whether it is not just the office infrastructure, but we also develop education institutes. We also develop IT parks. We also develop, research centers. We also develop health centers. So, a varied kind of design and build commercial activity has been carried out, primarily with large enterprises, contracts which are generally more than 7.5 crore, 10 crore plus, and even going up to 100 to 200 crore single contract value. So those are the kind of business that has been carried out under DNB. We do across India, and the growth potential in this segment is phenomenal. We've been growing almost at a more than a rate of 60% YOY, and that's probably the guideline that or target that we have in terms of growing 60% YOY for next 2 financial years as well.
And margins, sir, at what around what range are the margins?
So margin, the average margins are around, around 23 to 25% in this segment. And that's what we've been realizing over these years.
Okay. Now, if you look at the furniture segment, which is the newest business segment of yours, it contributes hardly around 3-5% to the top line. But how does this work? Do you buy the furniture? Do you make them as per requirement? And what is your current order book when it comes to this segment?
Absolutely. So I think this division is really exciting for us, and it is really adding a lot of value to the overall, the ecosystem that we have developed, and it is rather completing the entire real estate as an ecosystem that we are trying to provide in the market. We have a 3-acre land over which the factory is set up, where we manufacture the furniture, and we manufacture woodwork related work, the metalwork related work. We do, all the sitting systems. So we cater to different types of industry, whether it is hospitality, whether it is residential furniture, whether it is commercial furniture requirements, modular furniture requirements. Today, the kind of the market segment that we cater to is we do exports, we do projects, we do institutional, but private institutional business. As of now, in the first the first quarter and the second quarter, total order book we are running is around 40 to 50 crore rupees. And we are expecting that, this financial year we'll be able to close substantially well and going with the same run rate. Our total capacity at the furniture factory is around producing goods worth rupees about 275 to 300 crore. And I think this financial year we should be able to at least achieve a capacity level of about 40 to 45%. This being our, practically the first full financial year, the factory will be functional, because, this business started last financial year, almost in the second quarter or second half of the financial year. So this will be the first financial year we'll be achieving the, annualized business. And like I said, we'll be able to achieve around 40% of capacity utilization.
Right. Also, I just wanted to understand how much will this segment contribute, say 1 year down the line? Currently from 3%, how much can the contribution increase?
We are certainly expecting this segment, at least in the next 1 to 2 years time, to increase it from 10% to around 20%, with the kind of business plans and the growth plans that are already in pipeline. So I think by next 2 years, maybe this segment should contribute at least about 20% to the top line.
In the first quarter, you have added around 3 new properties when it comes to the leasing segment. In second quarter, how many properties have you added, and what is the target for FY26 and FY27?
So in the second quarter on the leasing business, we have added about more than 5 properties. And, and for the target, like I said, for going next 2 years, we are very clear that we'll keep adding the same about 20,000 seats year on year, about 1 million square feet. And, that will kind of be average price realization would be anything around 7,500 to 8,000 rupees per seat per month. So that's the kind of target that we are keeping for ourselves for next 2 financial years, adding 20,000 seats plus every year on year.
Right. And which geographical areas are you exploring?
So as of now, I mean, we operate in 10 major cities, and we are still going to remain more or less around these 10 cities, which is basically Mumbai, Pune, and then on the southern side, Hyderabad, Chennai, Bangalore, and on the northern side, the entire NCR belt, and also Kolkata, and a little bit on the Ahmedabad.
Right. And lastly, sir, any plans of fundraise?
Not as of now, not immediately.
Right. Well, thank you, sir. Thank you for joining us and explaining your company's growth prospects going forward. Well, with that, let's also welcome in our guest for the show today, Astha Jain, Senior Research Analyst with Haim Securities. Astha, you heard the management of EFC. How are you looking at this company? Strong growth prospects, at least that's what the management is saying. 25,000 seats is what they will add every year, at least for the next couple of years.
Right, and that too organically in FY26, that is the major point. And what we are seeing that they are able to show growth in their core division, which is the managed office space, along with the strong, order book which they are having. So I think order book with the capacity expansion will definitely, ignite the growth going ahead. And hence we are also positive on this counter. But I'm not recommending buy as of now. Hold is a strategy which we are recommending for this counter with a price target of of around 355.
Right. Well, another stock that remains in focus is Bajaj Consumer. That stock has also announced its buyback. Let's get in Mahima with more details on why the counter has been buzzing in trade.
Right, so Bajaj Consumer Care is basically engaged in the business of cosmetics, toiletries as well as personal care products. Now, if you take a look at the stock performance in the last 6 months, there has been a spike in the counter, around 59% of upside that we've seen in the past 6 months. Year to date also it's up 27%, but 1 year the stock has not done anything. It's been flat. Now, if you take a look at why probably this buzz could be, it's because the valuations in the entire FMCG staple pack, if you take a look at the peers, Bajaj Consumer turns out to be the cheapest one amongst all. For example, Bajaj Consumer is trading at around 29 times versus an Imami at 32 times, Zydus Wellness at 51 times, even Jyoti Labs trading at around 32 times. Now, with regards to where financial performance is concerned, Bajaj Consumer has not done much in the past 5 years. The 5-year sales CAGR has been at around 3%, 5-year profit CAGR has been around -8%. But in terms of recent news, they have rewarded their shareholders with a buyback. Around 4.69% of the stake of the company was done via buyback. Demerger, of course, of their manufacturing division of Vishal Personal Care has also happened, and they've also onboarded Mr. Naveen Pandey, who has taken the charge as Bajaj Consumer's MD very recently, and also did his first con call in Q1 FY26 as well. So probably all of these things panning out to be positive for the company, and that's why probably we're seeing the rally in the counter.
Right. Astha, have you looked at Bajaj Consumer strong up move that we have seen? The company is also buying back its own equity, which again will provide some kind of support to the share prices.
Right. Definitely, this move can be a positive trigger for the Bajaj Consumer, and we can see a further upside from here. Maybe 288 to 290 are the levels which we are setting the price target for this counter. Now, talking about the fundamentals, also what we believe that what we have seen that there was a growth in the almond drop hair oil, and there is some sort of a flat volumes and a minor growth can be witnessed there. But going ahead, what we believe is that going ahead with the fall in the commodity prices, and there is a better mix which will definitely help the company in driving its margin, and expansion is also on the card. So I think overall we find this counter attractive one and recommending a hold as of now, because today it has seen a sharp jump. So right now 288 to 300 are the levels which we are setting as a target for this counter.
Right. Another interesting counter in trade today is Supreme Holding. The market capitalization of this company is close to around 350 odd crore rupees. But the company has is looking to develop a real estate project with a gross development value of more than 2,500 crore rupees. The stock is up 10%. Let's get in Varsha with more details on the counter.
Well, thank you so much for that. So yes, as you rightly said, the stock is buzzing. Now this is on the back of a company filing an application for necessary permission to develop its land in Panvel. Within the gross development value of it will be around 2,500 crore. Now this is of course contingent on the regulatory approvals and the future market conditions. But if I were to talk about what this company does, so they are into real estate business. They are engaged in development of commercial and residential projects, and has done residential development in Pune and Mumbai, and especially in Panvel. Onto the stock performance, if I were to talk about, the stock is up 10% in trade today, and volumes are at almost 11.6x of its 30-day average. And in the 1 month, if you see, the stock has seen a good growth of almost 17%. So overall, because of this filing of application and considering the future project of around 2,500 crore is what making this stock go bust today.
Right. Even if you look at the FY25 performance of the company, the revenues were down around 8%, but EBITDA jumped 74%, while margins expanded by around 816 basis points on a YY basis. The net profit number, that was up 40% at around 10 odd crore. Astha, have you looked at this counter, Supreme Holdings and Hospitality? The announcement looks quite interesting here.
Yes, it is quite interesting, and that's why we are positive on this counter with a price target of 95 to 100. Now, talking about this counter, yes, they have got, they forayed into the real estate sector in 2011, although this company was established in 1982 only, but they forayed into real estate space in the 2011. And now they have a major, focus in the Panvel and the Pune area. And in fact, if I talk about the area of the the development which they have completed it is at around, if I'm right with my figures, 2.5 million square feet. And in fact, they're one of the flagship brand, which was the name, as I suppose, Belmac, is also, a very, very strong flagship brand. And it is into the, projects such as Belmac Residency or the Belmac Riverside is gaining strong, strong traction. So, I mean, the company is looking fundamentally very strong. And with this kind of announcements, it is well poised to move upside from here also, setting a price target of 95 for this counter and recommending a hold strategy for this.
Right, Anlon Healthcare is the another counter that has been buzzing in trade, and let's get in Varsha with more details again on the same.
Well, yes, so the stock is buzzing on the back of volumes. If you see, the volumes are trading at 2 times of its 30-day average. Onto the stock performance, if you see in the last 5 days, company has given almost 29% returns, while in the last 1 month the stock is up 52%. So good returns that the company has seen. Now, what does this company do? So they manufacture pharmaceutical intermediates, which is used to manufacture APIs. They also manufacture APIs, which are the main ingredient or main salt, which is used in your drugs. They are also present in the nutraceutical and also in personal care products. Onto the segmental performance, API contributes around 40% to the revenue. Formulation, that is the end product, the end medicine that you eat, contributes almost 53%, and the rest is by nutraceuticals. Majority of their products, if you see, or majority of their revenue comes from domestic business, that is almost 96% of revenue comes from domestic market and rest for exports. Onto the expansion plans, because this is a recently listed company, so they're gonna build a new plant in Gujarat, which will have an installed capacity of 700 metric tons per annum. And recently also, if you see, they've entered into custom manufacturing services, for complex chemical compounds. So overall, a good company having a good expansion plans, but the stock is buzzing today on the back of strong volumes as of now.
Thank you, Varsha, for that. Astha, any views on Anlon Healthcare? They have a good, strong capacity addition, expansion plans. That's what Varsha was highlighting here.
Yes, in fact, we have covered this IPO also because it has come on 26th. I think it opened on 26th August only, and the price band was at around 86 to 91. So we have seen a sharp rise from those levels, because even we have also recommended subscribe. So from the 91, it has now moved till the level of 136. Now talking about the fundamentals, we find this counter to be very attractive on the basis of the strong product portfolio with more than 65 commercialized products which this company has is having, and in fact 28 of their products are were into the pilot stage. So we find that to be very good, because it is a strong scalable business model which this company has established over the period of a time, and they are operating also into the high entry barrier business. So looking after the fundamentals, we are quite positive on this counter. When the IPO came, they came at a price to earning multiple of 23, and still I think it is quoting a reasonable level of between 30 to 35 price to earning multiple. We still see more upside from here for this counter, setting a price target of around 150 to 155 for this counter in the medium term, recommending a hold as well as buy for this counter.
Right. Well, shifting focus to infra space, SCPC is another counter that has been buzzing on the back of order win. Let's get in Jasmeet with more details on this.
Well, right, yes, thank you for that. Well, rightly said, the stock nearly hit 9% intraday high and currently sitting at 7%. Well, this is on the back of order win. Company gets an order worth 442 crores, which is nearly 90% of the top line. The order is from the Water Reservoir Department of Delhi, and the order is for providing of a scheme under the irrigation scheme. Now, well, the order is to be completed in the next 24 months. If you look at the key financials of the company, the FY25 revenue stands at 600 odd crores versus that of FY24 at 560 odd crores, and the company have also had a margin expansion. So something to watch out how the company trades out the Q2 coming forward.
Right, and just with Tiger Logistics is the another counter that you have been tracking today. The stock has been buzzing in trade. It was up more than 10% at least in one point of time.
Well, right. You're well rightly said. The reason why the stock is buzzing in trade is because the stock got introduced in NSE recently. If you look at the performance, the market cap's on 550 odd crores and currently you're sitting in BSE. With today applicable Tiger Locks as Tiger Locks code is getting applicable at NSE, and that's the reason why it's trading. If you look at the company, it operates in basic logistics. They deal with freight as well as project as well as cold logistics systems. Now, talking about the demand, the company says there were huge demand in exports where nearly 33% of demand has gone to increase by YOY basis. As of Q1, company achieved nearly $197 billion worth of exports when it comes to their logistics sector. While also with the segment one, the multimodal segment forms the biggest and the largest segment of the top line, nearly 94% of it, and rest thing comes from transportation and other departments. While the key financials to look forward is for the Q1, the revenue stands at 100 odd crore versus that of 101 crore in the previous quarter, and the margins have remained flat at 5.5 odd percentage.
Right. Asta, coming to you quickly, your view on both the counters, Tiger Logistics and the other one that Jasmeet was talking about, SAPC.
So talking about, first of all, SEPC, we are positive on this counter from the short-term point of view, giving a price target of 14 rupees to 15 rupees. We all know that it is a leading, EPC company, and they have a diversified presence across, water and the municipal services, roads, industrial infrastructure, etc. Now, talking about the financials, also financials have seen a good jump on the year-on-year basis. So we find the financials on a very strong side because their net profit, it just soared by more than 100% in the Q1 of FY26. Along with this order win, it is a good company to stay invested in with a price target of 14 rupees to 15 rupees. Talking about Tiger Logistics, now talking about this counter also, Tiger Logistics, we believe that this company, which is into the logistics space, has posted a decent financial performance because what we know is that some concentration risk is there because top 5 customers of this company is contributing around 51% of their revenue. So that is the major issue, and that is why we are just recommending hold on the Tiger Logistics counter with a price target of 59 rupees to 60 rupees.
Well, thank you, Asta. Thank you for joining us and giving us your perspective on the stocks that we discussed. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app. The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Welcome, you're watching India Market Close here at NDTV Profit. I am Mahima Vachajani. With me is Hiral Dadia and Neeraj Shah. Let's take a quick look as to how the markets are doing, off from its day's highest point for sure. The Sensex has in fact almost slipped 220 odd points. The Nifty also has seen quite significant downtick below the 25,400 mark now, about just 0.13 odd percent, just 33 points of gains is what we are seeing. So expiry playing its part when it comes to the benchmark indices. Let's try to pull up the Nifty heat map because that will tell us as to what counters are actually seeing profit booking today, and some auto names are most certainly seeing profit booking. Tata Motors is down by about 1 odd percent, Coal India down 1.7%, Bajaj Finance down by about 1.2%, ONGC, Ultratech, Indocent, Tata Consumer. So some banking names also seeing a tad bit of pressure, especially names like Indocent Bank. In terms of what is actually doing well in trade today, includes your names like HDFC Life up 2.5%, followed by something like an Eternal, which is up 1.7%, Sun Pharma, Infosys, Wipro. So IT names fairly doing well in trade today on the back of the US Fed rate cut. Let's try to pull up the sectoral heat map and see how sectors have fared throughout the day, and at this hour what are they doing. Nifty Pharma up 1%, followed by Nifty Healthcare, Nifty IT in the green, but something like a Nifty Defense is seeing profit booking today. In terms of the downtick, it's down by about 0.6%. Nifty Media down 0.4%. PSU Banks has turned in red, down by about 0.3%. Nifty Auto also in the red, down by about 0.2 odd percent. Let's try to pull up the advanced decline ratio and see how that chart is faring, because that will tell us as to how the broader end of spectrum is looking like, and it is narrowed quite a bit. In fact, there was a now the declines are overpowering the advances, so the bears are in fact more than the bulls right now in the market. We've got around 1,250 odd declines versus that of 1,000 odd advances, so slightly more than that 1:1 ratio. But that gives us a picture as to how the broader markets are doing here, because largely mid cap 150 is flat, but the small cap has slipped into the red.
Absolutely, small caps have slipped into the red, and what's interesting is the trends that you're picking up in terms of your individual sectors as well. If you pull up the IT sector, that has started to see profit booking, and that's absolutely visible on the screens right now. From the day's highest levels, it's actually inched to the day's lows right now. Actually, pharma has picked up because of news flow that's coming in with regards to Glenmark, Biocon, positive commentary coming in from a city for Sun Pharma as well, and the pharma index is at the day's highest levels. Let's quickly look at the sectoral heat map, because that will tell you the other individual sectors which are actually drooling under pressure today. What is losing out is energy, media and defense, which is seeing profit booking. Let's quickly look at the broader markets, the mid cap and the small cap index right now, and individual stocks over there. Names like Prism Johnson, strong up move coming in on a Prism Johnson in trade. Poonawalla FinCorp as well on the back of promoter stake. That stock is up 12 to 13%. So strong moves there. In fact, Restaurant Brands is seeing some good moves. Tata Investment, Embassy Developers, Poly Medicure, HFCL and LIC Housing. Cohance trading under pressure, and this is on the back of the block deal that has happened. DCM Shriram, no major news flow, but yesterday that stock was up, today seeing profit booking as well. Varroc Engineering is another one that you should be looking at, and Motherson Sumi. In fact, we did speak to the management of Motherson Sumi as well today on the back of the GST rate cuts. Newgen and Zentech, both of these counters are also seeing some strong moves in today's day of trade. If you pull up both these charts, and you will see what's coming in on a Newgen Technologies as well as a Zentech. Newgen Software as well as Zentech. Shalimar Paints is another one which is seeing some smart moves. Bajaj Consumer is another one which is also seeing some smart moves in today's session. Shalimar Paints at the day's highest levels, Bajaj Consumer, similar gains. But let's also get in Kush Bora, founder at kushbora.com. Kush, welcome to the show. Profit booking has started to come in terms of today's session after that good day of trade. What are you tracking in terms of levels on Nifty 50 as well as Bank Nifty, and what should that strategy be if someone has to trade there?
Sure. Hi, Hiral. Very good afternoon to you and to all the viewers. Well, 11 sessions out of 13, we've had gains on the Nifty. But despite that, there weren't really any signs of overheating, in the sense that if you see the RSI, even if you see the PCR, which went close to 1.25 odd levels, but then no real overheating. But for the last couple of sessions, we maintain that, buy on declines, buy on dips is a better strategy rather than chasing this momentum. And you're seeing, some of that play out today, where Nifty is off nearly about 200 points from the high point of the day. Bank Nifty also about 400 points, 350, 400 points from the high point of the day. I think this is perhaps going to play out a little more. I think this is a good sign. A buy on declines is still a better strategy. And also to understand that the PCR is actually gone from 1.25 to about 1.05. Now, while that may be a very healthy sign, if you actually break down the data and look at the internals, it's because of very aggressive and very heavy call writing at 25,500 and 25,400 levels. And the put bases are starting to now come off a little, suggesting that, near-term profit booking, near-term resistances are starting to creep up on the Nifty. However, the medium-term trend is still a positive. So yes, if you do get Nifty close to the 25,150, 25,200 zone, you should look at buying around those levels for a positional long trade. Bank Nifty, 13th session of gains, if it closes in the positive today. So some overstretched levels, at least on the hourly charts, visible. Here too, if you get it around the 54,800, 55,000 levels, you should look to re-enter. For now, it will not be a bad idea to book profits, take some money off the table and buy again at lower levels.
Kush, what about your top picks for the day, considering the markets are a bit volatile right now?
Well, stock-specific action is a plenty, and as it happens, both of my calls are from both the sectors that are doing rather well today. Laurus Labs, that's the first one. This had a good period of consolidation, 7 sessions of consolidation. Today it went close to the 20-day moving average, but rebounded smartly from there. So if you want to create a fresh long position, 925, 940 are your targets. 895 is where you place that stop loss. But I think this stock is poised for much higher levels as well. The other one from the tech space is Tata Tech. This one too has had a very good run from 650 odd levels, continues to gain ground. Volumes also fairly decent. Momentum indicators still pointing north. So 725, 740 are your near-term targets. 700 is where you place that stop loss. So Laurus Labs and Tata Tech are the call for the day.
Okay, interesting names. In fact, pharma as a sector is also at the day's highest levels as we speak right now. So Laurus Labs also fits in pretty well there. But moving on to the stock of the day segment, we're putting the focus and spotlight on Poonawalla Fincorp. It's trading with gains of nearly 12% at the day's highest levels as well. And this is after the promoters have gone ahead and increased stake in the company. Vansh is with us to tell us more. Vansh, one aspect is the promoters increasing stake, and that is something which is giving that comfort level to investors as well, because they're betting big on their own company. But what else is that you're picking up?
Yes, so as you rightly mentioned, that the promoters have purchased about 3.3 odd crore shares at a price of 452 rupees per share. Now the stock closed yesterday at about 447 rupees per share. And also if I talk about the promoter now, the promoter Rising Sun Holdings have bought the stake worth rupees 1500 odd crores in the company. Now also if I talk about the stake of the promoter, it was at 62.5% as of June 2025. Now post this infusion, the stake will further rise to 64 odd % in the company. Now also if I talk about the AUM, that is the loan book of the company, there has been a strong 55% CAGR over the last 2 years in terms of the AUM as well, which has grown from 17,000 odd crores to 41,000 odd crores. So massive growth in the AUM is what we are looking at in terms of Poonawalla Fincorp. Let's also look at the capital adequacy ratios. Now there has been some shrinkage in terms of the capital adequacy ratio. It has shrunk from 35% to 20 odd %, but not a concern as this is on the back of the increase in the total assets for the company. So capital adequacy ratio also remains a key factor to watch out for. Now let's also look at the Q1 FY26 management commentary. Now the management the infusion of the stake by the promoters was already planned, and the management expects the FY26 AUM growth to be about 35 to 40%. And also the NIMs, they expect the NIMs to be revert in the next 3 to 4 quarters towards the 9% mark as well. And they have also guided for a credit cost about 1.5 to 2%. And they expect a steady ROA that is of 3 to 3.5% by FY28. So clearly all factors which are continue to be positive for this particular counter. Also, if you look at the analyst recommendation, we have 4 buys, 1 hold and 2 sells with a return potential over 11.8%. So clearly all the positive developments that are shaping up for this particular counter as well.
And another return potential of another 12% that you're watching out for from the current market price. Thank you, Vansh, for that. In fact, before we take a question with Kush, let's quickly cut across the press conference of Maruti Suzuki, where they've announced price cuts across all segments and cars. Let's listen in.
0.49900 rupees from 22nd of September. I would like to bring one important point here, that other than the GST, we have further reduced the prices so as to make the car more affordable to the two-wheeler customers who want to upgrade to a four-wheeler. So the price reduction is up to 1.29 lakhs, which is almost reduction has happened from the tune of 12.6% to 24% across different variants. Alto K10 starts at now 3.69900, and here also the price reduction is to the tune of 1,07,600, and the reduction is up to the tune of 20% as compared to the pre-GST era. Celerio price starts at 4,69,900. Here the price reduction is 94,000, and here also the price reduction on some variants is up to 17%. I would like to just bring the kind notice of all our media friends that due to the GST, when we reduce it from 29% to 18%, the net effect of GST is 8.5%. But as I'm sharing with you, we have gone for further special offer to our two-wheeler customers so that they can upgrade to a four-wheeler. And WagonR price now starts at 4,98,900. Here also, the price reduction is to the tune of 14%. Just one point, that this is going to be a limited period offer, and we will be reviewing it by the end of this calendar year. Moving to next. To premium hatches and sedan, this is a very nice opportunity for our entry-level customer to upgrade to the premium hatches and the sedan. Here the Ignis price starts at 5,35,100. The reduction is to the tune of 71,000. Swift starts at now below 6 lakhs, 5,78,900. Reduction is 84,000. Baleno also starts just below 6 lakhs, 5,98,900. Reduction of 86,000 rupees, and Desire is starting at 6,23,800. The reduction is to the tune of 87,700. Now next, we will come to the van and the MPV category. Eco now starts at 5,18,100. Here the reduction due to GST is 68,000. Ertiga starts at 8,80,000. Reduction is to the tune of 46,400. XL6 starts at 11,52,300. Reduction of 52,000. The reduction in price of Ertiga and XL6 is to the tune of 3.5%, because the GST correction is happening from 45% to 40%. This reflects to 3.5%. And Invicto, now the price starts at 24,97,400, a reduction of 61,700 rupees. Finally, coming to the SUV segment, which is the most, I think, the hot segment right now in the auto industry. Bronx now starts at 6,84,900, reduction of 1,12,600. Brezza 8,25,900. Same reduction like Bronx. Grand Vitara 10,76,500, reduction of 1,07,000. Jimny 12,31,500, reduction of 51,900. And Victoris, we just announced the price 2 days back, starting from 10,49,900. So we thought it is very important to share with your media friends that this is an initiative which is being taken by Maruti to increase the motorization and to increase the flywheel of the Indian auto industry. So thank you so much, and happy to take any questions. Over to you, Radvi.
Thank you very much, sir, for sharing in detail. Sir, our first question is from Sharmishta from Economic Times. Sharmishta-san, you can go ahead and ask your question, please. You will have to unmute yourself.
Yes. Hello. Hi, Partha-san.
You know, after the commentary, the stock is at the day's lowest levels as we speak, and the prices have been cut on all the cars. Small cars were facing challenges due to high prices. That is what Rahul Bharti has indicated so far, and they feel the need to help customers upgrade to four-wheelers as well, and this would be a positive move. So volume trajectory with regards to the small wheeler space is going to be interesting. 12 to 24% is the kind of cuts that you are watching out for. So, you know, the rates is something that we will try putting out as quickly as possible on our websites, and you will see that data. But very quickly, Kush, Maruti Suzuki, the stock at the day's lowest levels, the price cuts that have already been announced. And before that, we were talking about a Poonawalla FinCorp, which is seeing some strong momentum today. What would you do with both these counters?
Sure. So let's start with Poonawalla. I think there was a time when this became a fairly discovered story. A lot of retail and HNI interest had built up into this, but the stock massively underperformed, and the prices that you're seeing now were last seen in early 2024. So for more than a year and a half, the stock's not really gone anywhere, right? So if you had that kind of patience, it's not a bad idea to now take some money off the table, assuming that you bought it at same or maybe slightly lower levels. But since the momentum is building up and the volume surge has been massive on the back of the buying that you mentioned, I think this has to be a partially book profit and partial hold kind of a setup. So yes, you might want to exit partially right now and hold the rest of the position. As far as Maruti goes, I think the view for Maruti and a lot of other auto sector names is very similar. Is that they've had a good run up. The boost that had to come in, did. The price action also followed. Now you wait for fairly healthy declines, and you've not seen those by a whole lot. So Mahindra & Mahindra, Maruti, some of these stocks, as and when you see anywhere from 3 to 5% cuts or maybe slightly more as well, is when you re-enter. As of now, if you have those positions, you book profit and wait on the sidelines.
Okay, so that's with regards to where your auto name like Maruti Suzuki is concerned, and as Hiral mentioned, at its day's low point as we speak. But shifting focus to the IT pack, the sector of the day arguably has to be IT, and this is on the back of the Fed rate cuts. And to discuss as to how this Fed rate cut stands to benefit IT, we are joined by Sushovan Naik, who's a research analyst at Anand Rathi Institutional Equities, joining us now. Mr. Naik, hi, good afternoon to you, and thank you so much for joining us. Your first take on this Fed rate cut and as to how this benefits the IT sector as a whole, and going forward, which pockets do you think this is set to benefit the most?
So, thank you so much. I hope my voice is audible.
Yes, it's audible.
So, so basically, if you look at the Fed rate cuts, the decline in interest rates would possibly help in improving the discretionary spend as far as the US enterprises are concerned. And obviously, that would be something that would be beneficial for Indian IT companies, right? And the ones which are most susceptible to discretionary spend, at least in the large caps, we have companies like Infosys and LTIMindtree, which would be more susceptible to the discretionary spends as such. And the other sector as such, which would potentially benefit, would be someone like a BFSI and a mid-cap company like Emphasis would potentially be a beneficiary because of the exposure to the BFSI segment there, because they have almost 67 to 70% exposure there, right? So that is the way I would look at it from a impact on the Fed rate cuts are concerned.
Sushovan, taking the Fed commentary into consideration, yes, it is a sentimental booster right now. But how do you see translation happening in terms of business? Because on the back of Q1, a lot of companies refrain from giving their guidance as well because there has been uncertainty. When the translation of this rate cut happens, and by the time the companies really see that spend picking up, see that discretionary IT budgets are increasing. Do you see that coinciding with the valuations right now, coinciding with making a buy call on any of the companies?
So again, here my only submission here is we would rather look at IT companies into two buckets. One is the large cap IT and the mid cap IT buckets, right? So as of now, when you look at the Fed rate cuts, 25 bips have already been done. What we expect, I guess, would be another 50 bips. So at the end of the day, the beneficiaries would be the Indian IT companies which are having more focus on the discretionary spend and BFSI focused plays. Now, if you look at the international IT companies which have released their results, right, in the last 2-3 months, effectively what is coming out very clearly is that BFSI has been one secular play that has continued to benefit. And that also gives us comfort on the BFSI focused plays, right? I think that is the way I would look at it. Within the large cap space, obviously the valuations are comfortable, the free cash flow yields are comfortable, and that is something that gives us comfort. And the ones within the large cap space which are more susceptible to discretionary spends are the ones which would benefit, and the names which I mentioned. Within the mid cap space, obviously the way we are looking at it is the BFSI focused plays are the names which we believe would benefit, and that's why I'd mentioned about emphasis in a way purely on account of the Fed rate cuts, right? So that was the way I was looking at it. I don't know if this answers your question, but this was a thought process.
Mr. Nayak, just want to understand as to how fast do you think, because this is not just one rate cut that we're expecting, right? Analysts are expecting 2 more rate cuts in this year and 1 more rate cut going ahead. How fast do you think will this accelerate the process of maybe hiring or projects that these Indian IT companies will get? And on the back of that, do you think the second half of this financial year is going to be better for these IT companies?
So even in our thematic, when we had released it about 2 to 3 months back, that was in April 25. So we had mentioned the same thing, that Q1 and Q2 is expected to be muted, right? Because of whatever is happening from an AI standpoint, from a tariff standpoint, all of those things would have an impact. But at some point of time, there will be stability as far as these tariffs are concerned, and enterprises which have been less focused on less focused on spending would at some point of time that would pick up, and that would potentially result in benefits flowing into the IT companies, right? So that is the way I was looking at it. And again, this is 25 bips now. Another 50 bips would further help the enterprises to possibly increase their spend, right? So that should translate into revenues for IT companies. Of course, if we take into consideration the fact that with AI coming in, right, there is a potential for revenue deflation that will happen for Indian IT companies. But historically, if you look at what has happened, all the technology transitions, initially there has been a lull, but after that, we have been very good at adapting to all of this. And that should basically translate into improved revenues for the Indian IT companies. But of course, for some period, there will be some amount of revenue deflation. The other thing is the discretionary spend has not been there for almost 2 to 3 years now. Unfortunately, that has now become a very cliched term. But over a period of time, we are hoping that the second half of this financial year, it should basically come back with a stabilization of the aforementioned factors, translating into improved discretionary spends and benefiting IT companies.
Okay. So Shishavan, at this point in time, if you have to look at the entire basket, and if someone really wants to start nibbling in terms of IT companies, which would be your top large cap pick and which would be your top mid cap pick?
Large cap picks, it would be Infosys and LTIM, as I mentioned. For us, it has been a large cap pick for almost 4 to 5 months now. And within the mid caps, we really like Emphasis as well as Mastech and a company called Happiest Minds. These were the 3 top picks within the mid cap space for us.
Okay, Mr. Nayak, thank you so much for giving us those insights and of course taking out the time and speaking with us at NDTV Profit.
Thank you so much.
All right, Kush, I'll come to you on this entire space. I know that you're not very bullish on IT, but considering the kind of move we've seen in the past few days and considering the Fed rate cut also, any positive momentum on any of these counters which are seeing some momentum now? Any IT names?
Well, no, I wasn't very positive, but I did maintain that from the risk reward perspective. It started to make sense to nibble into some of the names, especially the likes of Infosys. There was some positive price action, volume actions did pick up. So, yes, I mean, it did make sense from a risk reward standpoint, and had that view for a while. Even now, if you see with this kind of push, that has come about today, the Nifty IT index is at a near 2.5, 3-month high. So good positive traction going forward. What this will do is it will trickle down the positive price action for relatively smaller names as well. And yes, I was listening to Sushovan. Emphasis is on my list as well. Coforge is something that has now started to show some traction, taking out the resistance of 1800. And among the large cap, Infosys still continues to rule the roost. So if I were to pick, I think these three would be my picks from the IT space.
Okay, all right. So those are the picks where Kush is seeing some kind of momentum where IT space is concerned. But it's time for a very short break. But we leave you with an important word from Vikas Kumar Jain of CLSA. In fact, we spoke to him earlier today and asked him which sectors make a good bet right now. Listen in, as well as we'll be right back.
Some areas of discretionary, autos is one sector we went overweight a few months ago, before even GST came in. That could be one area. There could be other areas of discretionary as well. But I would say that selectively, even some staple names, wherever competitive intensity isn't that big, relatively, could still be doing very well. So I would say consumption in general should be the focus area for this tactical rally that we are talking about.
Got it. Vikas, what do you think of tech at large? I mean, does the Fed worry about the labor data mean that corporate health in the US may not improve, or is it to the other side? And therefore, could Indian tech perform on expectations of enhanced corporate spending in the US led by the Fed rate cut, or could it be the other way around?
So Neeraj, I think stock market mood will depend on how every announcement is taken by the Fed. Right now, the Fed announcement has been taken as perhaps an action taken at the right time before things go out of hand in terms of growth and unemployment. Therefore, it would be seen as something which should be able to keep growth at a reasonably strong level in the US. So I would say that it basically arrests the fear of a potential growth deceleration, which could have happened without the rate cut, is the opinion what the market has taken.
The interesting thing that I saw, and focusing on a domestic sector, was yesterday's call from your end on the upgrade, if I can use that term, on cement. Now, it's interesting, right? I mean, what's the base thesis? Is it that pricing power will come back now that the industry is consolidated? Because I think the last 10 years, the cumulative price is up, what, 5, 7, 10% maybe? So what's the thesis? Is it pricing or is it something else?
So it's multiple arguments over there. First is, slightly longer term argument. Depending on the larger players that you look at, and there's the upgrade that you're talking about was one of the larger cement players. They get into some kind of a moat around the end of this decade with the changing rules around mining and mining regulations kind of coming in. So that is something where they get into some kind of a moat. By that time, they would have increased their capacity quite significantly. So there's a host of this big capacity expansions which they will benefit from. But more from a near term, I think if you were to look at where pricing has kind of steadied and what we believe could happen in terms of typical seasonal pricing, there is likelihood that there could be surprise versus what consensus is baking in. Plus, even from a GST perspective, there are some changes that have happened, which kind of makes their position a little bit more justifiable.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
Welcome back. You're watching India Market Close, and we still have Kush Bora with us right now. Very quickly, if you see what's happening overall in terms of markets as well, a lot of chatter with regards to individual counters. We are nearly at the day's lowest level. 25,357 is an interesting mark to watch out for. In fact, last time also when we spoke to Kush, we were talking about 25,250 as being a strong support zone. But from here on, if you have to look at pharma as an index, Kush, strong moves coming in terms of the pharma pack. We're, I think, at the day's highest levels as well. Any topics on this aspect?
Here, as far as the index goes, I think this itself has given a breakout and a strong one at that. This is an ascending triangle breakout, which often results to further extension of the momentum that you're currently witnessing. So I would be surprised to see the index itself rise to 22,700 to 22,850 odd levels. So that's a very healthy sign. As far as the top pick goes, I think Laurus Labs, is a stock that we discussed at the start of the show, seems to be doing well, inching closer to the first target and the high point of the day. I think this is one stock that you can definitely keep on your radar. Momentum was anyway along with it. Now, Sun Pharma also starting to perk up. 50-day moving average being taken out after the month and a half. So this too could stretch the rally to 1685, about 1750 odd levels. And the low point of the day today around the 1625, 1620 zone should act as the stop loss.
Yeah, we also have Aditya Shah of Hercules Advisors joining us now. Aditya, on the charts, Sun Pharma and Laurus Labs is something that Kush is finding attractive. Anything fundamentally that you are seeing attractive in the pharma space where valuations are also reasonable?
So, for both companies, I don't think valuations are reasonable personally. So, from my perspective, I would look to buy, brand CDM or API space. That looks really very interesting. So, you can look at something like a Syngene or a Pharma, for that matter, DV Labs or Laurus Labs as well. where CRAM, CDMO, and API is the key to go forward in the future. But again, valuations are not cheap across any of these companies, and you have to slowly and steadily invest in these.
Aditya, just stay with us. I think some issue with your audio. Lotus Labs is your pick as well. In fact, even Kushpora has a positive view in terms of Lotus Labs. But let me head across to Jasmeet to tell us which are the stocks which are buzzing in trade today. Over to you, Jasmeet.
Well, right, yes, thank you for that. I have three stocks which are buzzing in trade today. The first one is Cohance. Well, the Cohance Life Sciences, if you see, the stock is down nearly 6% in trade. Well, this is after the block deal where the change in hands took place, about 34.2 million shares. That's roughly 8.9% of the equity. When you look at the previous news, initially, Juice Mineral Holding was supposed to offload 5.1% stake for almost 800 odd crores. And if you look at the holdings which he has back in June 2025, it stands at 33.34%. Well, that's the reason the stock is buzzing in trade today, and it's nearly down 6%. The next one is a brokerage known as HSBC on Page Industry. While the Page is down roughly 3% in trade after they maintain a reduced rating for the particular stock. While they have also cut the target price to 41,040 from 41,070 priorly. So what they say is the launch of the new segment of JKY Groove is not a potential move for the company, while they also say that the material cost is stabilizing, which is a good thing, but again increasing employee costs given the ramp up will lead to further reduction. While they also say that the cut in PAT by 3% on the back of weak demand. While they also mention that the GST rate cut will not cause much of a benefit for the company. The last one is Captive Infra project. While the stock is nearly up 3% in trade today, while this news comes after the company wins a project worth 1,500 odd crores. While the project is to build ultra luxury towers in Mumbai Mahalakshmi region. If you look at the order book of the company, it stands at 11,000 odd crores as of June 2025. So these are the three stocks in my radar which are buzzing in trade today.
Okay, Jasmeet, thank you so much for bringing us those details. Kush, anything on Capacite Infra projects up 1.8%, cooled off, of course, from its day's high point, but that's quite a significant order for them. You know, for a 2,800 crore market cap company, a 1,500 crore of order win is a big one. But anything on the charts that you're picking up?
Very interesting moves, and not just today. In fact, I think maybe market had a sense of it, or maybe it was just in line with the market moves that the stock's actually risen quite a bit from 280 odd levels in the last 10-15 odd sessions to where it is at today 325. Yes, you're right, it's off the high point of the dip, but I won't read too much into it. Market's also seeing some profit booking, so that was par for the course. But the kind of volume setup that it's had over the last 2-3 years and the massive surge on volumes that you're seeing today again does put it on a good footing. Also, there is a falling trendline resistance breakout that has come about today. So yes, a couple of indicators, checking the box for capacity infra. I would continue to hold on to this one if I had, and I would keep a stop loss near the 310 mark. Previously resistance, now will act as a support.
Okay, Kush, what about Cohance Life Sciences? Anything on the charts that you're seeing there?
Well, again, the price action is not as exciting. There has been, as Neeraj called him, my partner in crime, Parag Thakkar also had a positive view on this one on Monday. Right now, it's not translating into price action. So I would wait and watch. There is a strong support near the 880, 890 zone. That should be respected, in the kind of, fall that you're seeing today as well. But on the whole, price action hasn't really picked up as much. Volume action has, but on the downside. So I would wait and watch, see if the 880 strong support zone is intact and indeed it's held or not. Then perhaps it could start consolidating sideways.
Okay, that's Cohance. Staying with the pharma pack, a bull versus bear segment has Biocon. With the kind of upside that's coming in today's session, some bit of strength at the day's highest levels, gains of over 3%. But the approvals that are coming in from the US FDA, would that recommend a buy on the stock? Let's go to Varsha to understand the bull case and the bear case, and then we will take a commentary from our guest. Varsha, over to you.
Well, thank you so much for that. The stock is buzzing because Biocon's subsidiary, that is Biocon Biologics, have received two approvals from US FDA for two of their biosimilar products. But the stock is buzzing on that. But the interesting point here is already this market is, there are a lot of competitors who are already present into this market. 4 competitors have already launched the products. 6 more companies, including the likes of Dr. Reddy's and Teva, will actually, launch more products into this. So a lot of competition is already present. But the original drugs, if I were to talk about, because these are biosimilars, the original drugs have a sales of around $5 billion as of FY24. But for Biocon Biologics, the biosimilars is to have 85% of price erosion because of because of a lot of competition that these products have. So analysts are estimating almost $16 million of revenue for FY26 and $50 million of revenue for FY27. So also the upcoming launches of biosimilars, new biosimilars and GLP-1 products will be the next leg of growth for the company, will also reduce the revenue contribution for them. But US FDA inspections and will actually impact revenue growth if this comes into observation, or if some warning letter, so these are the potential risks that the company has. Moving on. Management is expecting double-digit growth, revenue growth for FY26, but near-term cost pressure will actually weigh on the generics business, affecting the overall revenue for this company. Next is, if you see the Syngene, which is then a subsidiary company for Biocon, so double-digit growth is expected over there also, but Syngene faces lower operating leverage and also higher depreciation from new facilities will impact the overall growth when it comes to Syngene. So overall, the Biocon is buzzing on this, the US FDA approvals for 2 of their products, but a lot of competition is already there in these products.
Asha, is the bull case stronger or the bear case weaker?
I would say bull case is stronger because you have to consider the GLP-1 products and the other biosimilar products that the Biocon is going into. And Biocon Biologics is the next leg of growth when it comes to overall, Biocon.
Interesting. So let's take that with Aditya Shah of Hercules Advisors as well. Aditya, welcome to the show. In fact, I'm going to take questions on 2 different counters with you. One is Biocon. Varsha just got to us the bull and the bear case scenario. The stock is seeing some strong moves at the day's highest levels. And another sector that you track pretty closely, you have a Poonawalla FinCorp as well, is doing phenomenal in trade on the back of the promoters' increasing stake. What would you advise investors to do with both these names?
So let's first talk about Biocon. Biocon has been investing very aggressively in the biosimilars business for the last 5 to 7 years. It's a capex heavy business, and it is now starting to show fruits over the period of next 5 to 7 years. So that is positive for Biocon, but this does not take away from the fact that Biocon is a capex intensive business, and the biologics business will continue to require cash. So from my perspective, as I was saying, I would tend to look at CRAM CDMO space or the API space where it is not as capex intensive, and the price erosion on biosimilars would be steep as more and more players continue to come into Biocon. So something like a Syngene or something like a Piramal Pharma or something like a Divi's and a Laurus look better to me. They are the top picks within this sector. That is on the pharma sector. Now on Poonawalla FinCorp. The company is continuing to diversify its book away from the unsecured side of the book to secured side of the book as well. So that is a positive. However, the valuation of the stock is extremely crazy. It is at about 4 to 5 times price to book. And I would not want to invest in a company where it is trading at about 4 to 5 times book. Mind you, just 1 or 1.5 years ago, they had a massive slippage on the book, and there's no guarantee that this will not happen again. So from my perspective, I would tend to avoid companies trading at about 4, 5, 6, 7 times price to book.
Okay. All right. So that's with regards to where both Biocon and Poonawalla FinCorp is concerned. But Kush, there is one more counter that's buzzing today, and this on the back of volumes as well. That's Prism Johnson, and it's up 13% as we speak. Good momentum coming in. Do you think that's sustainable?
No, I think this is a more book profit kind of a candidate. As you rightly said, the stock is 13% up even now. But if you see the high point of the day was 176. So considerable amount of profit booking already seen. This is perhaps like an exit opportunity for whoever's been holding on to it for some time. There were resistances and those are being taken out. But what I'm more concerned about is the kind of sharp fall that it's had from the high point of the day. So don't enter now. With the kind of big move that it's made today, it's already close to overheated territory, so risk reward ratio not favorable. All in all, no entry suggested right now. If you have a position, you're better off booking profits at the current level.
Okay, better off booking profits at current levels. That's the word coming in with regards to where Prism Johnson goes right now. Let's quickly look at a few of the other names. You know, HDFC Life at the day's highest level, strong moves coming in on that counter. Aditya, what would you advise investors to do with the HDFC Life?
Effective September 22, the GST on life insurance products is going to move away, and that is a positive fillip for the entire sector, particularly term plan and other life insurance products. That would give a fillip. So, from my perspective, within the life insurance space, HDFC Life and LIC, because of its valuations, look really very interesting stocks.
Okay, all right. Now it's that time of the show where we get in my colleague Somit Sarkar, who joins us with all the chatter that he's hearing from the dealing room. All right, Somit, what are you hearing today?
Well, multiple stocks that remain in focus. Firstly, it's IREDA or IREDA, what we call it as. Dealers are indicating that there are buy flows on large HNI desk on this counter. Prominent HNIs have been accumulating this counter in trade today, so keep an eye out for IREDA. Second stock on the list is V2 Retail. Now, there are buy flows on PMS desk, and dealers are indicating that the second quarter is expected to be a blowout quarter for V2 Retail, and hence we are seeing such kind of a move in this stock in trade today. Apart from that, there are three stocks on the list on the next one. It's Sammaan Capital, Bellrise and L&T Finance. Dealers are indicating that there are buy flows on institutional desk at lower levels on all these three counters. That is Bellrise, Sammaan Capital and L&T Finance. When it comes to Edelweiss, now that stock has been range bound for quite a while, and this is on the back of a overhang that has been there on the street, or the buzz that has been there on the street related to a potential block deal that could happen anytime soon. Now dealers are indicating that this block deal is expected to happen in the next couple of days, and as soon as that happens, there could be a sharp bounce back that we could see in the share prices. So keep an eye out for Edelweiss Financial as well. Aurobindo Pharma, now that stock was down in trade yesterday because of the buzz that penicillin prices have fallen sharply in the market, given the fact that there have been a lot of cheaper imports coming in from China. But what now dealers are indicating is that that there could be a push by the government side of imposing MIP, that is minimum import price, for penicillin drug, which could be beneficial for Aurobindo Pharma, and hence we are seeing this kind of a move in the counter in trade today. Another stock on the list is Vikran Engineering. There's a buzz of a big order win announcement that could come in anytime soon from this counter, and also a prominent investor is buyer in trade today in Vikran Engineering. And lastly, Lotus Developer. There are buy flows on large HNI desk. A positive development is expected to happen soon in Lotus Developer, so keep an eye out for that counter as well.
Interesting ones coming in terms of the herd on street, and I think Aurobindo is absolutely promising. In fact, last 1 month, if you just pull up a 1 month chart of Aurobindo, and thanks Somit for that, but Aurobindo Pharma at the day's highest levels, and that's the momentum that Pharma Index is seeing today. But in the last 1 month as well, the trajectory is kind of upwards for this one. And the other one is V2 Retail as well. And I think 22nd of September onwards itself, there could be some bit of positivity that could be coming in any of these names, and that accumulation has already started happening. Kush, what would your view be with regards to V2 Retail as well as Aurobindo Pharma?
So V2 Retail, very clear traction, very clear volume action, on this one yesterday, today as well. And I always, get more encouraged by the volume action than the price action. I think this is perhaps, a momentum that could sustain still some distance away from the overheated territories. So 1920 to about 2000 odd levels, very much on the cards with the kind of momentum that the stock is seeing. If you do have a position, keep a couple of around the 1800 mark. Aurobindo as well. I mean, we've discussed how the entire sector is doing well. This is a beneficiary of that, near the high point of the day towards close. Always an encouraging sign. I think an up move towards 1150, 55 cannot be ruled out, but then you've got the 200-day moving average resistance that might act up. If I can just take a quick 30 seconds, what I'm more excited about are the other two stocks that he's mentioned, Swami. Sammaan Capital and LTF. The reason being, both of these calls, both of these stocks we've given out as calls, and LTF at around 200 levels about a month and a half or so ago. While I am still very constructive on LTF, I would suggest with the kind of moves that it's already made, you'd be better off buying it at declines close to the 235 mark, but very constructive on LTF. And likewise on Samman Capital, it had a big gash about a month or so ago, a big up move, consolidated sideways on the back of very thin volumes, and now starting to pick up again. So keep an eye on this one as well. I think 145, 152 are very good levels, in the coming days to watch on Samman Capital, and 133 should act as a stop loss. So these two still very exciting names.
Okay. All right. Now, some positive news coming in on the trade tariff front. CA Nageshwaran points out that while the original 25% reciprocal tariff was expected, the additional 25% penal tariff may have been driven by geopolitical circumstances. But there's optimism too. He believes that by November 30th, the penal tariff could be rolled back. Listen in to those comments.
This is where I think all of us are worried about, and I will take some time to talk about the tariff here. Yes, the not only the original reciprocal tariff of 25% plus the penal tariff of 25%, both were not anticipated. I still believe that geopolitical circumstances may have led to the second 25% tariff, but considering recent developments in the last couple of weeks and so on, I do believe, I have no particular basis to say so, I just my intuition that the penal tariff will not be there beyond now the 30th. I mean, it's not a statement of based on any concrete indicator or evidence. It's my hope that given the recent developments which we see in terms of both countries finding an off-ramp and reaching out to each other, and including the important negotiator being in India in the first 2 days of this week, I would believe that there will be a resolution in the next couple of months on the penal tariff and hopefully on the reciprocal tariff also.
Okay, now, in other developments, SEBI has introduced a slew of measures related to REITs, including the classification of REITs as equities. Listen in to a word coming in from the SEBI chairperson, Tuhin Kanta Pandey, about this. And this was at the sidelines of the Infrastructure Conclave 2025.
To further strengthen this growth trajectory and promote ease of doing business, SEBI has introduced a series of enabling reforms. Some of the recent measures include expanding the scope of strategic investor for REITs and InvITs to facilitate wider investor participation. 2. Reclassification of REITs as equity for investment by mutual funds. 3. Introduction of SM REITs to make smaller real estate assets more accessible to retail and institutional investors. 4. Mandating investment managers of InvIT and manager of REITs to provide an option to the unit holders to attend the meeting through video conferencing or other audiovisual means for all unit holder meetings. 5. Enabled e-voting option for unit holders to encourage their greater participation in decision-making process.
All right, the power of this consistent 10%, 11%, 12% yield sometimes is lost on investors, and which is what I think was the explanation that some of these measures, some of these instruments could be very positive. Well, listed REITs, InvITs fall in that list as well. And let's try and understand from somebody who manages a business like this, IndiGrid. Harsh Shah, Managing Director of IndiGrid, Johnson, right now on the show to talk about this. Mr. Shah, thanks so much for taking the time out. And just for the benefit of our viewers who may not understand your business entirely and the importance of how a REIT being classified as an equity instrument may play out, could you talk to us a bit about that?
Sure. So what we run is an InvIT.
Yeah, sure.
But I think this is an extremely welcoming move from SEBI. We have been working on it, requesting it for a very long time. I think it puts us on and enables REITs to be part of liquid indices. Unfortunately, SEBI has decided to wait for InvITs to be classified as equity for a variety of reasons. One, including that majority of InvITs are private InvITs today. But I think as the experience of REITs improve liquidity, I do feel and hope that SEBI will consider even InvITs or publicly listed InvITs to be part of equity index. How it changes is an important distinction. InvITs and REITs are being taxed as equity. When you transact on it, you pay STT just like equity. Globally as well, InvITs and REITs are considered as equity instruments. However, as in 2016, at the inception of these vehicles, they were considered hybrids, and which restricted these instruments being part of indices, whether it's real estate or infrastructure indices, for some time, even after a fantastic track record of performance over the last 7-8 years. But I think now gradually things are improving. Last year we saw the taxation became in line with equity, so it was 1-year holding period. The second thing that changed now for REITs is that it's becoming part of equity, so we do expect a lot more inclusion in the indices will take place for REITs. Liquidity will improve, and therefore better price discovery will take place, and investors will be able to buy with better liquidity or sell with better liquidity. And I think, and I hope that eventually this also applies to publicly listed InvITs, which are far and few right now in terms of proportion, but we do hope that that's also needed for InvITs.
Good afternoon, Hiral, this side. Exactly what you're saying, a similar fashion, a similar treatment should be given to, InvITs as well. But with this kind of a move, it makes it easier for mutual funds to actually invest in these instruments. And it opens up the asset class for a lot of retail investors as well. If this expands, how do you see the benefits flowing in as well to investors?
Yeah, I think it's a very simple reality. It's been now, including us being one of the first ones, now there is a track record of 8 years of listing. We have delivered over 100% total returns, so more than that over a period of 8 years. Investors have made consistent distribution, as he was mentioning, that we distribute 10%. I think we started at 11 rupees a unit. Right now we are distributing 16 rupees a unit. There is consistent distribution and growth. Both has taken place. Now, what evolution has taken place initially, it was restricted to institutional investors and investors with 10 lakhs. 3 years ago, SEBI allowed retail investors, and gradually a lot more retail capital has already come in, and they are experiencing the power of yield and compounding that happens with that. And they are feeling, and so the retail participation and penetration on these products is increasing day by day. And that's great because they are able to own a piece of Indian infrastructure, a piece of Indian real estate, and earn a healthy yield out of that. And SEBI has already secured these instruments to a great extent with a leverage cap, with mandatory dividends paying out, and a lot more regulation. So these are extremely regulated platforms. Our regulations are far more than listed company regulations. So they're very well regulated. And therefore, that gives investors opportunity to own Indian assets and earn a healthy yield out of that. And I'm not comparing with a bank deposit, but yes, InvITs and REITs offer a much better yield and much better risk reward to investors to park in that asset class in their portfolio mix.
Agree. And thank you so much for giving us those details, those insights as well, Harsh. Really appreciate your time. We out of time on the show completely, but we need to take a break or slip into a break. On the other side, we get you the closing strategies and lots more. Stay tuned.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
We're the only country with such a large population of youth and युवा.
Pure talent और कुछ नहीं है.
बुलाने वाला फ्यूचर काफी अच्छा है स्पोर्ट्स का.
Luck, patience and a lot of tolerance.
Life can change overnight.
जीवन में मैंने कोशिश की है सदैव चुनौती को अपनाने की.
We need to work towards an egalitarian society regardless of gender and orientation.
Back with India Market Close right here on NDTV Profit. Well, let's look at some of the key volume buzzers in trade today. HDFC Life has gained 23% in the last 6 months. The stock is up nearly 3% today with volumes nearly 33% versus the 20-day average. So 33% is not very high. So volumes not necessarily the best, but the price action looking very solid. But the key trends is that it was flat for such a long time and the CAGR returns haven't been impressive. Just that seems to be making a breakout move today. The business performance, remember the individual APE for HDFC Life grew about 21% CAGR for 2 years till FY26. The 2-year VNB CAGR has been 15% till at least Q1 FY26. Market share has gone up about 70 basis points YOI as well. And the outlook that the company is given, well, the GST waiver on individual insurance policies will aid growth. They're the largest mix of individual book. The Q3, they've said, should see strong growth. No comments on Q2 necessarily, but Q3 for sure. And GST on commission paid will need to be absorbed, which may hurt a little bit of profitability. 32 analysts rather have a buy rating, with 5 having a hold and only 1 analyst on the sell side having a sell rating. So it's quite a day for HDFC Life. And let me ask Rajesh Palvia, who joins in right now with his thoughts about HDFC Life. I'm sure Aditya tracks it as well closely. He tracks almost everything related to finance. But Rajesh, can I start off with you and talk about the micro first, HDFC Life? What do you feel of it from a trading perspective?
So stock is in uptrend only, and looking at the long-term structure, stock is in now consolidating since last couple of weeks. But overall structure is bullish. On the downside, 750 is the key support area for this consolidation range. I think any breakout above 800 can take this stock further higher towards 840, 860 zone on the near-term to short-term perspective. So buy on dip should be the strategy, as overall short to medium-term structure is also showing a sign of recovery. And looking at the near-term consolidation, we believe that there could be a high possibility of breakout in the near-term perspective, and then possible target towards 840, 860 we may witness. So one can buy and accumulate with stop loss of 750.
You spoke about, Aditya, you spoke about HDFC Life earlier in the show, but my question would be, if one wants to insurance or a non-lending financial business, right, is HDFC Life or insurance the best bet, or would you look at something other than insurance, life insurance players?
So from my perspective, AMC space will continue to be very interesting. Within the AMC space, someone like an HDFC AMC, or for that matter, UTI AMC also has done pretty well. Over the period of next 5 to 10 years, the financialization of savings theme will continue to move forward. Mutual fund is one of the spaces which will continue to benefit, and the other one is the life insurance space. As I said before, the exemption on GST for both health and life insurance is positive. For life insurance space, purely from a growth perspective, HDFC Life continues to be a very good prospect. But from a valuation perspective, LIC continues to be one of my favorites, as the valuation there is a little bit on the cheaper side. And once growth and the margins continue to recover, the stock can do pretty well.
Okay, Rajesh, the markets have bounced back. In fact, the Nifty 50 is again back into that 25,400 plus level territory. Even the Bank Nifty is seeing gains of about 0.4%. Your view with regards to where benchmarks are concerned, and of course the Bank Nifty as well?
So looking at the structure, overall structure, Nifty is looking bullish, as 25,300 is the key support area for this up move which we are seeing in the Nifty. So till we are holding 25,300, one should remain on the long side of trade for trading point of view. For positional perspective, 25,200 needs to keep as a stop loss. On the higher side, the major call concentration area is still placed at 25,400, 25,500 zone. So I think any breakout about 25,500 can take this Nifty further higher, as call writers forcefully need to cover their position, and then possible really may see extension towards 25,750. That's the target where we are projecting for Nifty at this juncture. For Bank Nifty, we are almost trying to penetrate 55,800 resistance area for Bank Nifty. If Bank Nifty manages to cross this level and sustain above those levels, so maybe next target for Bank Nifty we may witness towards 56,200 in the continuation of this up move. So here also 55,500 is likely to act as a good support area for near-term perspective, as major put-based concentration is placed at around those levels.
Picks for the day?
Two stock idea. One is from the pharma space. We have witnessed, strong buying action in most of the pharma space. Laurus Lab is showing outperformance. Stock is almost trading near to its all-time high trajectory. The way stock is making higher top, higher bottom formation, we believe that here we could see further more outperformance to continue. 945 we are projecting target for trading point of view. On the downside, 906 needs to keep as a stop loss. The second stock is from the real estate space, that is Phoenix Limited. If we analyze the structure for this stock managed to view breakout of contracting triangle formation on the weekly chart. And this breakout is clearly indicating that there is a potential of further more upside rally towards 1800. But for trading point of view, we are projecting target of 1670. So one can buy and accumulate this counter also. On the downside, 1604 needs to keep as a stop loss.
Okay, all right, so that's the view. In fact, Laurus Labs was on Kush's list also today with regards to where technicals are concerned. So two constructive technical views on Laurus Labs coming in. But the other counter on the Nifty 50 that is buzzing today is Eternal. Let's try to pull that chart up and see the spike that we've seen in the past few minutes, up 2.8% as we speak. There was a Goldman Sachs note today on Eternal, which have maintained buy and hike the target price to 360 from 340. What they're saying is that there is accelerating growth momentum with improving margins that they're seeing in Eternal. Blinkit EBITDA break-even for this segment, they're expecting by December 2025, which will be the key catalyst for the stock going forward as well. And they expect Zomato to remain one of the fastest growing internet companies. In fact, even CLSA has remained bullish on this counter. Aditya, I'll come to you on this one. Your view with regards to where Eternal stands?
So from my perspective, the growth that Zomato will bring in is priced into the stock. The main point for the stock is how does Blinkit or even for Swiggy, the Swiggy Instamart business really shapes up, how they are able to cut down losses and then move forward from there. So from my perspective, the stock has rallied tremendously from about sub 100 levels to about 330 rupees. From my perspective, it is now expensive. Also, I don't understand how and when will the Blinkit business turn around. But from my perspective, I would tend to avoid this stock at this stage.
Eternal at the day's highest levels. But seeing the positivity and the uptick that is coming in terms of the markets right now, I think this is picking up cues from the commentary that we've seen from CEA, where news is coming in on the trade tariff front. Neeraj, what is interesting over here is that CEA Nageshwaran has pointed out that while the original 25% reciprocal tariff was expected, the additional 25% penal tariff may have been driven by geopolitical circumstances, but this will probably go away by the 30th of November. And this is what he believes. And the penal tariff could be rolled back. And that is a very strong comment coming in from the CEA. And I think from then, let's first just quickly listen and then we can dissect this.
This is where I think all of us are worried about, and I will take some time to talk about the tariff here. Yes, not only the original reciprocal tariff of 25% plus the penal tariff of 25%, both were not anticipated. I still believe that geopolitical circumstances may have led to the second 25% tariff, but considering recent developments in the last couple of weeks and so on, I do believe, I have no particular basis to say so, I just my intuition that the penal tariff will not be there beyond now the 30th. I mean, it's not a statement of based on any concrete indicator or evidence. It's my hope that given the recent developments which we see in terms of both countries finding an off-ramp and reaching out to each other, and including the important negotiator being in India in the first 2 days of this week, I would believe that there will be a resolution in the next couple of months on the penal tariff and hopefully on the reciprocal tariff also.
Okay, now viewers, we need to make a distinction here. The chief economic advisor has said that he believes, he has no basis to say this, but he believes that post-November or post-November 30th, the penal tariff, which is the additional 25% tariff, goes away. But almost everybody has said this, and you can see it from the market action. Since the time the first Truth Social post of US President Donald Trump came in, which spoke about wanting to meet my dear friend Narendra Modi, I think you've seen the markets take a constructive stance. We were in Delhi then,
yes,
and the last 8 days, I think this has happened. This is as big a statement as it goes from an Indian official, if you will, chief economic advisor, so technically not an official, but saying that he believes this. And I think Hiral is right, that somewhere from the time that this answer played out, you've seen a very sharp uptick in the market.
In the markets, and that's where the recovery has started. I think probably the market is sensing that sentiment, that positivity, and probably that little bit of buying interest that is coming in. In fact, let's just quickly take one question with Aditya on this. Aditya, the commentary from the CEA that there is a potential, and he's probably taking it with a pinch of salt also right now, that by the 30th of November, the 25% penal tariff will go away. And on that comment, you're seeing the markets nearly recovering. We're above that 25,400 mark. Any additions that you would have in terms of commentary?
Credit to Prime Minister Modi, he's handled the situation really well, and it was just a matter of time before tariffs went out, because the US also views India as a strong partner to a whole host of geopolitical reasons as well. So from my perspective, I was never worried about these tariffs, because if not now, 6 months, 12 months, the tariffs will move away. And once the tariff does move away, it's business as usual. So I'm not surprised that it has happened this fast. All thanks to our Prime Minister and the government, they've done a really great job. And this is really very positive for the market, boss.
Buy into this uptick. I'm just trying to think of it that way, Rajesh, that is this Nifty uptick good enough to buy into?
Definitely. So I think trend is likely to remain on the positive side, as broader market is clearly showing sign of confidence. And yes, one can remain on the long side of trend. Even at this point also one can buy. We are projecting target of 25,500. That is almost closer to this current market price. But once we crosses, I think 25,700, 750 zone can be achieved in the next couple of days.
Okay. Aditya, a couple of other things, right? After a while, I mean, 2 or 3 of these stocks which were spoken about in what dealing groups are recommending in the session today are starting to perk up. We're seeing an AU Small Finance Bank, for example, starting to make a bit of a move in the last few minutes of trade. Somewhere along the line, Piramal Enterprises, yet another % move. What do either of these 2 stocks, do they look good on the charts for a trade? Rajesh?
Question for me?
No, Rajesh, from a trade perspective for you.
Yeah.
Sorry,
so
did I say Aditya? My bad. Rajesh, I meant to ask you from a trade perspective, AU Small Finance Bank.
Okay, so as a banking pack, yes, we are holding bullish view, as most of the large cap and mid cap banks are doing good, and the way most of the stocks are almost trading near to their breakout level, I think there would be continuity in the banking sector. AU Small Finance Bank is now managing to give breakout of its falling trend line on daily chart, and almost it's negotiating with its 20-day moving average. So after a long corrective move, there is a sign of reversal which is coming on the near term chart. Any move beyond 725, 728 can take this stock further higher to 745 to 755 zone. That's the next target for the stock. So at this juncture, those who are already long in trade can hold the position with a stop loss of 708.
Okay, and I wonder, Aditya, Piramal Enterprises, I mean, credit to Parag Thakkar rather, 4 days ago, he kind of spoke about it in a table thumping buy, say his view. Of course, your view may differ, but I'm just wanting to your view, because his view is that from 400, 500 crores to 1300 crores in FY26, which they have guided for, to potential 3,000 crores of profit in FY28, maybe ROE is not really hitting the double-digit mark, but improving. At the current market cap of 24, 25, 26,000 crores, he liked Piramal Enterprises. Do you like Piramal Enterprises or no?
So I saw your interview and you bang on that the valuation of the stock continues to remain extremely cheap. That is one of the positives for the stock. But the valuation is cheap because of a whole host of reasons where Piramal Enterprises has failed to deliver returns with respect to their promises that they have made over a period of last 3 to 5 years. So now the DHFL book has stabilized for Piramal Finance, and as the credit upcycle continues, I think companies like Piramal Enterprises and whole host of NBFCs will continue to deliver a solid set of numbers as time goes on. So from my perspective, it is a tactical bet over a period of next 1 or 2 years, purely from a valuation perspective and the credit upcycle that is taking place over a period of next 1 or 2 years.
That's with regards to where Piramal Enterprises stands. The other aspect is some volume buzzers that we're seeing in trade today. That includes Prism Johnson that we talked about, 70 times 30-day average. Poonawalla FinCorp, 51 times its 30-day average. Heritage Foods, Tata Investments, Supreme Holdings. Heritage Foods from all of these 5 counters looks interesting because they've also now come out and said that, an official statement, of course, here that they've reduced prices of long shelf life, UHT milk, ghee, butter, as well as cheese and paneer, and on the back of that the stock has been buzzing in trade today. In fact, we spoke to Srideep Kesavan also yesterday about this aspect, and he said that he will be passing on the entire benefit to the consumer. Rajesh, I'll come to you on the charts for Heritage Foods. Any momentum that you're spotting there? What is the support and resistance that you're seeing?
So today's volume is quite encouraging, and the way stock managed to give breakout of almost 10-12 week consolidation range, it's a fresh breakout of this consolidation, and looking at this breakout with the volume action, we believe that if it continues to trade above 510 level, I think stock has potential to continue for more upside towards 565 to 580 zone also. So I think one can hold the position with stop loss of 510.
Okay, all right. So that's the way with regards to where Heritage Foods is concerned. But today on our special segment of Profit Intelligence, we put the spotlight on Balkrishna Industries. The stock has been underperforming versus Nifty Auto Index, which has been the best sectoral gainer in 2025. What has been dragging the stock? Will the counter see any upside soon? Varsha is here with all the intelligence on this.
Well, thank you so much for that. So, if you see Nifty Auto has gained almost 17% since August 1, and majority of the stocks, auto stocks, have also given over 20% returns from the likes of, Maruti, Eicher, Hero Moto, TVS Motors. But this one stock, that is Balkrishna Industries, if you see since August 1, it's down almost 2 to 3%. Now, let's see what are the key triggers for this underperformance when it comes to Balkrishna Industries. Number one is, of course, the tariff impact, because 40% of the tariff has been borne by the company, which will eventually impact now their margins. So, as of Q1 FY26, 40% is borne by Balkrishna Industries, and 15% of revenue comes from the US market. So one is tariff impact. The second is higher India mix. So if you see 35% of business comes from India, that is from domestic market, which is a margin dilutive for them, and it has an impact on gross margin. The next key trigger, which is actually impacting Balkrishna Industries, if I were to talk about, is the weak European demand. Now, we all know the headwinds that Europe market is facing, and because of higher input costs, the demand is getting impacted, and there's been a weak farmer sentiment, and there's no near-term revival which is expected. So, weak European demand is the other trigger for Balkrishna Industries, which is not working in favor of them. The most important thing over here is the diversification drive. So Balkrishna Industries have diversified into, so they make off-highway tires. Now they are going into truck and bus radial and passenger car radial tires. Now what is the issue there? One is, this is a low margin business. You have a lot of companies into this market, so there's a lot of competitors already present into this market, and company expanding into this segment creates an uncertainty, and investors don't like this uncertainty. And Balkrishna Industries is expecting 5% of market share into this segment by FY30, which seems quite impossible or quite difficult. So this is the main reason why investors are not liking Balkrishna Balkrishna Industries. While analysts on the street have -1% return estimate, so they are also not bullish. But onto the valuation, if I were to talk about current valuation, if you see current P is around 33x, 1 year forward is 25, last 5 years average is at 30x. So not much, a premium valuation that the Balkrishna Industries has got. But everything is not bad about this company. Let's talk about some positive impact also. Onto the tariff, all competitors have this tariff impact, and the pricing gap remains similar post tariff. And management, when it comes to EBITDA margin, they have given guidance of almost 24 to 25% of EBITDA margin for FY26. Even for FY25, they did almost 25% of margin. And the GST, the 2.2, the new GST revision will actually boost up demand for Balkrishna Industries. So overall, I think the diversification drive that the company has done is, investors are uncertain about that expansion.
Diversification is something which is making it a downer. Thank you, Varsha, for all of that. In fact, a quick question with regards to Aditya on this. Balkrishna Tires are underperformer versus the entire auto pack, which has been buzzing in trade. Would you be a buyer? Do you see a recovery on this one?
So tires is a very competitive business. Balakrishna Industries is coming out of the off-market business that they've got into the retail business, and I don't know how that will play out. So from that perspective, rather than betting on a tire company, auto ancillaries continue to be my top picks. Something like an RSCL Geartech or something like a Motherson. Those companies look really very interesting. For that matter, Sona Comstar also, although it is enrolled into a problem, that also looks really very interesting.
Okay. Well, let's try and figure out some other stocks which are, moving up in trade, if you will, and we take the BTST as well. But I just want to mark that Asian Granito is up and about, High-Tech Pipes is up and about, Eternal we spoke about being up and about. Ashok Leyland has given a bit of a spike as well, or at least hits the all-time high of 139 or thereabouts. But look at that, some very good charts. And we already spoke about Laurus Labs. It's now at 924, trading at all-time high levels. So really strong show by each of these. BTST trades. And Rajesh, since you recommended, I think, Laurus, and in the past you've spoken about Ashok Leyland as well, give us a view on whether you would buy each of these at the current levels as well.
Yeah, definitely. Laurus Lab, one can buy at current level also. Even Ashok Leyland, this stock is also looking attractive. I have identified this stock also. But so looking at the overall structure for Ashok Leyland, there is a fresh breakout of a brief consolidation. The way stock is, moving in higher top, higher bottom formation on a daily, weekly chart. Stock is moving in up sloping channel on daily chart. So I think sustained buying action is taking place in this counter. And I think furthermore, outperformance is likely to be there as stock has broken its, long consolidation range. Almost after a year of consolidation, stock managed to give breakout of August 2024 swing high. So we holding bullish view, and we are projecting to 170 on a positional perspective. On the downside, 128 needs to keep as a positional stop loss of Ashok Leyland. For BTSC point of view, at this juncture, we are liking KFinTech. If we analyze the overall structure, stock was in downtrend, and now after a consolidation of last 6-7 week, now stock managed to view breakout of this consolidation range. Stock is comfortably now holding about to near term, moving averages. So we believe that KFinTech may extend its gain. 1170 we are projecting target for BTST. On the downside, 1125 needs to keep as a stop loss.
So KFinTech coming in out there. Remember today, I think there was a note which said that KFinTech and the others, there was a global note which said that they're not very constructive, but these stocks are doing rather well for themselves today. Aditya, when I look at scan the CDMO universe, it is one stock that has done well, that is Laurus. It's trading expensive relative, and with reason maybe, but relative to a New Land, relative to a Cohance, Divi's, what have you, right? Or maybe Divi's is maybe slightly more expensive, but with reason again. Would you buy a Laurus? I mean, a trading call is separate, but an investment call, would you buy Laurus or would you buy some of the other CDMO plays?
So over a period of last 1 or 2 years after the fiasco of guidance and guidance not being met, Laurus had fallen down to about 300, 350, 400. Until there on, as the business performance has continued to come back, the stock price has risen. Stock price is now discounting a lot of growth that will happen over a period of next 1 or 2 years. So from my perspective, at these levels, I will not initiate any new investments. But having said that, if somebody is invested in Laurus Labs, they should continue to ride Laurus the story of the next 5, 10, 15 years. And as the expansion on the FDF and the CDMO space continues to come online, the company should do really well. Stock will take a little bit of breather, after which it will move on. So no new investment as of now. Let the stock correct for a little bit and then invest. Anybody who has an investment can continue to.
Laurus Labs, in fact, a lot of positivity on this one. Heritage Foods is another one that we did speak about as well. That stock is doing really well in trade on the back of the price cuts as well, 8.5% upside. In fact, we did have a chance to speak to the management. That's Srideep Kesavan yesterday. Let's quickly understand what he had to say in terms of the impact of the price cuts that they are taking. And to be noted, it's mainly on the value-added products, not on the plain vanilla products.
It's an immense opportunity for all of us in consumer goods, especially in the dairy segment. And I say this because dairy is one category which touches 100% of all Indian households. So while GST reforms impact so many various categories, but I guess dairy probably has the biggest impact because of how broad-based it is, and the frequency of purchase of dairy products are so high. We have already announced that we will be passing on the entire benefits of the GST rationalization to the consumer, and we have already started preparing to take productions so that on 22nd of September or a day before, we have these new prices on the shelves. As per the GST Council's decision, the products that are primarily benefited are, first of all, is paneer and UHT, which is long shelf life milk. It's not the fresh milk, it's a long shelf life milk. And paneer have moved from GST rate of 5% to 0%. With this, we at Heritage, we are expecting the paneer prices to drop by 24 rupees a kg.
Okay, we heard the management saying that they're going to pass the entire benefit of GST rationalization to the customers. Heritage Foods seeing significant amount of uptick in trade today. But with that, Aditya and Rajesh, thank you so much for taking out the time and giving us all those insights throughout the show today. Let's take a quick look as to how the markets are closing today. Nifty 50 well above that 25,400 mark. We're again above the 25,400 mark, and that's where we are closing at, up 0.04%. The bank Nifty also closing around 0.4% higher. Even in terms of the Nifty 50 heat map, let's try to pull that up and see what stocks have in fact led to that gain. Eternal topping the chart right now, up to almost 3% as we speak, followed by HDFC Life, Sun Pharma, Infosys, Cipla. Some IT names and pharma names have done very well in trade today. But something that's been under pressure, Coal India down 1.7%, Bajaj Finance down 1.2%, Trent continues to be under pressure, down by about 1%. Something like a Tata Consumer, Apollo Hospital, and Asian Paints are also closing in the red. Let's try to pull up the advanced decline ratio and see as to how the broader markets are looking like, because that will give us a picture as to how the day has fared. There you go. It's been a bumpy ride when it comes to the broader end of spectrum, because now we're closing almost in that 1:1 ratio marks where advanced decline ratio is concerned. 1,200 odd advances versus that of 1,100 odd declines. Let's pull up the sectoral heat map as well quickly to see how sectors have fared during the day. Nifty Pharma tops the chart with 1.6% of gains, followed by Nifty Healthcare, Nifty IT. The three sectors leading the pack, but something that's been under pressure includes Nifty Defense down 0.6 odd%, Nifty Energy down 0.4%, followed by Nifty Media, and Nifty PSU Bank also has seen some profit booking in trade today. Lastly, in terms of the broader markets, let's try to pull that up. The mid-cap 150 also closing at almost high point of the day. Yes, closing almost at its high point of the day, up 0.4%. The small cap 250, however, did slip into the red, but back into the green territory now, closing around 0.08% higher. Lastly, Let's try to pull up the BSE 500 because that will tell us a picture of the broader end of spectrum. And Poonawalla FinCorp still topping that chart, up 12%. Prism Johnson up 11.5%, followed by something like a restaurant brands, Tara Investment, Embassy developers as well. But something like Cohen's has seen a downtick of around 6% in trade today. Hitachi Energy down 3.6%, DCM Shriram down 3.5%, and some names like Arkin Chem, CCL Products, Godfrey Phillips under pressure. So that brings us to the end of the show, but before that, let's take a quick look as to what you'll be watching out post-market hours today. In terms of what you should keep your eye out on, in terms of where global factors are concerned, US initial jobless claims data will come out. Keep your eye out on that. In terms of corporate actions, all of these companies will be trading ex-dividend. So Ambika Cotton, Gujarat Alkalis, Hitech Gas, PG Electroplast. Some other names like Nalco, Fact, Goldium, as well as Alphego will be trading ex-dividend. In terms of stock split, Tourism FinCorp of India will see a stock split tomorrow from a 10 rupee share to a 2 rupee share. In terms of IPO opening, we'll be seeing GK Energy opening its IPO tomorrow. It's a 464 crore IPO, a fresh issue of 400 crore from that, and a 64 crore of OFS opens 19th of September, that is tomorrow, and closes on 23rd of September. The price band is set between 145 to 153. The other one that's opening is Sattvic Green IPO. 900 crore IPO, of which 700 crores is fresh issue and 200 crores is offer for sale. Here, again, it opens on 19th of September and closes on 23rd of September. The price band is set between 442 to 465. But with that, we're completely out of time on this edition of India Market Close. Thank you so much for watching. Do stay tuned to NDTV Profit for more news and updates.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
We're the only country with such a large population of youth and yuva.
प्योर टैलेंट और कुछ नहीं है।
बुलाने वाला फ्यूचर काफी अच्छा है स्पोर्ट्स का।
luck, patience and a lot of tolerance.
Life can change overnight.
जीवन में मैंने कोशिश की है सदैव चुनौती को अपनाने की।
We need to work towards an egalitarian society, regardless of gender and orientation.
welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. So viewers, benchmark indices edged higher, especially in the last leg of trade today. So the Nifty and the Sensex ended in the green for the third consecutive session as Fed cut rates by 25 basis points. The Nifty also settled trading above 25,400 levels, while the 30-pack Sensex exceeded 83,000 odd levels. So investor sentiment was also uplifted by GST reforms and progress made in India-US negotiations. Broader markets saw an upward momentum too, with both the small and mid-cap indices ended in the green. Eternal, HDFC Life and also Sun Pharma were among the top gainers in the Nifty, while Coal India, Bajaj Finance and Trent lagged behind the most. The advanced decline ratio ended skewed with over 1,200 stocks ending higher. So the sectoral picture was mixed, with Nifty Pharma, IT and Healthcare emerging among the highest sectoral gainers. Now let's look at some stocks that have been buzzing in trade today. First up, we have Poonawalla Fincorp. So Rising Sun Holdings, the promoter entity, has increased its stake in the company by purchasing 3.3 crore shares at 452.5 rupee per share, which is a price slightly higher than yesterday's closing price of 447 rupees. So this purchase, valued at 1,500 crore rupees, raises the promoter's total holding from 62.5% at the end of June 2025 to approximately 64%. So this move could be seen by investors as a strong show of confidence in the company's future prospects. Next up, we have Cohance Life. So a massive 34.2 million shares representing an 8.9% equity change in the company have changed hands in a single block. So the deal was valued at over 1,750 crore rupees. Justmiral Holdings, which held a 33.34% stake in the company as of June 2025, was the seller. The floor price for our transaction was set at 900 rupee per share. Next up, we have Biocon. So that was also buzzing in trade as the US FDA has approved two of their biosimilars, Bosaya, which is a biosimilar for the osteoporosis drug Prolia, and also Okelso, which is a biosimilar for cancer-related bone issue drug Xgeva. So, which is a key part of this approval is that provisional interchangeability granted by the FDA. Now, this means that these drugs can be easily substituted for their reference drugs, which could significantly increase their market penetration and also appeal to both the doctors and pharmacists. Next focus we have is on Cochin Shipyard. So it has sealed a major pact with oil and gas giant ONGC. So this agreement, valued at 200 crore rupees, is for dry dock and major layup repairs on one of ONGC's jackup rigs. So these specialized rigs are crucial for offshore oil exploration. The project, which is a major boost for Cochin Shipyard's repair segment, is scheduled for completion within the next 12 months. In a major move to deepen its presence in India's electronics manufacturing space, Dixon Technologies has announced a strategic acquisition. So the company has signed a share subscription and purchase agreement to acquire 51% stake in Kunshan Q-Tech Microelectronics. So this deal is valued at 553 crore rupees, and this acquisition is also a key part of Dixon's long-term vision, as it is expected to create significant synergies as well. Next stock that was buzzing in trade today is Bandhan Bank, which has sold a portion of its stake in Yes Bank. The bank also offloaded over 15 crore shares for a consideration of 331 crore rupees, reducing its holding from 0.7% to just over 0.2%. So this comes after Bandhan Bank was part of the consortium that bailed out Yes Bank in March 2020, where it had acquired shares at just 10 rupees per share. Next up, we have Glenmark Pharmaceuticals and Astria Therapeutics. So they've yielded positive initial trial data for their drug, which is being developed to treat atopic dermatitis. Now, the drug demonstrated a best-in-class profile with a half-life of up to 68 days, which is a significant finding that could potentially allow for dosing as infrequently as also once every 6 months. Now, this positive results validates Glenmark's innovation pipeline and also shows promise for a potentially less burdensome treatment option for patients with this chronic skin condition. On to some brokerage notes now. So, global brokerage firm Citigroup has added Sun Pharma to its Pan-Asia focused list, which is reinforcing its bullish stance on the company. So, the firm has maintained its buy rating on the stock, which is an impressive target price of 2,180 rupees. Now, this positive outlook is driven by the forecast that Sun Pharma's revenues from its innovator segment could actually climb to a staggering $3.2 billion by FY30. Also, Citi's earnings per share, that is the EPS estimates for fiscal years 2027 and 2028 are 10% and 18% respectively ahead of the market consensus. MOIL, which is the country's largest manganese ore producer, has officially begun exporting the mineral after being designated a state trading enterprise by the government. So the company's first shipment, consisting of a lower grade manganese ore below 46%, has been successfully routed to Indonesia. Now, this is a significant development as India has a surplus of this specific grade of ore which has limited domestic demand. Now, in a positive development for RailTel Corporation, the company has secured a significant order from the Bihar Education Project Council for the procurement and installation of smart classrooms. Now, this specific order is valued at 106 crore rupees and is also expected to be completed by January 14 or 2026. Now, this is a part of a series of orders from the same educational body, which collectively amount to 713 crore rupees. Now, this new business adds to RailTel's already strong order book, which stood at 7,197 crore rupees at the end of Q1 of FY26. MK Global has initiated a buy rating on Minda Corporation, setting a target price of 600 rupees. So the brokerage firm is optimistic about the company's future, calling it a spark for structural outperformance. Now, this positive outlook is supported by a forecasted price to earnings ratio of 30 times on its September 2027 earnings per share. HSBC has maintained its reduced rating on Page Industries, cutting its target price to 41,040 rupees. So the firm's analysts see that the company as a weak fit for their portfolio, which is raising concerns over its new product line, JKY Groove, which they view as a step away from its traditional core products. So the report also highlights that the company's margins are close to their peak as raw material prices stabilize. Also, HSBC has cut its profit forecast for the company by 3%, citing weak demand. In a significant win for the construction sector, Capacit Infra Projects has bagged a major new order from developer Hubtown. Now, the contract valued at substantial 1,518 crore rupees is for the construction of ultra-luxury residential towers right here in Mumbai. Now, this new project is a considerable addition to the company's already robust order book, which stood at 11,000 crore rupees as of June 2025. Azad Engineering has launched a dedicated lean manufacturing facility at its new plant in Tunikibola, Ram Industrial Park, Hyderabad. So the site focuses on producing highly engineered rotating and also stationary airfoils. Now, it also handles critical components such as sub-assemblies and also assemblies for advanced gas, industrial and thermal power turbine engines. Now, this setup supports Siemens Energy's global needs in power generation and also key industries. On to an exclusive story. So sources have told us that major payments applications like PhonePe and Cred have stopped supporting rent payments using credit cards. Now, the directive requires fresh Know Your Customer, that is the KYC verification for a landlord's bank account, which is reportedly an expensive and cumbersome process. So the industry is currently preparing to meet with the RBI to seek further clarity on the matter. The Federal Reserve gave investors a lot to chew on Wednesday as the central bank lowered the benchmark lending rate by a 0.25 percentage point and also indicated 2 more rate cuts could be made by the year's end. So the central bank had been holding firm on interest rates as inflation remained above the Federal Reserve's 2% target. Powell has expressed concern that tariffs put in place by the Trump administration could actually lead prices to surge. And as per our chief economic advisor, V. Anantha Nageswaran, India and the US are likely to resolve their tariff issues within the next 8 to 10 weeks. Speaking at an interactive session organized by the Bharat Chamber of Commerce in Kolkata, Nageswaran expressed optimism about the ongoing conversation between the two governments. Now, the US had imposed an additional 25% tariff on Indian products in August, taking the total levy to 50% due to India's purchases of Russian oil. Now, this move has affected India's exports to the US, which stood at $85 billion. Nageswaran's statement suggests that a solution to the tariff issues is on the horizon, which could actually boost India's exports and also the economy. Japanese banking giant SMBC has acquired a 20% stake in Yes Bank, making it the bank's largest shareholder. So the stake was purchased through a secondary stake sale, with SEBI selling 13.9%, SBI selling 13.19%, and also other Indian banks selling 6.81%. Despite the sale, SBI will retain over 10% stake in Yes Bank. And the deal worth 13,483 crore rupees marks the largest cross-border investment in the Indian banking sector. Now, Yes Bank's managing director and also the CEO, Prashant Kumar, welcomed SMBC as a major shareholder, citing benefits from their global expertise and also high governance standards. Huawei unveiled bold plans for its AI chips at the Shanghai Connect conference. So the firm aims to double computing power yearly with new Ascend models through 2028. Upcoming Atlas supernodes will also pack thousands of chips, claiming to outpace the rivals. Now, this ramp-ups the rivalry with NVIDIA amid US sanctions and China's self-reliance drive. So Chinese authorities probe NVIDIA for monopoly issues and also halted chip imports. Now, Huawei's push boosts the local semis, which rose 2% in trade. So as Trump meets Xi, experts say that it signals China's tech confidence as well. So Kunpeng servers and also high bandwidth memory round out the strategy. Toyota faces a major recall of 5,91,377 vehicles in the US. So the issue stems from faulty instrument panel software. At startup, it fails to display key info like speed, brake status, and also tire pressure warnings. So this raises crash risk, and also says, this has been said by NHTSA. Affected models include Venza, Highlander, Lexus, Tacoma, and GR Corolla, announced on September 18, 2025. So the recall aims to fix the software glitch. No injuries reported yet, but drivers urged to watch for symptoms. Toyota must also notify owners soon. Now, this highlights the ongoing auto safety challenges amid tight regulations. California court approved Disney's $233 million settlement with 51,478 Disneyland employees. Now, 2019 lawsuit accused the company of dodging a local minimum wage law. Now, this law required $15 hourly pay starting 2019, now at $20.42. So the deal gives $179.6 million to workers, $17.5 million in penalties to the state, and also $35 million to the lawyers. So Judge William Cluster called it fair and reasonable. Disney says that it already pays most cast members over $22 an hour above the minimum. Now the ruling ends a long fight over living wages for resort staff. Star Health Insurance has achieved a significant milestone, settling over 2,800 crore rupee worth of claims in the last 5 years. So between FY21 to 25, the company has settled over 4.8 lakh claims, demonstrating its commitment to its customers. Now, with a market share of 31%, Star Health Insurance leads the retail health insurance space. The iconic Pierre Hotel in New York City may change hands in a massive $2 billion deal. Now, the Sultan of Brunei and Saudi businessman Issam Khashoggi are interested in buying the Manhattan property, now which has been managed by the Taj chain for nearly 2 decades. Now, if the deal goes through, Taj will exit the Pierre Hotel, leaving them with just one property in the US, the Taj Campton Place in San Francisco. Now, the Pierre Hotel has been a symbol of luxury and also elegance in New York City since 1930. So, Taj has managed the property since 2005. Arabica coffee prices plunged the most in 17 years. Speculative traders exit bullish bets after record highs earlier this week. Contracts for December delivery of the variety favored by Starbucks fell as much as 9.1%. Now, this was the biggest intraday loss since 2008. Now on to some national news. So it's a big update for Mumbai commuters. From September 20th, monorail services will remain completely shut until further notice. Now this decision comes in the wake of recurring technical glitches and also rising safety concerns. During this period, MMRDA will carry out a large-scale modernization drive, including the installation of CBTC signaling, introduction of new make-in-India rakes, retrofitting of old coaches and also station upgrades. So the authority says that after a few months of inconvenience, Mumbai will finally get a monorail that is faster, safer and also truly modern. Cloudburst hits Uttarakhand for the second time in 2 days on the night of 17th of September. A cloudburst occurred in Nandnagar Ghat of Chamoli district. Now, 6 houses in Kuntri Langafali ward were buried under debris. 10 people are missing, while 2 have been rescued so far. Families of 4 passengers who died in the Air India Flight 171 crash have sued Boeing and Honeywell. So they have alleged that negligence and a faulty fuel cutoff switch caused the accident. The lawsuit filed in Delaware Superior Court now claims the switch design made it prone to accidental activation, cutting off the fuel supply to the engines. The crash, which occurred on June 12, killed 260 people, including 229 passengers and 12 crew members. Investigators have focused on the fuel switches, but the US Federal Aviation Administration has expressed doubts about their role in the crash. On to some more global news. So China has dropped its antitrust probe into Google as trade talks between Beijing and Washington intensify over TikTok and Nvidia. So the investigation, which was launched 6 months ago, focused on Google's dominance in the Chinese smartphone market, particularly with its Android operating system. So the decision to end the probe was made by China's State Administration for Market Regulation, and also it is seen as a significant development in the ongoing trade negotiations between China and the US. So this move could actually potentially ease the regulatory pressure on US technology companies operating in China. On to another update on China. The dragon country's rare earth product exports have surged to a 13-year high, driven by strong demand from the electric vehicle and high-tech sectors. So the country's exports of rare earth minerals rose 6% in 2024, with 55,431 metric tons of the 17 minerals used in products like electric vehicles and also consumer electronics being shipped out. So this increase in exports is significant, given China's dominance in the global rare earth market, accounting for nearly 90% of global refined output. Now, the surge in demand for rare earths is attributed to the rapid growth of new energy vehicles, wind power, and also other high-tech industries. Saudi Arabia and Pakistan signed a mutual defense pact in Riyadh on Wednesday. Prime Minister Shehbaz Sharif and Crown Prince Mohammed bin Salman seals the deal with Army Chief Asim Munir present. So the agreement treats aggression against one as an attack on both, boosting joint deterrence. It builds on decades of security ties amid regional tensions like the Gaza war and Israel's Qatar strike. Now, a Saudi official called it a natural step, not aimed at any foe, and also stressed at balancing relations with India. So the pact eyes stronger cooperation for peace with Pakistan's nuclear edge in play. Smriti Mandhana's dazzling 117 of 91 balls powered India to 292 in the second ODI in New Chandigarh. So Australia, chasing 293, crumbled to 190 in 41 overs, handing India a 102-run victory. Kranti Good's 3-28 shown, while Darcy Brown took 3-42 for Australia. Mandhana's 14 fours and 4 sixes dominated, though no other batter crossed 40. So Australia's reply faltered despite Annabelle Sutherland's 45 the series. Now 1-1 heads to a decider in Delhi. Both teams' top contenders gear up for this 50-over World Cup starting September 30th. So with that, viewers, it's a wrap on this edition of Market Express, but please stay tuned to NDTV Profit and don't go anywhere.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
We're the only country with such a large population of youth and yuva.
प्योर टैलेंट और कुछ नहीं है।
आने वाला फ्यूचर काफी अच्छा है स्पोर्ट्स का।
लक, पेशेंस एंड अ लॉट ऑफ टॉलरेंस।
Life can change overnight.
जीवन में मैंने कोशिश की है सदैव चुनौती को अपनाने।
We need to work towards an egalitarian society, regardless of gender and orientation.
The Nifty and Sensex end higher for the third consecutive day to settle at over a 2-month high. Sectoral indices closed mixed. IT index gained on the back of 25 basis point rate cut by the US Fed. Chief Economic Advisor Anantha Nageswaran says he's optimistic that the US will withdraw the 25% penal tariffs imposed on India after the 30th of November. He believes there will be a resolution on both reciprocal and penal tariff in the next 2 months. Now, Maruti Suzuki announces price cuts, steepest drop seen in entry-level cars such as Espresso and Alto K10. Cuts prices of Swift by more than 80,000 rupees, while Baleno gets cheaper by 86,100 rupees. Payment apps like PhonePe and Cred turn off rent payments via credit cards following RBI's norms directing payment aggregators to conduct Know Your Customer processes on a landlord's bank account before allowing credit card payments to it. Apollo is here to stay for a very, very long time, says Vice Chair Neeraj Kanwar as he dismisses concerns over the Jersey jinx. He expects the company's sponsorship deal with the BCCI to enhance brand trust and visibility. US Federal Reserve cuts benchmark lending rates by 25 basis points for the first time in 2025. Chairman Jerome Powell calls the move a risk management cut as the US Central Bank projects more rate cuts of at least 50 basis points before 2025 ends. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. Over the next half an hour, we're going to bring you the latest in markets as well as national and international news. But first up, let's take a look at how the markets fared today. The Nifty and the Sensex ended strong for the third day in a row. After initial gains, the indices remained in the positive range on the back of 25 basis point rate cut by the US Federal Reserve. On the sectoral front, we saw indices ending mixed with pharma, followed by IT as the top sectoral gainers. My colleague Varsha now joining in with a wrap of all of the market action.
Yes, benchmark ends higher for the third consecutive day. Nifty closes about 25,400 mark, which was led by Eternal and HDFC Life, and Sensex closed about 83,000 mark. When it comes to Nifty Midcap 150 ends slightly higher for the day, while it closes higher for 10th consecutive day, and Nifty Small Cap 250 ends flat for the day, which was led by TV18 Broadcast and Netweb Tech, while Small Cap 250 closed higher for the 5th consecutive day, and sectoral indices, if you see, end on mixed note. Nifty Pharma gains over 1.5% for the day, best performing sector for the day, while Biocon and Laurus Lab gains the most in Nifty Pharma. Nifty IT and Nifty Auto gain higher for the third consecutive session, and Nifty Financial Services again higher for the 11th consecutive session. Nifty Bank gains higher for the 10th consecutive session, and Nifty FMCG snaps 4-day losing streak. When it comes to Nifty Oil and Natural Gas, which gained for the 7th consecutive day, and Nifty Realty snaps a 6-day gaining streak. Well, lastly, if I were to talk about Nifty PSU Bank snaps 3-day gaining streak.
Thanks for that, Varsha. And earlier today, we even spoke with Vikash Kumar Jain, who believes that the thawing of the US-India relationship is beginning to provide relief for markets. He also shared his views on overall market performance. Let's listen in.
Some of the medium-term worries are still there, and most of those are stock market worries, expectations running ahead of themselves, continuing to see, valuations quite, haven't really come off. But there were several other worries which were, all compounding together. Those are now at least turning into relief, like you said, thawing of US-India relationships. Fed rate cuts, what it does is a very important thing. Hopefully, it just gets interest back into EM, and EM outflows possibly stall. If that stall, then the necessity of foreigners selling India comes down. At the same point of time, we could also get into, after this period of pause, after several rate cuts by RBI, again, more rate cuts coming maybe sometime in this quarter.
And let's actually take you back to what was said last night. US Fed Chair Jerome Powell characterized the cut in benchmark rate as a risk management cut. While speaking at the press conference, he added that risks to the labor market are different now and that they need to be taken into account in the policy. Let's listen in.
I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our policy.
Now, today, IT was the top sectoral gainer in trade, and a key driver for that was, of course, the Fed slashing interest rates for the first time this year. But how was this a key tailwind, and what is the quantum of these gains? Let me quickly go across to my colleague Jasmeet now to explain all of this. Jasmeet, over to you.
Well, right, yes, thank you for that. Positive for Indian IT. Well, this comes in after the US Fed cuts 25 basis points and moves it to 4 to 4.25. Well, why is this positive? Because the Fed further plans to have 2 more rate cuts in the following year. Given the increased rate cut, this will also increase spending power of the US companies, where they could also go and spend on the other AI-based tools and other discretionary spend. With this makes a positive sentiment for overall Indian IT firms, given that this might be a return for discretionary spend. If you look at the Indian IT, nearly 60% of the revenue comes from the US, so this move is big. Now, if you talk about the current picture, the IT moved in roughly 1% in trade today, with the top gainers being from L&T Tech and LTI Mindtree, with Coforge following back. If you look at the overall IT market on Y20 basis, it's nearly down 16%, and it's been gaining since last 3 trading sessions. While Q2 is something to watch out, how the company turns up for all the quarterly results.
Now, since June, the market has been quite volatile, with the Nifty up just a little over 2%. In such phases, it helps to see what company promoters are doing with their stakes. My colleague Somit now joining us with all of that data.
Yes, given the fact that there's market volatility, we are bringing you this data where what insiders, that are promoters, have done with their shares. They also buy from open market, they sell in open market. So we have compiled that data and brought you the top 5 companies where insiders, that is promoters, have been buying shares from the open market. Firstly, in the month of September so far, that is for the first 16 days of the month, Industars, around 487 crore shares, 487 crore value of shares has been bought by its promoter Bharti Airtel, which is nearly 0.5% of the market capitalization. In Jindal Stainless, 113 crore worth of shares, 0.2% of the equity. In Paisalo Digital, in the first 15 days of the month, the promoters have bought shares worth nearly 82 crore rupees, which is nearly 2.4% of the equity. In Vidal Corp and Tourism Finance, promoters have bought close to 56 to 66 crore worth of shares, which is nearly 1.7 to 2% of the equity in the first 16 days of the month. Now, on the flip side, Worldtime Transformers, a big block deal happened. Promoters sold close to 600 crore worth of shares, that is nearly 8.1% of the equity. In Aditya Vision, in the open market, the promoter has sold close to 346 crore worth of equity shares, which is nearly 5.3% of the equity. In Dr. Lal Pathlab, Safari Industries and Sigachi Industries, promoters have sold shares anywhere between 27 to 133 crore, which is nearly 0.4 to 1.6% of the equity. Now, so far in this calendar year, that is 2025, that is in the first 8.5 months of the year, net insider purchases stood at close to 3,860 crore rupees. The top 5 of them, firstly JSPL, 997 crore worth of equity is what the promoter has bought, nearly 0.9% of the equity. Industar, 708 crore, 0.8% of the equity. In Jindal Stainless, 350 crore of equity is what the promoter has bought so far in 2025, 0.6% of the equity. In Tourism Finance Corp, the promoters and the directors have bought 161 crore rupees of equity, which is nearly 4.8% of the equity. And in Paisalo Digital, 126 crore is the total buy value, which is nearly 3.6% of the equity. On the flip side, if you look at it's Bajaj Finserv, where there was a big block deal that happened. Promoters sold close to 5,500 crore worth of equity, around 1.7%. Authum Investment, 2,473 crore worth of shares were sold. 4.4% of the equity in JB Chemicals, 6.2% of the equity have been sold by the promoter so far. In Apollo Hospital, 1,479, and in ZF's commercial vehicle, around 792 crore, which is nearly 3% of the equity. And so far in 2025, promoters have sold shares worth nearly 25,500 crore in open market.
Right, Samir, thanks so much for that. And let's go on to some other news and good news at that coming in after GST 2.0. We're now seeing Maruti Suzuki as the latest auto giant that has slashed prices across several models after the GST rate cut. Entry-level cars like the Alto K10 and Espresso will now cost up to $1 lakh less. Even popular models such as Swift, Wagoner and Celerio see sharp reductions. For more on this, let's go across to my colleague Danish Anand for a detailed breakdown of the car prices.
Well, India's largest car maker in terms of market share, Maruti Suzuki has announced that all of its cars will now be offered at a discount ranging from 46,000 to 1.29 lakh rupees. And these new rates will be applicable from 22nd of September. Well, from 22nd of September, new GST rates, by that I mean a flat 18% GST on small cars and a flat 40% GST on large cars will be applicable. Well, a major discount is being given in entry-level cars of Maruti Suzuki, and that covers Espresso and Celerio. And as we go higher in Maruti's portfolio, this discount is kind of being reduced, but the company has said that while the reduced GST prices will lead on to a discount of 8.5%, but the company has gone over and above and they have given a huge discount ranging between 12 to 24%, which will be applicable on different cars and different types of models. The company has also made it clear that these rates will be applicable only till 31st of December, as the company will be rethinking of these rates after this calendar year ends. But all in all, if we see in a big news, Maruti Suzuki, which is the biggest car maker in the country, it has given a big relief to all the aspirational car buyers.
Absolutely, Danish. And Partho Banerjee, Senior Executive Officer at Maruti Suzuki, said that the GST rate cut has brought prices down by 8.5%, and the company has gone even further with extra reductions. But now this is only for a limited time, with a price review due at the year end. Let's listen in.
Due to the GST, when we reduce it from 29% to 18%, the net effect of GST is 8.5%. But as I'm sharing with you, we have gone for further special offer to our two-wheeler customers so that they can upgrade to a four-wheeler. And Wagoner price now starts at 4,98,900. Here also, the price reduction is to the tune of 14%. Just one point, that this is going to be a limited period offer. It's too early to comment on that because there is going to be a pent-up demand. As I think you all know, in the month of August, most of the customer held back their purchase decision. So they all are going to come to the market in the month of October. So we should not be too much reading into the sales in the next 2 to 3 months. But yes, as I have earlier also said, that in the next financial year, we feel that the market is going to bounce back to the earlier CAGR of 6 to 7%.
And some positive news coming in on the trade tariff front. CEA Anand Nageswaran pointed out that while the original 25% reciprocal tariff was expected, the additional 25% penal tariff may have been driven by geopolitical circumstances. But there's optimism too. He believes that by November 30th, the penal tariff could be rolled back. Let's listen into those comments coming in.
This is where I think all of us are worried about, and I will take some time to talk about the tariff here. You know, yes, the not only the original reciprocal tariff of 25% plus the penal tariff of 25%, both were not anticipated. I still believe that geopolitical circumstances may have led to the second 25% tariff, but considering recent developments in the last couple of weeks and so on, I do believe, I have no particular basis to say so, I just my intuition that the penal tariff will not be there beyond now the 30th. I mean, it's not a statement of based on any concrete indicator or evidence. It's my hope that given the recent developments which we see in terms of both countries finding an off-ramp and reaching out to each other, and including the important negotiator being in India in the first 2 days of this week, I would believe that there will be a resolution in the next couple of months on the penal tariff and hopefully on the reciprocal tariff also.
And let's now go across to my colleague Pallavi Nahata to understand what this means for India's trade relations with the US. Pallavi, is 2 months a realistic timeline to reach a trade deal considering the back and forth that we have seen between both nations in the past?
Right. We just saw the chief economic advisor present his comments, and he did say that he does see some rollback of the penal tariffs that the US President Donald Trump had levied on India because of India's ties with Russia. Is 2 months a good enough time for some rollback on that front? Absolutely, Sanjana. Let's remember that we saw the imposition of these tariffs also to be extremely spontaneous and unexpected. Like even the chief economic advisor mentioned, we have seen already some positive developments on the trade front. In fact, just earlier this week on Tuesday, we did see a statement from the Indian government regarding some positive developments after the US trade delegation had met representatives from the Indian team in India, and now added to that, these comments from the CEA do indeed appear to bode well for India's negotiations with the US, and for all we know, we could definitely see some positive news over the coming days on that front.
Right, Pallavi, thanks so much for that. Everybody's waiting with bated breath for that positive news, especially after September 22nd. I think the next date everybody's going to watch out for is 30th of November. And moving on, Apollo Tyres has replaced Dream 11 as the official sponsor for the Men in Blue. My colleague Vikram Oza caught up with Neeraj Kanwar, Vice Chairman and MD Apollo Tyres. Let's go across and listen in to an excerpt of that conversation, and for more details on the impact that is being penciled in from this very landmark deal.
It's a landmark deal, no doubt, Mr. Kanwar. It puts your brand on the Team India jersey until 2027. But what is the big picture over here? Is this primarily about visibility? Is it about global expansion? What exactly is the strategy here?
Well, I think, today, as far as cricket in India is concerned, it's not just a game. It's really the heartbeat of our nation. And it sits at the core of the nation's pride. I think being an Indian company, it gives us great honor to be on the jersey of the Indian cricket team. It brings in a lot of consumer trust as far as Apollo is concerned. Apollo is also known for being an Indian institution since 1976. We are clearly the leaders in the Indian market. Yes, it does create visibility across not only India, but the globe. But we are very happy because this is our national pride, the Indian cricket jersey. And for us, Apollo is also our national pride. So there's a clear synergy between the Apollo brand and the Indian cricket jersey brand. So that was really the motive behind tying up with BCCI for this really landmark deal that we have done.
So I see this, Mr. Kanwar. This is about, as far as your product is concerned, it stands for reliability, there is safety, there is performance. All these values sound a lot like what Team India stands for today. But now the question is, how do you leverage it? It's an important deal. It's an expensive deal as well. Now, how do you use it to your advantage? That's the question.
Well, I think that's a very good point that you're saying. I think the number one thing is going to be the consumer trust that's going to come in because of the quality of our products, which will obviously give boost to our sales and our network expansion in India. As you know, today we are the leaders. So we have to really play out this properly. We've not even had time to think how we're going to pan this out. But yes, obviously we are now looking at mega plans on communication, on how to roll this out into the country positively and take it to our advantage so that we do get benefits as far as the brand is concerned and as far as our bottom line is concerned.
But I'm sorry to have to bring this up, Mr. Kanwar, because we've seen other brands like Sahara and Oppo and Bear Juice, even Dream 11, all those brands that have been on the India jersey. they have struggled after grabbing that high visibility space. How are you looking at this so-called jersey jinx, if we can call it that, because all those companies stopped sponsoring the jersey after coming under a cloud?
Well, Vikram, I was cautioned about this before I got into the deal, but I have a lot of faith in our company. It's been built by my father, Mr. Kanwar, who's the chairman of the company. We've had a very strong Apollo family in the organization. We employ 19,000 people. I have a lot of trust and faith in them. I have a lot of trust in the Apollo brand itself. And we are here to stay. We are a long-term company. We are leaders in our industry. And we have built an institution in India, which has really taken us to the global platform.
Unfazed by what they call the jersey jinx. Moving on, India has taken a bold leap into digital insurance. The erudite chairman Ajay Seth has launched the Bima Sugam portal. Now, this is a one-stop platform set to transform policy access, claims and transparency for customers. Let's get my colleague Pallavi for more details. Pallavi, give us all of the details and what is this platform actually aimed to do and how does it simplify things?
To summarize, industry experts have been, sort of touting the Bima Sugam to do for the insurance industry. What we have seen UPI do for digital payments. So far, of course, that is something that's still some time away. For now, we have seen a launch of the Bima Sugam portal by Ajay Seth, the chairman of the IRDAI. And Seth too, in fact, emphasized on the fact that this is a stepping stone towards creating India's digital public infrastructure for insurance. He, like many others, believes that the move will help empower insurance holders, deepen penetration and ensure transparency and fairness. To sum up, what the Bima Sugam eventually over time should be able to do is that it should ultimately serve as a unified portal of sorts, a unified insurance marketplace, a digital policy repository, an eKYC and consent utility, and also a portal where policyholders will be able to settle their claims real time. So far, of course, we have seen the launch of the portal. It does not currently offer these features, but over time it is expected that these features will soon be rolled out, which will mean that it will be a one-stop solution of sorts for any and every requirement catering to insurance for policyholders.
Pallavi, thanks so much for that, and remains to be seen the use of this platform. Let's move on to another update coming in, this time with regard to payment apps. Major apps like PhonePe and Cred now have stopped supporting rent payments using credit cards. Sources are telling NDTV Profit that credit card payments have been switched off for now and following the regulator's recent master directions. Vishwanath now joining in with exclusive details.
So payment applications like your Cred, PhonePe or even Paytm will no longer support credit card payments for rent. This is happening because earlier this week on Monday, the Reserve Bank of India came out with master directions for payment aggregators, which requires these payment aggregators to conduct a thorough KYC or a know your customer process for these landlords who were earlier receiving rent payments using credit cards. Remember that this was a highly lucrative business for the card companies, for the payment application providers, as well as the customers, both the landlord as well as the tenant. It ensured that there was an easy free lookup period in the credit card transaction. It also allowed these payment applications to levy certain charges on these transactions. Banks themselves, who were the card issuers, were also levying higher cost for such transactions to go through. Essentially, what these payment aggregators believe is that if the regulations are being deployed in a very strict manner, then that would mean that their payment aggregator license will be at stake, and that is why they are switching off the business for now. What's also telling NDTV Profit is that in a few days, there is likely a meeting that the Reserve Bank of India is going to conduct with these payment applications to seek feedback on these master directions. Depending on what comes out of that meeting, they will decide the future course of this specific type of transaction where credit cards are used to pay rent. This has been something that the RBI has actually been against. It doesn't like the fact that credit cards are used for specific small value transactions, but also for retail transactions which are not necessarily commerce related. Rent payments, they've actually been coming up against it with the Reserve Bank of India seeking further details from payment aggregators and multiple meetings having happened in this space.
Thanks for that, Vishwanath. And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
We're the only country with such a large population of youth and yuva.
प्योर टैलेंट और कुछ नहीं है.
आने वाला फ्यूचर काफी अच्छा है स्पोर्ट्स का.
Luck, patience and a lot of tolerance.
Life can change overnight.
जीवन में मैंने कोशिश की है सदैव चुनौती को अपनाने.
We need to work towards an egalitarian society, regardless of gender and orientation.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है.
मैं आपका बात से सहमत हूं. उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Hello and welcome to NDTV Profit. A very good morning to all the viewers you're watching. Know your company, that is KYC. I'm Hiral Dadia.
what is on our radar today. We have Orient Technologies. Yes, a small cap company, but lots to know about this one, taking into consideration the kind of recent moves the company has made. Now let's understand. Firstly, the impact of high receivables on cash flows, is that a concern right now for them? Moving on, the second aspect that we're going to consider over here is taking the order book into consideration, which stands at around 414 odd crores or little more. Does that mean the FY26 revenue will remain the same? And the potential revenue that the company is looking to see from the security ops center segment from a business side. Moving on, if you have to look at this, security operations center, how quickly can this business clock a 20% margin? Because that's the guidance that the street is working with. And from a 3-year view, what does the top line, margin and recurring revenue tell you from here on if you have to look at Orient Technologies from a growth perspective? What is the kind of export opportunity that Orient Technologies is actually sitting on as well? And if you have to look at the third quarter, what are the factors that will lead to the margin expansion that could come in Q3? These are a few of the questions that we are talking about with regards to where Know Your Company goes and on our Orient Technologies. But let's shift focus to tell you more about the company as well. Firstly, it's an Indian IT company who's into transformation and an infrastructure partner as well. It offers multiple facets like IT, cloud, artificial intelligence, security and digital services, and they mainly focus on recurring as well as annuity services, so it is not a one-time sale. So stickiness with regards to clients becomes absolutely important when you talk about Orient Technologies. They are headquartered in Mumbai. The employee count is around 1,600 employees, and they have a pan-India presence as well. If you talk about their product and solutions, you're talking about IT infrastructure, which comprises of data centers. That is one of the hot topics, and that's one of the reasons as well why we've called the company right now, because one of the brokerage reports did note that there is a 5 times growth that could be expected over there. Servers, end users, devices, as well as networks is what they deal with in terms of IT infrastructure. When you talk about device as a service, which is DaaS, they do give out devices on monthly rentals as well. In terms of cloud and DevOps, they look at management optimization across AWS and Azure. So this is, Amazon AWS. Moving on, cybersecurity, they're talking about endpoint security, managed, security operation centers and threat monitoring as well. In terms of managed services, you're talking about, remote facility management as well as infra managed services as well. And in terms of digital transformation, analytics, artificial intelligence, automation, custom apps comes at play. The new aspects they were looking at is GPU and AI hosting, which is partnered with AWS for India AI mission. So this is what they're looking at. But let's quickly look at the segmental revenue mix as well for the company. Around 60% of the revenues come in from IT infrastructure services versus 40% that comes in from app and IT infra as well. So that's in terms of your FY25 breakup. And your cloud and data, that is actually growing faster. If you look at the next one in terms of the segment, it's a 30% plus compounded growth that you're looking at. ITES, a very stable business that they have on that front. Order book, crucial for visibility for them because their total order book is at around 414 odd crores right now. And they've said that this will be billed over FY26. So that's the key question, that is this what is going to translate into revenues in terms of FY26 as well for the company. And multi-year service contracts is what they look at for public sector, enterprises, and BFSI, cloud and DaaS. So that's everything that you need to know about the company. But let's quickly look at all your rating parameters from here on. From your income statement check to balance sheet, cash flow, return ratios. You're talking also with regards to shareholding patterns, street credentials, street coverage, and the valuation picture and outlook. These are the ones that we will be considering with regards to where Orient Technologies is concerned. But let's dissect the first one. Income statement. Let's pull up that one on the screens and you'll see what's happening with the income statement from a revenue. A 22% compounded growth is what you've seen from a 3-year perspective. And the margins, in fact, have declined. So that is going to be crucial. The profit number has seen a compounded growth of around 15% and EBIT is around 12%. So your EBIT and profitability, the growth is slightly lower as compared to your top line, and hence we've given it a sideways, that is a neutral rating with regards to where income statement goes. Moving on, if you have to look at the same one in terms of the Q1 FY26 performance as well, if we can get that one, because that will give you the sequential and the year-on-year growth. Revenues have seen a decline sequentially, EBIT has gone down, margins have declined, and your profit number has also declined. But year-on-year, a marginal growth that has come in on that front. And if you have to talk about the margin trajectory for the company, from a 9.4% that they were in FY22, it's been declining and it's come down to 6.2% in the first quarter of FY26, and that is something which is absolutely concerning. So yes, a sideways, that is a neutral rating. In terms of the balance sheet check, let's quickly look at the equity and the cash and bank. If you see in terms of the equity, a strong growth that is coming in from 18 crores to 42 crores over a period of 3 years. The cash has been increasing as well substantially from a two-digit number of 20 odd crores in FY23. A similar number in terms of FY24, it's actually grown 5 to 6 times to 116 odd crores. So that is one of the key positives. The borrowings have gone down substantially as well. And if you talk about the other equity, that has nearly tripled in 3 years. So hence a thumbs up, because the balance sheet is looking absolutely strong when it comes to Orient Technologies as well. Talking about the cash flow matrix from here on. Now, what is happening over here is, if you see the cash flow, let's quickly look at the operating cash flow. It's actually gone into negative, on the back of which, if you see the profitability, when they've put it, added a 50 crores in FY25, the cash flow from operations to profit, that is a negative number. That's a negative 22%. The net cash flows have actually come in at 95 odd crores. And it's a very no trend line kind of a picture when it comes to cash flows. There is no stability, there is no sustainability, it seems. And that's the reason why a thumbs down coming in with regards to cash flows go. Because one, your operating cash flows is getting into a negative number, into a loss, which is a concerning area when you talk about this matrix, and hence a thumbs down. Let's quickly look at the return ratios as well. Now, return ratios become absolutely important from an investor perspective, and there you go. They actually started at a high of 55. You're looking at 27% now. So there is that stability which probably will start emerging from here on, is what the street is anticipating, and hence a thumbs up, because in terms of your return to capital employed, I mean, a 55 to 41% kind of a number, not very sustainable, but from here on, there could be some bit of sustenance that could be coming in as well. Let's quickly look at the shareholding pattern now. If you talk about promoters, they've remained absolutely stable in terms of their stake. FIs, in fact, have actually gone ahead and reduced stake in the company. DIs have been absolutely absent. The public free float has increased from 21% to 26%. So there is some bit of retail participation that has gone up with regards to where Orient Technologies go, and that's the reason why a thumbs up giving in there. But the promoters have remained absolutely stable. There is no institutional investor which is putting their bets on Orient Technologies, but because the retail participation is high, we've given it a thumbs up, not considering the FIs and DIIs currently on this one. Moving on. The next parameter that we're looking at is the shareholding we already looked at, the street credentials from here on. Again, sideways, that's a neutral rating, because if you have to look at since listing, which is in August 24 to now, the returns have varied in that range of almost 7% to 27%. So since listing, no major gains coming in for someone who looked at the stock or entered the company at the IPO time. The returns actually started coming in only on a YTD basis, where it's actually grown 27%. So, a neutral rating there, not a loss to the investors, still making a profit in terms of their investments on the stock. So hence a neutral rating there. And when you talk about valuations, now the most expensive, or maybe the second most expensive, if you have to look at peers, from Orient Technologies, Dynacons and Allied Digital, these three are the competitors. The least expensive right now, the cheaper one is Dynacons, which is around 17.4 times, but the most expensive is Allied Digital, which is at 35.5 times. Orient Technologies fits in somewhere in between at 27.5 times the current PE. So in terms of the current price to earnings, we've given it a neutral rating because it's on number 2 out of the 3. And very lastly, the outlook seems to be also very neutral right now, because the aspiration of the company is to be in the top 5 system integrators from here on. Whether they will be able to make it to that list or not is the question we need to check. Their focus is mainly on recurring revenue and cybersecurity. So the stickiness with regards to clients becomes absolutely important. If they are not able to get that stickiness, then the business could go sideways as well. And the total order book currently is around 414 odd crores, and the Q1 order intake was under 105 odd crores. They've also mentioned that probably the margins could remain under pressure in the second quarter. And as we know, the margins over the last couple of years have been on a declining trend. So that has been a concerning area as well for Orient Technologies. And the reason why we are seeing that lag in terms of margins is because the investment that they're making in employees, they've built a base of almost 1,600 odd employees so far. And this is coming in at a time where you're seeing layoffs happening in the IT industry. Secondly, they're building out the security operations centers as well. So that is what is putting pressure on the margins. And the revenues from this business are yet to come in. So till the time the revenues don't come in, the pressure in terms of margins is expected to continue as well. And the anticipation is over 20% margin with regards to the security operations center business, and that is a tall ask right now. How achievable is that going to be, how sustainable that is going to be, and how fast that is going to come in is what we need to see. Very lastly, the device as a service is also a core, and that is an innovative offering that the company has. And in terms of their midterm roadmap, that actually includes expanding services beyond India. So they are looking to, look at other countries as well. So that export part of the business becomes important as well. And very lastly, that targeting APAC and Middle Eastern markets, and the timeline that they've given for these two markets is 3 years. So within 3 years, what will their export opportunity look like? How much will that contribute to their top line? How much will it aid margins? And profitability is the key from here on. Let's quickly look at all the ratings now. From the first 4, you have balance sheet and return ratios, which are a thumbs up. Income statement is neutral and cash flow is a negative. So that's a down one coming in there. If you look at the other set of ratings, again, 3 sideways, which is 3 neutral. Street cred, valuations and outlook is pretty neutral right now because they yet have to perform to get there. And your shareholding is a thumbs up only because your promoters have remained steady and the retail participation has increased. Overall, a 5 on 8 rating is what we've given Orient Technologies, which is still on the higher side. But what from here on? Joining us on the show to discuss more, we have Mr. Ajay Sawant, Chairman and Managing Director at Orient Technologies. Ajay, welcome to the show and a pleasure to speak to you at NDTV Profit. My first question coming to you is, since listing to now, a lot of metrics where we've seen ups and downs that have come in. My first question is in terms of FY26. Now, your revenue expectation to match the order book is around 414 odd crores. Is that what you're considering that will be the top line and what you're targeting, or is there a possibility that could overshoot?
So, first of all, thank you.